Give me 1 second, please, everybody. Good morning, everyone. Links sent. All right. The market is showing super bearish at market open. It's actually unbelievable. Max 7 trades splinters as AI winners pull away heading into 2020.
All year for the Mag 7 collectively. The CNBC index that tracks those mega cap names up more than 25%. But as Mackenzie Sagalis reports, there's a growing disparity between
Good morning, everyone. This is BESTSPY live trading. Today is December 29, 2025. The news we have is S&P 500 futures decline as investors take profit on tech stocks into the final stretch of 2025.
Amazon just 5.5%, with the market now differentiating based on who can actually convert AI spend into margin and revenue.
IWM is in the 3/3 bearish cycle from the high of Monday, December 22nd to Monday, December 29th. We are pushing below the 0.5 Fibonacci. We'll see what happens. The MACD is barely turning bearish.
And
it is bearish on the 2 hour.
3 years as investors question the payoff timeline.
Please, we implore you to watch the market update video if you have not already. But
Cloud and Azure.
Tesla as well. Monday, December 22nd is 1/3. And now we are Monday, December 29th. This is the 3/3.
Keeps converging, which it is. Then distribution and monetization start to matter more than benchmark bragging rights.
Is at
that means that the laggard risk sits
about
squarely with heavy spenders who can't show clear returns. It
Friday's
also opens the door for names like Apple, up around 12% so far this year. It's largely sat out the AI
Let's also mark the 4 p.m. close on SPY, 690. Let's do a quick legal disclaimer, please.
That's a different kind of upside
A legal
story.
disclaimer, please consult your personal financial advisor before you make any decisions regarding your personal financial situation. I am not a financial advisor, and I do not recommend that you buy or sell any securities or investments. This video is for information and educational purposes only. The market is opening here in 3 minutes.
Now, Jeremy Siegel, Professor Emeritus of Finance at the University of Pennsylvania's Wharton
This is the
School
3/3
and Chief
on
Economist,
Tesla and IWM, and SPY and
Theory.
QQQ
Once
is
again,
starting
it's
the
good to see you. Happy New
1/3.
Year.
I'm most likely going to be more
Jeremy.
patient than not.
Thank you, Joe.
Been a
No
good
need for me to
time
be
pro
any
US
impatient.
economy
I
for the
took
past
profit
year.
on Tesla
Once
into
again,
Friday close, so
we're the best economy in the world.
Third and
best-
fourth
it'll
GDP
take a lot
numbers.
for me to
we're
play
just getting
up or down in the
the
3/3.
St. Louis Fed came out with a 3%
With a
estimate
cycle,
2 days
with
before
volume,
Christmas. Of course,
and
we had
setups and
plus
traps,
4% for the
I
third
need to see
quarter. And
first.
even with a
I need
negative
higher
first
time
quarter,
frames
that
to
would
convince me
make,
first on
2025
bigger things. I need to see how
faster growth than
SPX
the
opens.
last year of the Biden administration.
SPX has
even with
closed
all
at
the chaos with the,
6,930,
tariffs.
which was above the previous all-time high
that
breakout
is the
points, and
economic
now we need to
backdrop,
see where it
obviously,
opens.
but I was really referring to what 19%, 18. I don't know. We may hit 7,000 before the end of the
Good morning, everyone.
of the year.
Good morning,
It's
Tyler.
possible.
Good morning,
I'm not
Scott.
saying
Good
we
morning,
will.
Oscar. Wally, Chris, Francisco.
The third
Good
or
morning,
fourth really
David,
good
Zach,
year, third
Harry,
at least.
Melsworth. Good morning,
Yeah,
everybody in the
and
WhatsApp group.
next
Good morning,
year, I
Donna,
think,
Harry
I
Alfonso.
know it's been predicted for a long time
Good morning.
because the streak of the Mag 7 is really quite unprecedented. But next year,
Wow.
I think S&P, which is very weighted
Do they
towards,
push
of
it up
course,
on
the
this
tech and Mag 7, might be
Bullish
less than double digits.
MACD
5
since
to 10, still
920,
good.
920.
Then the
918,
non-Mag 7
924.
could be 10 to 15.
Does the higher
with a Mag 7
time frame
finally positive,
on
but
things. See, I wanted to see if IWM pushes up or something, but they are not on IWM. They are on Tesla.
But that would be a turnaround, certainly from the last 3 years. But
Now, I
still
basically
leading
wanted to see how the
to a
bottom
very
of the
good
boxes
market in
handle
2026
Tesla
with,
and
I think, a lot
IWM.
of good headwinds, good tailwinds pushing forward. We have bumps. We have 3 bumps in January. We have, of course, another
Bounce at
potential
pre-market at
government
920
shutdown. We have
930.
the Supreme Court perhaps going
Bears
to announce on
are
what it's decided on tariffs, and we have perhaps
this is the 3/3,
finally
right? SPX is
the
opening,
announcement
gap
from
down.
Donald Trump about who our next Fed chairman is going to be.
It's actually
These
below
are very important issues to get through.
Previous all-time highs.
In addition to what is GDP,
opening,
what our earnings, what
pretty
our
bearish
margins,
as well.
And we might all get those in
Breaking
January.
down the wedge.
So it might,
we talked about in the market update video.
The shutdown has to be either solved or extended in that month.
CNBC
And
says
the other
S&P
two
500
like
falls as
likely to
investors
be
take
announced.
blah,
So
blah, blah.
we need to get through some bumps, as I say. But if we can get through those successfully,
showing bearish news, bearish candle at market open.
Right. A lot of times the default.
Let's see if it's a range being created or range being extended.
For the S&P. We hear that a lot.
930.
Usually it either does a lot more or maybe even a down year. I don't know if people ever forecast a negative year. Can't remember the last time someone did that.
A few do. I mean, you know, when you take a real out of consensus
QQQ
forecast,
trying to be bearish. IWM
or you become a hero
bouncing.
and you can decide.
There's a gap at
Hey,
251
I'm going to shoot for the stars here.
on IWM.
So we do have a few
IWM is above the 0.5 Fibonacci now. Let's see what happens on IWM. This is the most important thing to watch. Tesla's dropping crazy. They're fighting.
Multiple
we all just talked about how 2 minutes ago Tesla was the one fighting up, IWM was the one not bouncing, and now IWM is flying and Tesla is rejecting.
Can do there? Double digits?
Huge confusion at market open.
I think
using small caps, using technologies. Nvidia, Oracle probably all doing the same shit as Tesla, I'm not going to lie. Wow, look at Tesla going crazy. This is the 3/3 and the cycle is going extended. I literally left on Friday. I left on Friday at market close, man. At fucking 359. At 475 and it's at 463 in one day. It's absolute. Oh my god. That's crazy, man. That's crazy. Tesla moves insane, huh? Look at this shit. 1/3, 2/3, 3/3 it up, and then now 1/3, 2/3, 3/3 since the same day on IWM.
So I'm not going to predict
December
that,
22nd.
it's going to last forever.
And this is the 3/3, and now we're seeing how the 3/3 plays. 3/3 is playing hard on IWM.
Calling this a bubble or saying this is,
the wind direction is now not north or south, but this is 930 algo range creating with the volume and MACD being bullish and the candle coming in trying to go north. 935 is here in 10 seconds though. Ooh. Alright, let's calm down for a couple of minutes while the market does its thing and sets up a cycle. But clearly there's some big ass game going on. There's some big game going on. Purple box still in play. We have a gap at 251 that we did not fill by cents. Tesla is. You gotta look at this in the 1 minute candle. That's absolutely bearish on Tesla. $10 down in 1 day is unbelievable. Wow. I guess they do overnight moves. I'm not going on short candles. Like, I need a big ass cycle. I need a cycle to trap. I need a cycle to form, and then wind direction to form, wind direction to try, wind direction to something. Because I can't just go off on candles. So, setup has already played out. Literally, setup has played out on IWM. Setup has played out on Tesla into today. Right, people that haven't really caught on got left out at the all-time high again. Right, so I mean, now that the setup has played, it's just I'm gonna chill out and let the setup form, let the setup do its thing, and then once the setup's there and the deductible times are there, that's when smart money deductible, wind directional, smart money institutional players do their thing. MACD is trying to be bullish into 935. They could just go off this, but I mean, yeah, I'm just saying what I'm talking about. It was hella bearish and now trying to push up. Look at how fucking crazy down we opened. Like this is like a 50-point drop, like a 45-point drop on SPX. That's like insane. And the VIX was crushed, right? And the market update video said the volatility index is crushed, and that means smart money institutional players could be taking advantage of it, right? And they already did. When? On Friday. Literally, they did into Thursday, and then they did into Wednesday, and then they did into Friday because half day. But look at that shit into 1 p.m. 1 p.m. extending 4, and then at 9:35. Wind direction is now north with an algo range on SPY and QQQ We will now go look at IWM. We will now go look at Tesla and other things if we need to. But right now, let's just pay attention on a few things. So if somebody's watching other things like the VIX or Nvidia and you want to say something that's really, really important or IWM, please feel free to in the chat below or in the YouTube chats. Thank you. But right now, market is evaluating the wind direction being north with the MACD being bullish and the algo range. So one hell of a downward push open and then now pushing up, trying off of 687 and we are at 688. So $1. 619 to 620. Okay, pushing up north, trying. IWM is gap filled. All right, this is now gap filled. No gap on IWM. Tesla is also bounce trying from a 935. All right, wind direction is north with the MACD and volume just going. I'm not chasing this shit, but they're going. Wind direction is north, and people that were super bearish off these candles are now getting a little bit of a treatment. I mean, I literally said in the WhatsApp group, I don't really play in the 3/3 unless some massive something happens. And literally, this is for people that have played on Thursday or Wednesday and Friday, and then now it's something happening. And the something is IWM. And the something is IWM. Why? This cycle, 1/3, 2/3, 3/3, is now creating a new cycle, trying to bounce already at Monday open. 940. The bulls are in control into 940 at the minimum. So I mean, it's up to the bulls to extend more or not at this point. So all the bears that are stuck at market open, I don't know what's going to happen here, but that is extreme bounce already, like right off market. That's an extreme super rip up. So wow. It is already flying. Like that is already flying. Unbelievable. Well, Tesla is at the purple box. IWM is forming a new cycle, 1/3, 2/3 off the 3/3, and now we're deciding what to do at the new roof. That's why, because they push out bearish news on CNBC at 9:10 in the morning, and then since 9:10 they go lower and lower, and then at 9:30 they release it on mobile, and then they're like, "Oh, the market, oh, technologies." Wow. And then they push it up for 5-10 minutes, creating a huge range up, and then the average, the most of the majority don't really know what cycle and how cycles are happening. So it's, you know what I mean, like based off news alone and based off candles, of course people are like feeling FOMO, and of course people are feeling, you know, I was honestly feeling that some people want to try long off this shit bearish news, some people want to keep going with the bearish news, but like because of that it's so dangerous right now, like in the 3/3, being in IWM to 3/3, Tesla being in the 3/3. So that's why I was saying, you know, the risk today is absolutely high because Monday too, with the short and trade week. So there needs to be volume, and there needs to be like cycle and setup. That is absolute volume from 9:30 into somewhere at 9:35. They were like, okay, let's go from 9:30 into at least 9:40, and then they 1/3, 2/3, 3/3 it up. So now we're evaluating the roof. This does not mean it's going to reject. There's no confirmation rejection here at all. There's no confirmation long here at all. The cycles are just creating at the OC, at the roof of the morning cycle. Right? The roof and the floor could break literally in an instant. Just cycles are creating. It's just best to. Why? Because there's so much momentum, so much volume in the morning. But that is the absolute most way. Broke the LOD on IWM and bounced it in a heartbeat from 250 to 251.5. in a heartbeat. How do I know this? Because we literally looked at the chart and then 2 minutes later it did the exact opposite. We were talking about how IWM and Tesla doing the exact opposite, and then we switched the chart and then they're exactly doing the exact opposite, just trapping. So that's just morning trap. Morning cycles happening crazy fast. This is just cycles are happening off the roof. This does not mean bearish. It's just pulling back because it got crazy overbought into 940. So maybe it touches VWAP and tries to bounce back or something, but QQQ. Look at this shit. IWM is wilding out right now. So best to watch IWM right now. The gap field, remember, the gap has been played. So 935 HOD on IWM. 930 LOD on IWM. I mean, you could do literally, you could do fucking anything here. Nobody knows. Tesla's bounce trying. QQQ looking strong because of Tesla. Really depends on how this IWM 1 minute gap plays out. But again, I'm not gonna switch like charts every single minute to see how it plays out. I'm gonna just let it do its thing. Just small cycles are creating with no cycle confirmation, basically. Good morning, everyone. Good morning, Kevin. Good morning, Syed. Good morning, Donna. Or I think I said good morning to everybody, but good morning, everybody. All right, good morning. Thank you so much for already hitting the like button as we came in. What are we doing on IWM? We got to look at the higher time frame. The higher time frame on IWM says that right now we are barcoding at the 0.5 Fibonacci. 0.5 Fibonacci of what? The 0.5 Fibonacci of the bottom of December 17th and the high of December 22nd. That's not a coincidence. This is setup, right? So let the candle traders do its thing. Let cycle form. Let confirmations form with the volume, with the candles, and then the smart money, and then the institutional players, and then deductible moments will happen. It's not that, it's not that, you know what I mean? The market is fair to patient folks. And patience meaning patient with the ability to let them form cycles, let them do things, and then when you think the moment is something, then maybe it's a logical thing to be like, oh, there's an algo range happening here. It's a logical thing to be like, oh, now cycles forming. Now, but candles alone, no soup. No soup. This is some sort of setup here. I would not think anything's happening unless the roof breaks off or unless the floor breaks off on the 5 or 15 minute candle with the volume coming and then just ripping up or ripping down. They could do whatever here. I have no care. They're creating a cycle. That's what I care about. The cycle is what I'm trying to say. The candles, what they're about to show me in the next 2-3 minutes, I have no care for. But what they form, the higher time frame with other things, yes, I absolutely care about that. They're creating an algo range at the roof at 940 on QQQ and SPX, not just QQQ, right below the roof. I still haven't done shit. I'm just watching right now. I left all my Tesla heavy puts into this Friday, last Friday. I think I would have put it fucking hefty, but like I don't know. I mean, this shit could have reverted absolutely if they're crazy enough, and then did this shit on Monday or Tuesday. I mean Tuesday or Wednesday. So I just didn't want to take the risk, but I mean here we are. They set the all-time high again, and then they're pulling back already. This is a 945 rejection on IWM. We need to see what happens here. 945. No, this is a 940 rejection. So algo range happening on IWM as well. Not really bearish, not really bullish, just bullshitting. At the middle, at the 0.5 Fibonacci on IWM. Not bullish, not bearish yet, market deciding. 945 is breaking the 940 algo range, trying. I don't want to draw too many things, but there is an algo range at the roof on SPY. Just leave a mental note on that, and we will see what happens here. We are at 688. That's literally market moved about $1.50. Not even that much. It's actually a beautiful start. Someone said, "Good morning and welcome to the machine." Welcome to machine. What does that mean? Good morning, everyone. I hope you all had a beautiful, beautiful weekend, and hope you all enjoyed the warm, freezing, whatever whatever weather you had in your. Oh my gosh, candle coming bearish. 9:45. Wind direction is they're pushing south right now. Bears are trying, but there's no confirmation. They could floor test and then bounce crazy here. It looks bearish though. I ain't gonna lie. Trying bearish. Tiny confirmation. Tiny confirmation. Why? Because 940 algo range broke down into 945. So 940 algo ranging break down into 945. 945 could bounce somewhere here. 945 is 945. 9:46 a.m. 947 is 950. So they made an algo range at 940 and then they broke it downward. Let's see. They're destroying all the calls that were hoping on the gap fill. That does not mean this is full on bearish. They could even bounce it at the floor or break the floor and then bounce it too. And then go to the gap fill. Why? Gaps are very, very strong. So I think there was a moment for like 35, 40 seconds when that candle broke to be like, oh, that's a confirmation rejection at that candle. But like I didn't want to even fucking think about it, nor did I really wasn't paying attention because I was talking about things. So it happened mad fast. It's already happening mad fast. So get this right on. QQQ. This is the floor bounce trying to it. This is literally not a confirmation anymore. It was a confirmation from 940 into somewhere 945, but like the candle's already bounced trying at the floor. I mean, maybe it could go one more candle to literally sense, but sorry, this is a 9. Yeah, the 945 is bouncing to 950 now. We are near. It's crazy. Let's see the news they're saying.
This year, the KBW Bank Index is up 32%.
Regional banks. All right, let's see what happens to the regional banks in 2 to 3 weeks. Right, 2 months with the news that they're saying. They're saying we see opportunities in regional banks, says CNBC. It's just a video online. I just want to see what happens in 2 to 3 months based on them saying this. So
this year,
somebody leave a note on that.
8% this year. Morgan Stanley.
There was like 2 months ago, there was a scare on regional banks. I remember KRE or something like that.
You think they're expensive.
Everybody was watching for that one day.
In 2026. So what do you do in that scenario?
This is not bearish or not bullish. This is just cycle trading.
Do you say,
getting bears involved, like insane. Bulls are trapped. So
and see what happens.
bulls trapped, bears trapped. They're getting cooking.
There's a few ways that we can play this. Well, first off, I think we just step back and why are the stocks up so much? So
IWM rejecting, Tesla bouncing.
Better in 2026. With capital markets still gaining momentum.
I'm going to do one tiny SPX put.
Backdrop is getting better. And then deregulation and just the ability for banks to really utilize capital and generate better returns on that capital. And so I think those are trends that started in
one tiny SPX put for
those continue.
1 point.
Then, the big piece that we're talking
about $1,290.
Rotation and technicals. ETFs in financials saw about $30 billion of inflows last year, and we think that continues into 2026. So that's kind of the marginal buyer here, and that's why Goldman's trading
floors
6
testing
turns above historical levels on PE on 2026. Morgan Stanley's 5 turns above. So we think that
this is already the 3/3 in small cycle, but I mean, if they break the floor, I'm already out with a couple of.
Is only accelerating. So we'd probably stay in some of these names, but then there's other.
Barely any. I'm up $45 right now. If they break LOD, I'm gonna leave with $150 maybe. But honestly, this is the 3/3 already from 940 into 950. They can bounce this shit and trap here big.
What do you think can ultimately derail
if they do, if they come to this algo range, I'm already leaving. But I mean, I'm in one. So
the continuation of this theme. I mean, outside of
we'll see.
The macro picture, which obviously that.
Ooh, Chris says Trump is live with Zelensky right now. Thank you so much. Thank you so much, Chris. Everybody say W in chat for Chris. We really need to watch the. Are you sure? Are you sure? They are meeting or something soon, but well, maybe. Yeah, I'm getting distracted. Hold up. 950 bounce is already trying off the floor here. Yo, what a way to open. Tesla rejecting, IWM bouncing off the floor at 950. The theta gaming it crazy already at market open. I mean, it's literally not moving. Not really liking this bounce on SPY either. Wow, look at QQQ being crazy bearish now. What the fuck is going on? IWM rejecting. I don't think Trump is live, man. I think they met yesterday. You know what's weird? You know how we used to have presidential live streams every single day? We don't have them anymore. Like, zero. Does anyone else notice that? Does anyone else find that shit weird as fuck? It's pretty weird. Fox. Okay, we're going to look at Fox. Fox what? Floor is testing here. And oh, Trump meets with Netanyahu. You're right.
This is heading into the question and answer portion of the press conference. So what we're going to do is
I think this is
step
talking
away
about
for
from
our
yesterday,
final
though.
commercial break. We'll play out the remaining.
Yeah, this has to be from yesterday. This is the true floor test. I was literally looking away my screen for a second and I couldn't get that floor, but it is the floor test. I actually went up. Man, what the fuck? This is too dangerous now. So many bears just, there's laddering down, but wow, what is this now? Tesla going lower. Man, maybe I should just fucking go back to Tesla. Fuck. God damn. Tesla crazy. I'm feeling FOMO on Tesla. I'm feeling FOMO on Tesla. I'm not gonna lie. They already went crazy though. Like, oh my god. There's some very, very weird algo range happening at 950. It's an insane way to build liquidity. Now bears are getting trapped crazy. Ooh. That's a crazy way to build liquidity here. 950 bounce, 950 rejection, 950 bounce, triple algo range into 955. And 955 is QQQ is just 950 rejection. No, 950 bounce, 950 rejection, 950 bounce into 955. It's crazy right now. It is absolute. These candles are coming in like absolutely wild. It's building liquidity now at the floor. Oh. It's looking pretty fucking trappy, dude. They want to go south. Yeah, this shit's not live. They're just recapping yesterday. I mean, they could go lower here. It looks a little bit trapped. But if they break LOD, I'm fucking out. Like, I'm not staying. I should probably leave right now, to be honest. I'm at break even. Like, this is not even going anywhere. Data fucking gaming. Trump meets with Netanyahu at 1 p.m. Apparently.
The Magnificent Seven stocks no longer trading as a monolith, and the gap, well, it could widen in 2026. Mackenzie Sagalis joins us now, and she will explain. Mackenzie.
Hey, David. So there's roughly a 60-point spread in the Mag 7 year to date, with Alphabet leading the pack and Amazon in last place.
If IWM breaks the LOD, SPY will go.
It's now
Tesla going
companies
lower.
That show monetization.
I'm gonna get one put on Tesla. I feel FOMO as fuck right now, so honestly,
because it owns the
I'm gonna get one put on
AI
Tesla.
chips, cloud
I missed out the fucking overnight drop, but I'm doing one.
Bringing chip design in-house is margin defense in a world
$980 on Tesla now.
You can see it in the results. Google Cloud grew 34% last quarter, with margins now near 24%.
This shit reverts up, I'm fucking leaving, but I'm not fucking missing this shit.
This year because the AI capex wave is still landing on Nvidia silicon, with Blackwell ramping and capacity effectively spoken for. Now, at the other end of the scoreboard, Amazon is at the bottom of the pack. It's been betting on its in-house Trainium AI chip to win on cost, but AWS revenue is only just reaccelerating. It's still trailing Azure and Google Cloud on growth rates and behind Microsoft on backlog, without a must-use model or consumer AI product pooling workloads onto its stack. Now, Meta also in the laggard bucket. It had its biggest single-day drop in 3 years after raising its capex outlook. But without a cloud business to monetize that spend directly, the AI payoff story is mostly about improved ad performance.
Yeah, they're saying
and then there's Apple
Google
sitting out the arms race entirely.
Now they're
but if models converge on quality, it's distribution that wins.
I think if Tesla pulls back, there's nothing stopping the market. If Tesla pulls back, there's nothing stopping the market, because Tesla and IWM is literally leading right
Look
now.
beyond the Mag 7. Some of the
Tesla is the one down 2% right now, doing 2.6%, 2.74% right now.
Western Digital
and Nvidia is only down 1%. I think it's Tesla today.
Yeah, we've mentioned the divergence and the fact, frankly, as you pointed out, Mackenzie, that Apple and Meta, obviously Amazon as well, Microsoft, all trading below the return of the S&P this year. So, as you've indicated as well, and so it may continue next year. We'll see.
Yeah, Tesla does have a gap down, and I'm pretty sure it did gap fill.
And Alphabet, wow, that stock has been incredible.
Did not.
It really has. Off the back of its in-house chip program, the TPU has a really strong reputation versus names like Trainium, the Amazon in-house chip.
NAM is bounce strong on IWM. This is the ultimate floor bounce.
Contracts, which is why you're seeing new business go into Google Cloud. The other thing I'll say about Meta, it's a very interesting story there. They are spending in the range of what Google and Amazon are paying, but they don't have a cloud business to justify that spend. So a lot of that coming back to what they're able to do with ad optimization. Llama, their LLM, not as popular as Gemini. Another win there for Google, part of why it's done so well this year. Gemini's at the top of the scoreboard.
Yeah. Now you hit it all, of course. Yeah, that meta thing is fascinating. Again, key being the spend is so similar and yet no cloud business to amortize it over. Mackenzie, thank you.
I'm out of 6, 9, 10 for $1,400. I'm still in Tesla. Man, look at Tesla go. Come on, baby. Just roll her down on Tesla slowly. Look, IWM. This is the 0.5 Fibonacci. And we literally said, watch what happens in the 5 and the 15 minute, right? I did not have time to switch candles and do all that shit. But mentally, I was thinking about it as they were on Tesla. IWM together into 10 a.m. Time is 10 a.m. and 10 a.m. is bounce trying here. Holy shit. What a perfect fucking exit. This is not the floor breaking. Not the floor breaking. LOD did not break. This is the ultimate floor test bounce or whatever you want to call it. This is 1/3, 2/3, 3/3 cooking now too. Every single bounce could trap everybody in the 3/3. Every single bounce, but they bounce rejected, bounce rejected, bounce rejected, bounce rejected at the triple algo range that I did not draw. So, man, what the let's see. If IWM breaks the floor, all this shit's a fucking trap somehow. If Tesla bounces, different story. And that was a great LOD test. It really looked like it was going to break LOD, but I'm not taking the fucking risk. I am quick scalped out. Oh my god. $10 a.m. bounce, 10 a.m. rejection trying, no confirmation, rejection or long. Just cycles are just doing. Futures grinding lower from the HOD at 9:40 into 10 a.m. So 20 minutes here now. We have 131 people here. Thank you all for being here. I hope you all had a beautiful, beautiful week. And please hit the like button on the live stream so we can get the algorithms going for the new people coming in. Please, thank you so much. God bless you all. We are now watching the opening bell today.
By the way, doing the honors here at the big board, Third Street Music School Settlement, a community music school in New York City. Over at the NASDAQ,
IWM is pushing lower. IWM broke the floor. This is bearish. Right, they want to go lower. They're going to go test the LOD. If they go on the 5-minute here on IWM, now that they broke it, if the volume comes and if the candles stack in the 5 and 15-minute, they're going to go lower and test the floor. IWM broke the floor barely, Chris says. Yeah, that's a good thing to note.
Talks from President Trump over the weekend. Also, maybe some bullish comments from China, from their finance ministry on the possibility for stimulus. I mean, we are watching these commodities, whether it's oil or
market's still green for the day. We are on SPY and QQQ. We did not break the LOD.
It's been phenomenal.
We just went higher into 940
the
and then pushed lower
energy
since.
Stocks is a part of this sell leaders by laggards.
There's a lot of bears here.
Have at the very end of the year, so maybe that
just
could be
just like there were a lot of bulls at 940
in
too.
addition to firmer action in
there were a lot of bulls and bears at 930 into 940, and they're basically cooking it all almost. They're literally cooking it all from 930-ish. New money from 940 did good into 10, I guess. New money did good from 930 into 940, sure, in their own way, yes, but gotta think about the macro picture here. What the majority of the people in the world are doing, the majority of the people in the world are doing shit at market open. Bullish or bearish based on just no setup candles alone. So not even before the candles come. First minute candle, second minute candle. It doesn't even matter if it's red or green or no color. It's gonna literally just, both sides are gonna think everything. So That's what they mean by cycles are creating. Things are forming. IWM. Bouncing at the 0.618. Tesla. Heading lower. I am adding into Tesla here. I'm going to get one more. Risk is a little bit there, but I'm in now 2K. And I'm going to switch this chart. I don't want to break my computer, so I can't switch my chart actually. I'm in 2 on Tesla now, and nothing on SPX. IWM wants to go lower on the 5-minute, maybe. Tesla is already gone. Where are they going? Most likely they're gonna go to 450 somewhere first and then figure it out. But there's a lot of fucking room on Tesla, like a lot of fucking room. So if they want to keep IWM going, market going, all right, wind direction is now south. LOD about to break. Wind is showing south now with bulls trapped. And the morning cycle bears are barely coming out of profit from 9:30. I'm talking about the morning cycle bears from 9:30 into 9:31. So now that they broke the floor, we'll see what happens. But IWM is going on the 5-minute. Tesla is going on the 5-minute. Let's see if it's really real off the 5-minute. 15-minute bear. We were at the 0.5 all morning. Then 30 minutes later, we are now somewhere losing. We're going south on IWM. I mean, wind direction south. All right. LOD breaking. Time is 10:10. This is the 3/3 bearish cycle. I expect a bounce here, but I am still in on Tesla. I am not in on SPX, but I expect a bounce. Why? Because I don't expect a bounce, but I mean, there's a gap up there, so I don't know. LOD just broke. Even if they want to go lower, I expect the cycle at the minimum to maybe or not. QQQ did not break the floor. IWM is bouncing. New floor is already bouncing, trying in 1 minute. Candle is being squished the fuck down. IWM is scary as hell right now. I'm not gonna lie. That's terrifying as fuck to see. As a bear. If I was a bear in IWM. Tesla looking nice as fuck for me. IWM looking terrifying. It's looking more and more poppy at the 0.618 now. So 0.618, I don't know, man. It could do something. Not that I go off of fucking Fibonacci's alone, but I mean, it clearly hovered at the 0.5 in the morning, so. I think we gotta draw the LOD and the HOD as well. Oh my god, look at where we are. We are at 6,900 on SPX, exactly. 6,900 on SPX is the previous all-time high breakout point, almost, or the gap fill that we gap filled here. Tesla is now at 2.77%. Let's see if it reaches 3%. 2.82% now. It's going. Tesla going. Tesla going. Tesla going. Tesla go. 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 Tesla go. Tesla go. Damn. Come on. I want Tesla go. Slow. Wow, this is the 1/3, 2/3 on SPY starting. It just started. What are we talking about? 1/3, 2/3 SPY just started? Literally, it just started. Right? IWM Tesla already went. SPY and QQQ just started. The what? 1/3, 2/3. We said that in the WhatsApp group in the morning pre-market, right? We said, hey, the market is now, right? IWM and Tesla is in the 3/3, deciding what to do. And now SPY and QQQ is in the beginning of the 1/3. And that's what they're showing. I mean, that's what they're showing does not mean, you know, it's gonna go more, but I'm just saying they could trap off this shit too. It's just literally what they did. What they did into 10-10. I just don't like how it's laddering down. I mean, any single pop could be real. Any single pop. It's just the question is how and where. And with the cycle confirmation, the LOD divergence is there. The floor did not break on QQQ. There's an LOD divergence. They want to break the floor. All right, LOD is clearing.
All right, well, 2026 is set to be a major year for the Fed. Some unanswered questions about monetary policy, future leadership, as we mentioned. Joining us now to talk about all of this and the economic outlook for next year is Claudia Sahm, a former Fed economist and chief economist at New Century Advisors. Claudia, it's great to have you as we
Let's do a poll, guys. Who is full on bearish today? And who thinks a bounce is going to come? This is our first poll of the day. Everybody, please just vote what you think. We don't even care. Candles on based on whatever the fuck. Candles on what cycles doesn't even matter. Just literally just type what you think. Market sentiment. Let's see. Who is super bearish today? Who thinks a bounce is coming soon, man? This is looking crazy bearish. Like what the fuck?
We've seen the Fed, lower interest rates.
It's looking crazy dangerous. It's looking crazy dangerously bearish. Like what the fuck is this shit?
Stimulus coming on.
It has to be agreed.
With tax cuts for households and for businesses. So this will get I think, some more clarity early in the year.
I am not chasing this shit at all. This is the 3/3. There's no way in hell I play this.
And that is critical for this being sustained.
I mean, I'm playing in Tesla
like,
the 3/3, but I mean,
of really outsized GDP growth.
This shit get
really
reverted on easy. I just think they're crazy as fuck.
The consumer obviously important, but we were just talking about how your belief on AI is imperative to how you see the market next year.
50-50 is fucking literally.
I mean, in the GDP report last week,
I think it's the best to be like that. Most patient, 50-50, not biased, not bullish, not bearish, and then just let the cycle do its thing, and then you can make a little deduction into the next, you know what I mean, and then be it's fucking dangerous shit.
Well, and I mean, in terms of the lift
going lower and lower and lower.
It was even larger in the first half of the year. So yes, the investments.
Well, you got to imagine this shit on the 5-minute candle here too. IWM is stacking lower right now.
The physical investment is kind of the gift that keeps on giving lower and lower. So we'll see what happens because you get both the investment at the time that boosts GDP, but the real payoff here is the ability to move the needle on productivity. And we have seen in this cycle productivity growth is higher than the prior cycle. But I mean, we are at the very front end of AI. Now, I will say, like, I think there's reason to be optimistic.
I would like a bounce before anything, but like it's just so damn bearish.
Say the next year, but we're talking about a 5-year, 10-year in terms of productivity. It is really, really hard to eke out even quarter percentage point growth in productivity gains. So we'll see.
Well, yeah, the we'll see is important, though, Claudia. I mean, we're all trying to figure it out over this next year, or as you say, even years to come. What are you
Look at the wind direction breaking the floor on QQQ. Now the wind direction divergence is cleared, guys, into 10-15. There is no divergence at the floor anymore. The divergence is cleared at the LOD. Wind direction is now south.
To see the use cases, and frankly, the aggregate statistics are not the first place that the productivity gains are going to show up, right? I mean,
whether that's real or not, whether that's temporary or not, I have no idea. But it went from 940 into 1014, meaning they went for.
There's some really great survey work that like Census is doing on and talking to businesses, like really
35 minutes, right?
the adoption rates and how that's spreading across different sectors. So it's not one where I think, we may get big, GDP numbers from quarter to quarter, but tying
There's a
that back to
divergence
AI
at the floor, and they're bouncing right now.
productivity gains, that's just
Bulls
going to
are
be really tough. And I
maybe
will, point out that going into
with the
next year, we
RSI
are still
trying to
going to
flip
have a very
up
disrupted
from
data
being in the negative
environment
territory, but
for
I
our
mean, it's just a
aggregate
spike
statistics.
candle.
So, we're having a hard
There's
time
a
catching
divergence
up on
at the
just what's
floor.
happened in the economy in the last 3 months, let alone fundamental shifts under the hood in terms of productivity.
Tesla's actually bouncing pretty hard here.
Yeah, that's a good question. It is unusual, when we saw the unemployment rate really started moving up pretty steadily in the summer, and that lines up exactly with a period where we saw consumer spending third quarter
with
growth
the divergence
really,
at the floor.
topping the
now
charts.
they're starting
and
to cycle.
That is not typical to see those two line up. Of course, timing is always pretty tough. Now, I will, one special factor that is at play this year is we have had a pretty substantial downsizing of the federal government. It is not enough. The layoffs in the federal government, or the downsizing, which is almost about 300,000 less in employment, which has happened very rapidly.
They just broke the floor,
so
so
near enough to explain the increase in
it's
unemployment.
a little
We're
bit
almost
risky for
close
me
to
to
adding
say
1 million
there's a
people to that
confirmation
employment
long
rolls,
here. It's just
but it is
oversold,
a policy decision. It's
overbought,
not a cyclical weakening.
coming
Usually,
back on
when we look at
QQQ.
these small increases in the unemployment rate as being, bad news, it's because it's the start of a cycle that's gaining speed, and that's really talking about a business cycle. That's not talking about a policy decision to change the size of the federal government.
This morning cycle is kind of nice, though.
Those reductions in force have taken place. So I think we're kind of adding some extra noise to it. I'm not as concerned about it yet, but it is absolutely something to be watching.
The previous LOD turned into resistance and or support is what's going on here as well. We're going to draw that later. Tesla, previous low of the day, turned into resistance and or support. Every one of them is being tested right now as well. SPY, previous low of the day, turned into resistance and or support, is being used right now at 9:30 as well. So algo range at 9:30 being used, and there's a previous low of the day here. I think this is algo ranging. 9:30, 9:30. Time is 10:15. Sorry, time is 10:20 now. And there's an algo range here on QQQ as well. Morning open algo range 9:30. That's probably very important. It's probably not something small. So we'll see what happens here in QQQ, IWM as well, and Tesla. Keep up to date with how the cycles are forming and what smart money institutional deductors are doing with the cycle and time confirmation. And if you are here for the first time, please hit the like and subscribe button on the channel, and thank you very, very much. Right, what we do on this live stream is find the real direction, the trend direction, using cyclical analysis, time confirmation, fundamental analysis, and smart money institutional deductions and setups to find the real direction. No matter what the market's doing, whether it is all-time high going fucking crazy bullish, or whether it's all-time fucking going crazy bearish, or whatever the fuck it is, right? All that really matters is cycle confirmation and setups on bigger things like Tesla, IWM, Nvidia. So God bless whatever the hell they're doing. I'm okay with it. You got to understand what they're doing, right? Just zoom out and just look at the higher chart, right? Whatever the fuck they're doing. This is just a smaller puzzle in between it all. Smaller puzzle in it all. If all you gotta just do is have a patient, calm attitude about it, let the chart and the cycle do whatever the fuck it wants and create whatever it wants and trap whoever it wants and form whatever it wants and data game and eat whatever the fuck it wants to eat. And then once it does all that, and once you're okay with that, whether it's bullish or bearish, and you have no permanent bias towards anything, bullish or bearish, no matter what they're feeding in the news or whatever the hell the candle's feeding, as long as you have an understanding of who you are as a man and a woman, everything's going to be okay, is what I'm trying to say. In the market, why? Because the market, right? The market, it like, I don't even know, like it succeeds, successes, or whatever the fuck, it feeds the positive, confident deductors. You know what I mean? Like it is. There are times when it's super confusing, yes. But I'm saying most of the times, not most of the times, but most important times, while it matters if you pay attention enough, right? You will most likely be able to see some sort of something forming. This I don't know. I have no idea. I don't really play in the pivot point trading, right? They just set the floor at 10.10. From my point of view, I would say bears are stuck and all going to be burnt until 10.10 breaks. I don't want to even think about going short here. I don't even want to think about going long here because there's not enough volume. I'm not gonna lie. That's my personal opinion. It's not even in bullish territory. The RSI is in bearish territory coming up. If this shit was in bullish territory and the MACD and RSI was crazy bullish right now, maybe. But I mean, I'm literally going against myself on Tesla, so I can't then. So, IWM. What is this shit at? 0.618. That's so weird. SPY bouncing more than IWM here. QQQ2.
Documents recommendations.
Trump meets with. What is this live stream? Netanyahu at 1. Okay. Saying expect low trading volume to this week. But we had low trading volume last week.
Guest to help us break down markets, and that's Kevin Green, senior markets correspondent here. KG, little holiday shortened week last week. We were pretty strong.
I think we have to draw these algo ranges, guys. It's being
S&P
played
500 up over 1% on light trading, to say the least at this point. What are your expectations here going into the final week of the year?
I would expect light trading once again, Tom. I mean, this is kind of the season where low volume, low liquidity markets can actually push prices even higher or even lower for that matter. It just kind of depends on the direction, and it doesn't take that much size in order to do so. Now, last week, we obviously had a pretty decent week. The economic data was better than the street's expectations. And this week, we're a little bit light when it comes to economic data.
You guys tell me if it's sick or not.
We will get the Fed meeting minutes, and we will have PMI data coming out on Friday. But once again, I think this is going to be a very low volume week. And let's see if the market can continue to try to move higher here and potentially get to that 7,000 level. I think you got to keep your eye out on the VIX, though. The VIX did close at around 13.6.
Looks pretty crazy, but I mean, that's literally what's going on.
Very low print when you're looking at the VIX historically, as well as what we've seen over the last year or so. This morning, we're seeing it re-rate a little bit higher. I think that's actually a positive sign. And if we can get the VIX up to around 15.5
like the
or
bulls
even
are
16,
trying.
I think that actually bodes well for the equity markets over the next
more
couple
bullish
of
than
trading
that
sessions.
now.
Maybe it does kind of pull pull us back for today, but I think it would be a little bit more healthy for us to have a little bit higher implied volatility than what's being priced in.
RSI is
that VIX up 9%. That might be that Friday, Monday VIX thing where typically VIX is lower on Friday to the end of the week and then starts to bounce a little bit. But then again, weakness in the overall equity market here to kick off this holiday shortened week. Also, KG, if you take a look at, what's going on in the overall markets, maybe some geopolitical tensions out there. But President Trump had an over 2-hour call with Putin from Russia. He's also talked with Zelensky out of Ukraine. We're starting to see some cracking of the ice here as far as maybe a negotiated deal here. Nothing is confirmed yet at this point, but it seems like they're making progress. But, it's not really providing any lift to a potential Santa Claus rally.
3/3 from 10.
Yeah, I would agree. And look, I mean, this is the 30th to 40th time that we've seen this sound, right? So I think the market really wants to see ink to paper here in order to get a deal done. And there's still some very big hurdles, especially when you're looking at the Ukraine potentially giving up some land, especially the Donbass region. That has been a big negative for them. But obviously, Russia appears that they do want to take over that particular region. And then also,
is this low volume though?
It is being reported that President Zelensky asked for up to 50 years of a security.
It looks like they're fighting crazy, honestly.
Kind of up from that 15-year framework that's kind of been priced in, at least at this point in time here.
The 1 hour
volume. There are some major hurdles. And then also you're going to need to have the European partners really kind of sign off on this. It's actually a bigger risk for the EU than it is for the United States. And it seems like that's how President Trump is
Wednesday was
playing
low
his
volume
hand here. So we'll see how this actually does progress. If you're looking at the attacks, they're still getting fairly aggressive on both fronts. We have Ukraine continuing to hit Russia refineries and oil infrastructure, and then Russia did actually launch a major salvo into Kiev about a day ago, 2 days ago. So the tensions
divergence
are not
exists at the floor.
Looking at the battlefield,
right? They're showing that it's dangerous for
to fruition
medium
when it comes
term,
to a potential deal in the long term. Also, last but not least, is the ceasefire. Ukraine and the European Union wants to see a 60-day ceasefire in order to have a referendum. But it seems like
honest, that's
Russia,
my personal
as well as the United States is really kind of
what's going on right now. It's scaring the shit out of me.
So some major hurdles here. You are seeing oil kind of move a little bit more to the upside here.
And
I don't even think, though, Tom, if we do have a deal, that the market's going to rally off of that if you're looking at the equity markets. I mean, we had this situation kind of being priced in or being baked in for the markets for the last 3 years, 4 years or so. And it seems like we're kind of used to the status quo. So overall, seeing some movement in the energy markets as well as the metal markets, maybe on this news, but nothing on the equity front that really suggests that this is going to provide some bullish optimism.
Yeah, you take a look at that crude oil bounce here, up about 2%. Immediately you start hearing, maybe a potential ceasefire, maybe some sort of deal, KG. You got oil bouncing. Is this due to the fact that maybe this has already been priced into the crude oil? We're kind of pinballing between about 55 and 60 a barrel at this point. And geopolitical tensions like this are going to continue in the long run. And you mentioned it. Russia hit Ukraine immediately after these positive talks. So maybe crude oil kind of maybe diverting from what's going on as far as the talks go, right?
Yeah, look, buy the rumor, sell the news. I think the market's also pricing in that we will get some crude oil inventory numbers that can come in at a lot lower than the street's expectations, even potentially a draw of 2 million barrels for last week. And I think the market's pricing that in. Geopolitical risk, obviously, we are seeing here is a lot of times you do see
something
oil
going on here at the triple algo range,
and then it does re-rate a little bit higher. You also have some other items on the horizon from a geopolitical risk standpoint as well. We had Saudi Arabia striking Yemen. That could also put some oil infrastructure at risk. And then last but not least, which we'll probably talk about this a little bit more over the next couple of days, you do have China also exercising or doing one of its biggest military exercises around Taiwan, live fire drills, things of that nature. Taiwan's also at a high alert status right now.
We have
so
POC
there's
here
still
as well.
a lot on the horizon here when you're looking at geopolitical risk. We also have the
IWM is hovering at the floor.
Situation kind of taking place, and the market might have been a little bit oversold. Right now, if you're kind of looking at it, the trend is still to the downside here. The market's still concerned about supply risk as far as oversupply, and that's probably why we continue to see the primary trend in the downside, even though we do have these little bumps along the way higher, maybe some short covering activity, maybe some.
I want to go lower on IWM. Tesla flying up.
Yeah, that testing that they're doing around the island of Taiwan, the biggest, and this comes after some sales of defense equipment to Taiwan recently. So maybe that geopolitical risk lending some support. Let's get over to the big winner in 2025 so far, and that's in the
Let's see
commodity
what happens
space
here on the
KG. We've got a pullback of about 1.5%.
Nothing could happen here too. It could
Silver
chop.
hit another
It could
record
go up and
overnight,
then come
but
back and chop. It could go down and come back and chop.
Is this all profit taking
0.5
KG
Fibonacci.
because the moves have been maybe unsustainable?
Yeah, well, this is just par for the course. So if you're a
wants to go
commodity
lower.
trader, especially in the
Tesla
metal
is
space,
deciding
it's
whether
nothing
to go
for
higher
silver
or
to
not.
move 5%,
Tesla
even
fucking
7% in one trading session, especially when you're at this high of an implied volatility here. You are seeing that spike overnight, or you saw that spike overnight. A lot of this is actually coming from China. There's risk that China is not going to export silver or finish silver in 2026. That has been kind of the rumor that's hit the market here. The market has been kind of bidding that up. And then there are some excessive redemptions.
I would still stay until the low at 10-10 breaks. I can't even think about going short because they could extend the cycle higher and higher and higher by 5-10 minutes. They can go a little bit lower and come back up and fucking be like, oh, never mind. So I just don't do shit until
a lot of positive
momentum, until cycle, until traps, until confirmation tells me something else is forming and this happened and something else is happening instead of just.
Financial's been a standout this year.
I go repeat myself. You all understand.
Backdrop, of course,
Thank you.
has been favorable.
People have seen what I've typed in the WhatsApp group before I literally came on. So thank you all for watching the market update video too, man.
You've been bullish all year. It's been the right call. What do you think
kind of been helpful
too?
David, thank you, and thank you for having me on the program. The outlook remains real positive. The trends that we saw developing
amazing.
2025
they want to go lower.
To continue
IWM is breaking the floor.
Especially
SPX is
when
going
you think about
lower,
the yield curve, David, the steepening of the curve is very positive for
banks. We are now in a downward trend. Trying.
I'm
not saying we are in a downward trend, but we are trying.
Now and June,
Tesla is bouncing.
That's going to be added fuel for the bank stocks, we think,
so
particularly the
still
regional
fucking
stocks
strong.
in 2026.
SPY is slowly rejection.
The regulatory side can be a bit harder to measure, but certainly it does seem as though there is more room, so to speak. Wells Fargo obviously has been a beneficiary in terms of the asset cap coming off, but more generally speaking, how do you sort of define the regulatory environment and how favorable is it right now for the banks?
David, you really put your thumb on a critical issue for the banks, which is the regulatory environment.
Looking bullish on QQQ, looking bearish on IWM.
The prior administration to the current set of regulators. We've never seen it.
I think I got a little bit impatient on Tesla.
The biggest change is
Tyler says crazy bounce on Tesla. Damn, yeah, literally.
Which is the big
proposal. I think I did get a little bit impatient on Tesla. The thing could hover here or it could bounce even to 467.
That the regulators have brought forth already, they are very constructive and supportive of the banking industry. And if the Basel III Endgame proposal comes in as supportive as what we've seen so far for the other regulations that they've put forth, then you should see profitability for the group to grow, which is very positive for valuations.
What does that mean for the regionals in particular, or the super regionals, which haven't performed as well as some of the bulge bracket
dangerous
money market groups like the Citi groups and Goldman Sachs, which have done better than the regionals? Do they have their catch up in 26?
Sarah, good point. And the money centers and the investment banks have done extraordinarily well this year due to the strength of the capital markets, particularly the mergers and acquisitions. The advisory business has been remarkably strong. I think this year might go down as the second best year behind 2021. And so the regionals, we think, will catch up to the big banks in 2026 because of what I referenced a moment ago, which is the steepening of the yield curve. That will lead to better spreads, and the regional banks generate a greater percentage of revenue from net interest income, which should give them a leg up. Now, all the banks will benefit, but maybe the regionals more.
A couple of minutes
loan
scalp,
growth, I think
things
what
are not
you're going
aligning.
to find in
it's very hard.
2026 is the banks now will get back to lending
until they align
more aggressively. And you could see loan growth surprise to the upside, particularly on C&I, commercial and industrial loans, as well as commercial real estate. Remember, the banks have been shrinking the commercial real estate portfolios.
And now they're trying to show that they're going to line up north.
2026.
Right. IWM at the floor. Tesla looking crazy strong out of nowhere. And SPX is flipping the trend line that it just rejected from. Alright, this shit is more bullish than not on the technical trade. No, technical analysis, but I mean, only retails do really major shit on technical analysis because technical analysis is candle trading, but they are going bullish for now. 10:30. I'll go ranged, I guess, and then went higher into 10:35. Breaking out, showing. So either this is the real direction and they're about to go north, or this is the ultimate rejection from this cycle. But I mean, they're going to the roof, trying to show. VWAP is everything is flipped. Algo range is now touching. It's looking crazy. I'm not gonna lie, it's looking crazy. Time is 10:35. They're spiking this shit. 10:10 algo range. And spike it to 10:35. Wow. IWM near the floor, but look at that bounce on QQQ. It's burning all 0 DT bears from 10:10. Absolute. Wow. That's literally what I mean by I don't even fucking think about pivot point trading or fucking think about going south when they set a floor like that, because that's literally pivot point trading and hoping, and then they fucking just destroy everything and all the work that they did. So using the 1/3, 2/3, 3/3, literally cycle analysis. And now I don't even know. I mean, this thing could go even higher, but I mean, this shit is going higher and higher, so that's crazy. Candles coming in thick. Like, this is big cycle, right? This 930 ripped up into 940, and then they used that cycle to go lower, and then now it's look at this shit. Like, I can't even draw it because it's so goddamn. It's like that 1 minute top. Pretty insane day already. I thought it was going to be one directional, but honestly, this is literally no directional right now. It's pretty insane already. And we're still bullish, actually, off market open, if you can believe that. We're bullish now, actually. They just shook off everybody. Bear trapped. IWM barely below the 930 floor. QQQ. Tesla is at the space port. It's pretty crazy. Cycles are forming. Rejections happening. I'm not going here at all. They could go back down, sure, but I'm just not doing it. I'm waiting on Tesla. I need this shit to come back down, or I'll just wait it out. Okay, fucking feeling FOMO like crazy, but the time is 10:40. It's fine. I can watch out a cycle. It's fine. Every fucking cycle gets me pumping. That's something, that's something wrong with me. You know what I mean? Like, it's okay to fucking be okay with whatever the market doing. That is crazy FOMO. Fuck. Fuck. Yo.
Taking a look at futures this Monday morning, final Monday morning of 2025 trading. Just pointing that out. Final trading week of the year. As you can see, the Dow is slightly higher, 5 points. S&P and the Nasdaq are slightly lower. The S&P 500 is nearing that 7,000 level, tracking an 8 straight monthly gain. It's been a phenomenal year.
Could be the ultimate
All three
rip up
major
or the
indices
fake out,
posting
right? And it's not
double-digit
faking out
gains
trying.
for the year.
That's
Obviously,
insane.
the AI boom here.
That's
Strong
what I mean by
economic
market
growth,
insane.
3
Market is
consecutive
literally
Fed rate
creating
cuts.
cycles
The
to
Nasdaq surging over 22%. The Dow is up 15%. The S&P 500 jumping 18%.
Thank you. So Tyler said crazy day already, LOL. You know what I mean? Why is it fucking doing this shit? Because literally IWM is near the floor, bringing the LOD again. It's absolutely wild.
What should we be watching?
They're trapping
for?
in the most insane way, but like they're trapping bears.
We're not going to get another cut until April. But then you're going to get a
I don't even know.
Like,
it's looking weird as shit.
Right. I think what will be very
small caps doing its own thing.
And we're in a situation
they don't even care about small
where
caps
GDP
anymore.
growth is tremendous.
They cared about
inflation
this
is
thing
coming
all day
down.
long.
The tariff caused inflation never really materialized.
So does it really follow IWM here, or do they not care about
and
small caps anymore?
It will be an intellectual battle
it's just all about
at
technologies.
the Fed coming up. As
maybe
the members of the voting
Tesla
committee
bounces,
who decides interest rate
IWM just out the
policy
window.
will be wrestling for position and deciding what is the
hard.
appropriate framework.
6906 now, a random ass spot, but this is literally now a part of some sort of trend line that they're doing.
Which means that you try to limit
I don't know what that is. I mean, maybe that is showing something too, but I'm not drawing that.
Inflation, it's not going to work because what we have is a supply side economic growth agenda, and that requires access to capital for the private sector. And it assumes that you can have economic growth without inflation. So let's hope that the new chairman has enough intellectual consistency and strength in their beliefs to persuade other members of the voting committee to go along with lower rates as a way to empower private sector productive growth.
And let me get in here because obviously we look at there's technically 4 candidates, but really there's 2, and we're kind of now between Kevin Warsh and Kevin Hassan. Is kind of where the rubber meeting the road is. It's up to the president, of course. But what do you make?
I think Kevin Hassan is the consensus likely pick for the market right now. But my question that I'm concerned about, and I think most investors are, is can you maintain independence? Right? Is there a perception of independence? I think that's most important. I do think you have to counterbalance the strong GDP growth. Right? The consensus says that it should lead to inflation, but most of the issues that are contributing to inflation right now are still structural, right? So you look at housing, healthcare, energy. Those are things that are not demand-driven, right? So we can have strong economic growth, GDP driven by the consumer, and not really. And as long as we're having reforms on those structural issues, which we are on energy, we're starting to on healthcare, we can bring down that other side of the inflation.
Right. And a lot of those tariffs on food inflation to deal with food inflation are being dealt with by the Trump administration. They have been doing that. And I want to take a look at yields this morning, Judy, because gold hit record highs this year. It's been an incredible year for metals. 70% jump because investors really have been going for safe havens. Silver hitting multi-year highs as well. And there's the 10-year right now on your screen. And there is gold at 44.85. We did break above 4,500 last week. What do you say to the metals? Because, thinking would tell you maybe it's time to pull some back off the table when you have incredible gains like you have for gold and silver.
They are incredible gains, and you might say technically that gold should keep going up because if the Fed is going to reduce interest rates, that makes gold and the U.S. dollar sort of competitors. And it used to be that if you got a return, an interest rate on the dollar, then that made it preferable to gold. But I think there's more than that. It's not just coincidental that gold and silver are the constitutionally legitimate forms of money for the United States. The U.S. is the world's largest gold holder. This is really our strength. And I think it's worth pointing out, at this current price of gold, our 261 million ounces held by the Treasury are worth about 1.2 trillion. They are being carried at book value of 11 billion. They're worth 100 times more. And I think it's very powerful for the United States that we have this position in gold holdings, where gold is the second most prominent reserve held by central banks around the world. And we also happen to have the world's dominant currency in the U.S. dollar. This is our strength, and we should be ensuring that we use that as soft power around the world.
Oh, that's a very, very good point. Judy Shelton, it's great having you on the show this morning. Thank you for being here.
Thanks, Cheryl.
What a fucking day. I think, again, being impatient, maybe better to let the thing bounce and then do a little bit of risk analysis into fucking 1DT for myself. But I mean, it's a little bit there.
The word on Wall Street, top investors watching your money. Joining me now, MJP Wealth Advisors President Brian Vendig. Also with me is Lou Bassanese. Brian, good morning. We're going to start with you here. Futures this morning on the final trading week of the year. We're kicking things off slightly lower. The S&P 500 nearing the 7,000 level and tracking an 8th straight monthly gain. All three major indices posting double-digit gains this year. Of course, led by AI, strong economic growth, and 3 consecutive Fed rate cuts. The Nasdaq surging over 22%, the Dow up 15%, the S&P 500 jumping 18%. So, Brian, you've been bullish on technology, and you do expect strong earnings growth. But where do you see the biggest opportunity going into next year?
Good morning, Cheryl. Yeah, I think next year we're talking about 15% increase in profits is the outlook that we have for publicly traded companies, but more of those contributions come from areas actually outside.
Watch out.
So if we look at cyclical stocks, especially with a more neutral Fed going into next year, should help. Also, tax incentives supporting infrastructure spending and other areas of the supply chain, and that whole innovation trend still playing out with AI. There's also an opportunity for expansion of earnings coming from areas outside of not only tech, as I said before,
there's
but
no
also
volume here. Expect a huge fucking candle.
And depending on where rates go,
fucking higher fucking
Fed
shit. I'm
policy,
telling
that
you,
could
some
impact
fucking
the
higher shit
dollar,
going on.
which could also be good for international equities as well next year.
Let me ask you a follow-up on that, because international equities have actually done surprisingly well this year, and that really wasn't the call at the beginning of 2025. Do you think that that continues, or do you think that the U.S. is a better and safer bet for 2026?
One massive fucking volume and start some shit, maybe.
Well, right now, outlooks for global growth are intact, and also with just de-escalation on trade and also commitments that countries have in reinvesting in themselves in some areas. We think that from a valuation perspective, international equities still look attractive. But at the same point in time, we still see strength in U.S. equities. And so we're still biased, leaning towards the U.S. But we also recognize that from a valuation perspective, with markets trading above historical valuation averages, you got to diversify. I think that's a theme, Cheryl, for next year, which is why I think international has a place in a client's portfolio.
Okay, wow, that's an interesting call. Lou, over to you on this one. U.S. companies are outlining some lean plans for 2026, basically minimal hiring or flat headcounts, as firms are, of course, leading more on technology and artificial intelligence. A lot of large
If we got a red candle here and it breaks the low at the 1040, this is bears in control from 1035.
The white-collar labor market is freezing up.
We will see right here
unemployment is hovering near 4-year highs.
If this level breaks,
because the unemployment picture is something that the Fed, of course, is going to be very focused on.
Yeah, everyone's focused on
jobs.
Are
in control short term.
Job growth usually means recession. In this case, though, even though we've gone from an average of
we are
about 370,000 jobs added a month 3 years ago to about 55,000,
the intraday move now.
I don't think a recession is imminent. I think it's really a productivity pivot, and you're seeing this play out. A recent Vanguard study showed that while everyone's afraid that AI is going to steal jobs, it's actually created more jobs than the COVID era we saw.
And these companies big are highly exposed confirmation to AI. Rejection. Bears are here fucking big time.
So I think there's a big concern here that's unfounded. I'm with Brian here that earnings growth is going to be double-digit again. We've had 2, maybe 3 quarters of 10%
bear cycle.
Growth
time is
plus
1050
for the S&P 500, and it's accelerating for those other 493 stocks, not just the Mag 7. So I think there's a lot of underlying strength heading into 2026.
Interesting. All right, let's look at yields this morning. We're watching, of course, the 10-year and the 2-year because the countdown is on. President Trump is closing in on his pick for the next Fed chair, an announcement expected as soon as early January. Now, according to reports, the president has narrowed the list to 4 finalists: Kevin Hassett, Kevin Warsh, Christopher Waller, and BlackRock executive Rick Ryder, all seen as more open to lower rates. Bank of America CEO Brian Moynihan is warning that markets are going to punish any move that undermines the Fed's independence.
Time is 10:50 here
critical for financial stability. Brian, what do you make of that, especially Moynihan's comments? Because he does have a strong relationship with President Trump, and certainly the president is still weighing his options here.
Bears are coming on the MACD.
Yeah, definitely. The most recent commentary that we've heard from some of these candidates,
IWM is near the floor.
Back some of their comments regarding the influence that the president has on the decisions of the Fed. And I think at the end of the day, confidence is key for our financial markets.
We are
so
at
having an
POC,
independent
the low
Fed
VWAP.
that can listen to input from the president but have their own process of review,
Man,
I still think
bearish.
is
I don't even want to
important, and I think
think
that's
about
something that
bearish
all
or go
these
lower,
candidates
but I
are
mean,
looking to
here we are.
maintain. I think from
volume
an
going
overall
bearish.
cut perspective, this is
Wind
where we have
direction is
disagreement
south.
with
Traps.
market participants, because I think the market's
Bulls are
looking for
trapped.
2 cuts next year, and it
They
looks
wanna go
like that
south.
we think that depending on how economic growth goes, which could be more robust than expectations, inflation stays a little stickier.
Wind
So the
direction
only
is south.
disappointment I think that could come up in 2026 is you may only see 1 cut next year, and the Fed's going to take
LOD
its
break
time.
is imminent.
So something more
LOD test
mid-year,
is
Cheryl,
imminent.
is where we think that rate cut comes in right after the
What am I saying?
announcement,
LOD break.
the
LOD
announcement in
test
January of the
is
Fed
imminent.
chair,
Time
and
is
then the Fed chair being effective in
They're
May,
going
moving
crazy.
into June.
Well,
My
and
put
that's
is
why
up
I
$300
mentioned, Lou, earlier in the
fucking
program
4
that
candles.
if you look at the bets on Wall Street, it's
In
pretty much a cut
1K
for
fucking
April.
put.
But
Crazy
same question
work.
to you about the
Tesla?
Fed chair position, because
I went back slowly.
certainly
Today's
the
Monday.
president
There's so
wants
much
to see
fucking
somebody
time
that's
on
more,
Tesla. I'm not worried
bullish
on
when it comes
Tesla.
to
I
rate
have 2
cuts,
puts
and he wants that person
on
that's going to
Tesla.
kind of,
I have 1
in
SPX
his opinion,
on.
stimulate the economy that way. But the independence
6,
issue
9,
is something
10
that
again.
Wall Street, you said, is watching.
Yeah, no, I'm with Brian here. I think it's the number of cuts matter more than the name of the person announcing the cuts. This argument over independence, I'm sitting here thinking about it. How many people thought that Jerome Powell was actually independent, right? We were arguing that he was in Democrats' camp. So I think the investors will overlook it. They like certainty. Give us
Crazy
a name.
trend.
I think it's probably Hassett. We'll move forward and focus on the number of cuts and the other economic fundamentals.
That's on Hassett.
Market
Well,
cycle.
we shall see. January is starts
Volume.
this week. Brian Vedvik,
Momentum
thank you so much
used
for being
to go
with
break
us
the
this morning.
LOD.
We really
LOD
appreciate
break
your
is
time,
coming,
and Lou,
and
you're gonna
I
stay with
am
us all
out
morning
at
long.
$1,500. I'm out. $450 profit. I'm out. Let's fucking go. I'm still in Tesla here. They want to go break the LOD. I play small in the 3/3 and with momentum and direction, so I don't really care. I don't really care. I waited and waited and waited and waited and waited and waited and waited. I let them do whatever the fuck they want, and after I cycle confirmation, holy fuck. They're about to break the LOD. LOD broke on IWM. LOD broke on SPY. There's a divergence at the floor. Right? Who remembers when I said there's a divergence at the floor? Medium term, long term calls are in danger more likely than not, even though if they show bullish, right? Realist people remember, and who remembers when I said this could be the ultimate bullish or it could be the fake out, right? Because of setup, right? So that's what I mean by setup. That is absolute setup. They're going to break the floor. They're going to go below 686.81 at the minimum today. And then they're going to figure out what they want to do. Why? Probably because of the divergence. The fucking crazy ass knife forming. We broke out and then knife down. $10.50 is coming in with a big candle now. There is, look, I literally said, right? Volume and liquidity is most likely going to come out of fucking nowhere, right? And I said candles are starting to fly. When did I say that in the WhatsApp group? At 10:45, no volume here. Candles are about to fly, like fly down. Yeah, 10:45 a.m. At 10:46 a.m. I said confirmation rejection built. Time is 10:50. 10:48 a.m. bearish 3/3. 10:48 a.m. bear cycle. Bulls are trapped. Wind direction is south. LOD test is imminent at 10:50. 10:51. I left. That's all it is, right? How many people saw the WhatsApp live? I don't know. I have no fucking clue. Maybe 9 people. It's not really, I don't really care though. I mean, it is not. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 people. Yeah, I mean, yeah, 10 people. It is what it is, but I mean, I'm okay. That is okay. Market cycling. LOD. I guess didn't break on SPY yet. Slow bounce shrine. Wind direction is still south. If they hover at the floor and they chop, 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 hover at the floor, yeah, they're going to break the floor most likely than not at some point. This is a crazy algo range they're playing at 932. It made almost the majority and everyone forget about it, and they came right back into forming some sort of a wedge along with the morning algo range and the downward trend line. And we could see 1032. Scary. I'm down $500 on Tesla, but I mean, it's not much. This is a very fast cycle building now on SPY. What a fast ass rejection and a fast ass bounce. Everything fast has a equal and fair counter move almost. Man, how did the market open today?
We're trading in 12 seconds. By the way, doing the honors here at the big board.
Wasn't paying attention earlier.
And as we look to the open, really going, Mike.
It's like 45, 65. 65 bearish, and then they pushed up north, showed bullish, and then showed bearish, and then pushed north and showed bullish, and then showed bearish again, and then now we're pushing up north and showing bullish again. So we switched bullish, bearish, bullish, bearish, bullish about 1, 2, 3, 4, 5 times just now, and trying to switch it for the 6th time.
All right, let's talk to Stephen Moore about the economy, Trumponomics heading into 2026. He is the co-founder of Unleash Prosperity. He's
you got to imagine the amount of calls and puts and everything at everywhere right now. Not even looking at the SPX put to call ratio.
Happy New Year.
Yep, same to you. The president says the T word, tariffs, is the most beautiful word in the English language. On the other side of that,
this is what I get for pulling into 3/3 too. I'm not gonna lie, I'm getting greed trapped.
Starting in April of last year from the tariffs.
Greed trap, basically.
You're somewhere in between. Where do you stand on tariffs? You figure strategically, the rationale is that they could rebalance certain parts of global trade in a positive way, but in general, you are not a tariff. You don't think it's the most beautiful word in the English language.
Well, Joe, let's start with where we were exactly a year ago when you had all of the blue chip forecasters, including the Fed and, the professional.
I got on Tesla for playing a 3/3 basically is what's happening. And anyone that's playing on IWM right now is literally getting fucked around within the 3/2 is basically what's happening.
And we now know with pretty much certainty.
What are we talking about in the 3/3? Like 3/3 is dangerous shit. Like we're talking about the 3/3.
December 23rd.
Look at this shit. 1/3, 2/3, 3/3. What do they do in the 3/3? They made it crazy fucking bullish and they made it crazy bearish. Like you cannot lie. This is dangerous shit in the 3/3.
we've got
no matter what happens, bullish or bearish, whatever the fuck happens on 3/3 on Tesla, but like dangerous as shit. 3/3.
So
that's what they
on the
do.
economy, Joe, is exactly the point you
Greedy,
just made.
greedy
Tariffs.
players in the
Now,
3/3 like me.
Right. I'm not a big fan of tariffs, but you know what? I am a big fan
They
of
fuck
some
around
of
with
these
me.
trade deals.
They shake me
Trump
around. They're
has been
like,
able to
"What
pull
the
off
hell
over
are
the
you
last 12
doing?"
months, with Korea, with China, with Japan,
Up or
with
down,
Canada,
bro. It's
with,
crazy.
the Europeans,
It's absolutely
all
crazy what
making
you see them do, bro.
concessions
What is this shit?
to the United States
Like, it's so that's
in a very
move.
positive way. Now, Trump's saying
market
he's
open
going to bring
and then fucking
$8 trillion of capital into the United States from the
That's
rest
a whole
of the
day's
world.
move. Market open and negated.
That's
the latest.
I know Donald Trump never exaggerates, but I think that's an exaggeration.
Damn.
But let's say he's wrong by 90%. Let's say it's only 1 or 2 trillion.
That is an insane
That's a
pattern
huge
to see.
amount of money being invested in the United States. So I like the way he's been able to
Wow, it's
negotiate
actually
better
so
deals for the
beautiful.
U.S.
Isn't that so beautiful? Like, oh my
my
God, I love today. I love the market, man. This is so beautiful. Like, what the fuck is this? What is this coiling on this thing so perfectly today, man?
Economic backdrop.
Oh my.
At the very worst, you have to say that in spite of those,
beautiful.
the economy
it's like forming
has been doing very,
Damascus
very well.
knife,
The president
man.
would say because of those,
What
and
the
in certain
fuck?
cases he's right. What the reason that a lot of those foreign countries came
It's
to
the
the
previous
table
low that
was
they
because
turned
of the
into
tariffs.
resistance
So
and or support,
there is
and
a
it was not a
linkage
joke.
between there that people don't.
They
They
left
just
it
look
and came back
purely
to
at
it.
what
Why?
costs US
And then we
businesses
regained
and
it.
it's a
Why?
tax
Is
on
the
business
previous
passed
low
on
that they
to consumer.
turned into
We
resistance
understand all
and
that,
or
but
support.
long
This is
term,
higher time
and
frame
to
shit going
borrow
on.
and
This
Lutnick
is
make that case,
smart
long
money
term, we haven't seen
deducting shit going on
maybe some of the
intraday.
positive aspects.
Right, not
of
candle
tariffs
shit,
on
not
manufacturing
little
and
no
everything else.
setup,
And
you
put
know,
in the
amateur
big,
fake
beautiful
Ferrucci
bill,
shit. I'm talking
and you
about
put in
real
oil,
smart money
and
deducting shit
deregulation at
is going on right here
$57,
today. Is why we're
and you
coming
put
back
in,
to
I mean, there are some
686
serious
and why we're going up
tailwinds
to
going into next year. It
687.
could
Why?
surprise people.
What do
Don't
we
you
say
think,
every
Dave? It
day,
could be-
guys?
You think
This
it'd
is
be
the
4
roaring
next year?
20s,
I mean,
just
the
in
White House
2020,
was
right?
talking about
2025.
or
This is
even
the roaring
better.
20s into 2026, 27,
Well,
28,
again, you know,
29,
Trump always
2030.
exaggerates
You know what
a
I
little bit
mean?
about what we're going to get.
The
I think 4% would be
speculators,
a bit of a
the
stretch,
fake
but
traders,
as
the
long as we can get
Ferrucci's,
between 3
the
and 4%,
whatever the fuck you want to
that's a
call
very
it,
strong
they're
number.
done.
And here's one of the major
They're
reasons
done.
we want to strive
Why?
for that higher growth rate.
It was like this in
If
history.
you get the economic
Go
growth
look
rate
at
over
history.
3%,
Go read some
Joe,
historical
you
books about,
start
you know, what
turning
happened
the
back
debt
in the,
curve
you know,
that we're all concerned about, the national debt and the massive deficits we're running.
speculative
We want to
traders,
make sure
guessers are
the
all fucked.
economy is growing faster
I'm
than the
talking
debt.
about the fake
That's the
channels that
main
are
thing.
out there in
And
this
if you
world,
get to
guys.
3.5 to
Real
4% growth,
institutional
you're
players,
exactly that, a turning
real
down on
winners
that curve
that are
that is such
winning
a
on a
cancer cell
constant
in our
basis,
economy
on a
right now.
numerical, statistical advantage shit, they're all deductors. They're all setup traders. They're not candle traders, and they're not fake Ferrucci paper, whatever the fuck it is. It's literally just setup traders, and there's nothing more in this life. There's nothing more. Something is just different, and the different is the mentality, and that when the way they look at this shit, the way they approach this shit, because this is not just some fake candle bullish or bearish shit. This is literally actually something way, way deeper than that. But it's something so structured and it's something so understandable that people that are trying their best on a daily basis and people that are deducting on a daily basis get to enjoy the, what do you call it, like the wind motherfucking direction and the deductional structural directional setup directional of the market, if that makes sense, because that's what they care about, nothing else, right? Candle trades, you have to think about it. If people care about what candles show, and if people care about only what the MACD and volume shows, then they're magnetating and they're, you know, pushing themselves to only care about that, right? So if that's true, then you got to understand something different than just straight up candles and MACD, right? Your neighborhood dog could literally look at the candle and the MACD and be like, oh, the candle is red, sir. Can I get a bone? Oh, the candle is green, sir. Can I get a bone? You could do that. But all I'm saying is, there's something deeper than just the candles and just the MACD and volume alone at all times. At all fucking times. So, yeah, those that, you know, truly try, and those that really do their best, and to become a deductor in life will become a deductor in life, man. This is what David Goggins says, right? Whatever the fuck you want to do in life, you're going to do. Whatever you think that means. Whatever you don't want to do in life, you're not going to do. Whatever you think that means too. But all I'm saying is, this is not some Furuji fake candle bullshit. Ain't no way. Every day? How? You gonna tell me candle trading possible? What, 85%? No. Deducting setup possible 85% of the time, statistically speaking. What the shit are they eating? What are they feeding? Who the fuck knows? But I mean, that's the bullshit that I be hearing from people that are telling me shit. It's something bigger. There's a LOD divergence at the floor. Let's see if they clear it. Looks like they want to clear it. IWM. Rejecting. Nothing's doing shit except SPX and QQQ on that trend line downward. Couldn't break out above it, so we're coiling on it. Man, maybe they are gonna use this metal pullbacks thing as a thing. That's what they're saying on the news right now.
Pre-bill playbook.
Metals pullback from record highs.
Has played a big part in our story throughout this year and even today.
Let's hit the like button on the live stream, guys. Thank you so much. Please hit the like on the live stream.
These markets
you are all having
don't have
a beautiful,
beautiful
right
Monday. Now. There's no real
only
earnings.
Monday.
There's no economic data. We're getting it, very small levels of economic data.
IWM is breaking above some sort of a channel or a knife or something that they are creating.
You mentioned Benjamin Netanyahu is
I don't know if it's
Florida.
real.
There's talks on Ukraine,
but it certainly is bounce trying here before the LOD breaks again. But I mean, this volume, this bounce, this reload could be used to break the floor. And then if the LOD breaks and then a cycle confirms to go long and with volume, that's what I would like to see. But just because I would like to see anything doesn't mean it's going to happen. I could literally be here and be like, oh, candle look like it's going to go next candle green. Next candle red. Oh, I think it's going to go up. I don't fucking know. Nobody fucking knows. That's the fucking point. It's literally, getting people to fucking speculate, getting people to fucking guess, getting people to joke on bullshit, and then they don't give a fuck about what happens because people forget it. But I mean, at the end of the day, you really got to sit there and do the listening.
By definition, they're not as liquid as they normally are.
What's the word? Sorting through what the person's saying to see if bullshit or not.
If something were to happen in right now, the metals, pretty big move here, Nicole.
That's what a lot of people forget to do over there. It seems like.
Metals late last week because I really thought that was a big part of what we saw in 2025.
I say this because of how my admin friend was, bro, but yeah, it's just how it is.
Only gained more than 50% annually.
I love life though, bro. This has to be something greater now. This has to be something greater. What are we doing? We're playing with the 3/3 that we set into. Literally last week, remember? Monday, Tuesday we broke out. Wednesday, Thursday, Wednesday, Friday, Thursday, so.
Cornered the marketplace and inflated silver 700% in 2011 following the U.S. debt ceiling.
There was a 1 minute gap here, I think, down there. They might be heading towards.
Platinum has hit new highs, so you might also just see some plain old profit taking happening as well. We have the Fed minutes, FOMC minutes tomorrow.
They want to go break the LOD, clear the divergence. I want to go look at where the 1 minute gap is. I think I have to at this point.
It says they're coming out Wednesday, so the data is so.
I know it's coming up this week. Yeah.
Yeah, right. It's coming out this week. We are getting some Fed minutes. We'll get jobless claims.
There's a 1 minute gap at 6,876
on Thursday. So
we might fill that this week at some point.
The last month or so.
6,876.
It's delayed. We're getting delayed. That's not really relevant to the market.
We're going to draw that and leave that for later. SPX 1 minute gap.
People that rely
that will not fill today, most likely.
Purposes on economic data, it's been a frustrating.
But that is a gap they could target later on.
Here because we're just, we're not getting the data we're supposed to get. We can't trust the data that we're getting, and so it's been very frustrating. So economic data is a mess right now.
They're blaming it on economic data now, man.
Bring some consistency in terms of the release of economic data. But it looks like we'll get jobless claims on Wednesday. We'll see when we're supposed to get international trade today. That's delayed. So I just, we know we're going to get earnings starting on January 13th, 14th, and 15th when the banks come out, and Delta Airlines on the 13th. Economic data, Nicole, it's still a mess. So we'll take it as we get it, and we'll decide if it's pertinent or not. But right now, it's a tough business to be in economic data. But like I said, there's not a lot to grab on. We're still in holiday markets, but the metals today, pretty substantial move here that we're watching in all these. Besides that, Nvidia is finishing up their purchase of $5 billion worth of Intel. Nvidia's down pre-market. I think the fact that the S&P closed at a new all-time high probably has some softness creeping into the market to start the day, but these are still holiday markets, and we'll see which way they tend to drift, Nicole.
Yeah, and by the way, I'll add that Cantor Fitzgerald says Bitcoin could be weak for the next few months. We didn't touch on Bitcoin too much right now, but it's still below that 90,000 mark if this crypto winter continues here. And let's get to Jenny. Kevin Hanks, thank you. Great to see
we
you
have
on this Monday morning.
FOMC meetings coming out tomorrow. That is.
His former
FOMC minutes coming out tomorrow.
Welcome to Morning Brief, presented
Elon
by
Musk
Robinhood,
is
the home
tweeting
to
about silver,
commission-free trading. I'm Yahoo Finance executive editor Brian Sozzi. Close out the last few trading days of the year. December has been kind to the bulls. The Dow Jones Industrial Average
Elon
is up 2%
Musk
on the month.
tweets silver
The S&P
pullback
500
is
up
not
2%,
good.
And the Nasdaq has gained 1%. Year-to-date, all three indices are up by double-digit percentages. Not bad for the money-making bulls. Let's get a quick check of the markets. Oh, speaking of those bulls, we're getting some bearish vibes here today. All three major indices ahead of the open are in the red on this holiday-shortened trading week. All right, let's get after it on our top investing stories right now. Chris Versace is Tematica Research's Chief Investment Officer, and we have Yahoo Finance senior reporters Inez Ferre and Brooke De Palma. Chris, let me start with you here.
Bulls are trying again off the floor.
This week,
Things are just a little bit too risky for me to just go on patterns.
Bias for the better part of the month. What do you think investors are wagering on?
I am actually waiting
Brian, I think folks are taking a look at what happens in
decide
2026.
what the fuck to do on Tesla.
If this ship, very quiet, very calm. Folks are doing their homework for the coming year.
Day, I'm most likely going to leave.
Next week that could bring a lot of
drops back down,
not only new devices, but potentially a new wave of AI adoption.
Really
but
depends on
for
what
me,
happens
I'm
in
kind
2
of sitting
p.m.
back
or 1
waiting
p.m.
for
here on
the December
Tesla or into
earnings
close.
Season. When I look at that S&P 500 PE multiple, it is pretty lofty, and it tells me the coming year is going to be more predicated on upside for earnings growth.
I want to go look at gold. Is anybody looking at gold these days?
CES.
I can't believe it made a new all-time high last week.
January 5th, put that on your calendar. That's Jensen Huang, Nvidia CEO. He will give a speech.
Go back to where?
DCO Lisa Su will give a speech that day. Very important market drivers. Brooke, I know you're tracking. You got some good comments out of Ed Yardeni this morning.
Yeah, we sure did over the weekend. Ed Yardeni saying that he expects productivity growth to really drive momentum into 2026, ongoing to what we've seen so far in 2025. And he has a pretty bullish outlook,
into 1050
as with
and then now
consensus
reverting
on the
up.
street, largely bullish
Never
calls
breaking that low.
2026 S&P 500 targets as high as 7,100. In particular, Ed Yardeni really does see this broadening out of the S&P 500. He does expect it to push above about 10% to 7,700 by year end of 2026, largely led by earnings momentum. He expects earnings growth of about 10% in 2026 as well. And also he expects this broadening out of the AI trade as opposed to just concentration within the Mag 7 that we've largely seen this year. He specifically said within this note that he expects these stocks to broaden out to what he called the S&P 500's impressive 493. So really not just those AI producers, but rather those AI users who are implementing this technology to really once again boost that productivity, which he expects to really lead to growth next year as well, in addition to what we've already seen within 2025. And so he's just one of the many bulls on the street.
Everybody vote before the candles come in here
as we make our way into the new year.
And as I wonder if the bulls are forgetting the fact that copper and silver are used in industrial applications, and with prices at records, prices to build things are going to go up. It's going to hit profit margins, or maybe they're not making any of these connections.
VWAP flip or new LOD?
Yeah, well, Elon Musk certainly made that connection over the weekend when he basically tweeted out that silver going so high and China putting restrictions on exports of silver was not good because it is very much needed for industrial uses. And I was taking a look at the U.S. Geological Survey that showed that data center server boards use a lot of silver. You've got silver in EVs and solar panels.
Inez, that's some damn good research, Inez. Not to interrupt you. I mean, that's good research. That's the stuff we need here on a Monday
Well, I was
morning.
very much curious about where exactly so much silver is being used in weaponry.
Nobody wants to vote in the YouTube chat. We have people voting in the WhatsApp group. 6 people voted new LOD and 0 people voted VWAP flip. Ain't no fucking way. We're all candle voters, bro. Ain't no way. All right, one person voted VWAP flip. There we go. 7 people voted LOD.
Precious metals absolutely soar this year.
David says LOD. So 8 people versus 1.
We are seeing today that it's
this is just a market sentiment, personal opinion, poll, folks, nothing else.
On Friday, you saw silver going
Scott
up by
says
more than
LOD.
$10 an ounce.
So
that
9.
Okay,
now 10 people versus
rarely
1.
Seen. You saw backwardation. That means that the spot price was higher than the futures price.
We're closing the poll here in 50 seconds.
China that has that's putting restrictions.
Why? Because time is 11:20.
January 1st. And it is on the critical metals list for the U.S.
Someone's saying
so
LOD.
When you're talking about
wow,
silver,
11 people versus 1 now.
That is
important. Time is now 11:20 and 40 seconds.
That you've seen
Bears are fucking crazy on
demand
SPY.
for these industrial metals,
Bears are crazy on IWM. Bears are weak on Tesla.
The prices of them. How could we have this continued
Bears are
talk
fucking
of an
crazy
AI
on SPY. Time is 11:20. They're really about to break the LOD question mark.
Yeah, I know. I agree with you, Brian. I think, you know,
it's easy for people to say, the floor twice.
Look at the big run up, look at the big
3 times almost actually.
But you really got to pull the camera back a little bit.
Wow, they're destroying all calls.
Areas of the market, just
wow.
like the conversation you were having. But
wow,
it's
actually fucking one-directional crazy.
The steady growth in AI adoption in the enterprise,
they destroyed
in
all
consumers.
fucking calls from up there.
OpenAI had a simply wonderful and revealing report out in the last few weeks about enterprise adoption. We heard the same thing from Accenture. We take a look at how consumers are embracing AI during the holiday shopping season, starting to use it to book travel. You know, to me, that focus on usage is really key. And I think a lot of folks are kind of missing that. And when
13 people voted LOD. Holy crap.
Smartphone adoption.
One person, Ethan, voted VWAP flip.
Yes.
My poll's closed.
The levels that we hit peaked out.
11V fucking 1 is absolutely crazy.
Continued usage, that's the key.
Chris, I don't want to knock the Yahoo Finance community, but I will make this general assumption that a lot of investors, a lot of retail investors were caught by surprise by this move in commodities into your end, which part ties into AI.
Man, you have to imagine a lot of people were bullish today because we're at all-time highs, even though we rejected a pre-market. Like, it is absolutely crazy.
We at the Street Pro portfolio, we're not going to do that.
We set an all-time high and rejected instantly,
buyers,
like,
not momentum players. You know, but
within
having said
a fucking
that, Brian,
day, it's not even like we stayed there.
We like to blend a combination of fundamentals, thematics, and technicals to be that disciplined investor. It's just not our bag. like I said, to chase momentum like that.
You heard, Chris, real quick, you heard Brooke talking about this rally broadening out.
Does it go back up somehow this week? I don't know.
See surprises in part driven by AI?
There's a gap down and a gap above, and we're playing inside the gap this week.
Well, I would say this. I think
we're literally playing inside two gaps intraday right now,
and the others that are going to
and we're going to be playing against two gaps tomorrow
the
inside.
Energy
So
point like
the 1 minute gap down below, the intraday gap that we created today, pushing down.
Networks. I think you want to look for companies that are helping drive productivity.
Gonna be crazy.
One of the ones that I think is kind of a sleeper hit on that is Axon. A lot of folks think, oh, tasers, body cameras, but you think about the police shortage that is out there, the need to do more with less. I think AI is a great, great driver of productivity inside that end market, which is expected to continue to grow over the next several years as is.
Brooke, let me get back to you because I think you brought up a great point on this rally broadening out. That might be one of the biggest themes, at least in the first half of next year, that investors realize there is value in 493
we keep fucking coming back on
other
Tesla
stocks, not
to
just
the purple
Maxo.
box.
And I think, Brian, we've already been seeing that as we make our way towards the end of the year. More movement towards utilities, towards industrials. Really, investors trying to seek out different ways to get in on this AI trade. Even Nvidia, the star of the show this year, now seeing a bit of a pullback in one of the last 3 days of 2025's trading sessions. And so really this broadening out is where investors' mindset seems to be in 2026, moving forward into that. And also, where exactly can they get in when they don't say that Nvidia's valuation is too high to still get in, but at the same time, where can they get in at other places as we see other use cases for AI and really adoption broaden out. Also
here.
Worth pointing out as well that Google, as we make our way towards the end of the year, has seen a tremendous run year to date, now really firing up towards that November, December, especially around their Gemini model, even surpassing that of Nvidia year to date so far. And so clearly investors are looking for other places to get in on this AI momentum besides just the star of the show, which was Nvidia earlier this year.
And as I've seen moves like what we're seeing in silver, gold, and copper, I've seen this movie play out so many times in individual stocks. I mean, we are in a euphoric period for commodities. You almost have to think this will end badly at some point in the near term, even though demand, like we've just been talking about for these metals, remains strong.
Yeah, and over the weekend, I wrote an email to Mike McAlone over at Bloomberg, who has been warning about these parabolic moves and saying, yeah, sure, you could see gold going to 5,000 next year. That's momentum, but you could also see it going down to 3,500. So he's been warning about the 1979 scenario where you saw something similar, where you saw massive gains, you saw a peak in 1980, and then you saw the metals crashing. And that's basically what he's been warning about here. And I wrote him saying,
guys, you guys know they put silver on a complete squeeze, like some 1980 squeeze. Like apparently silver rallied crazy too in the last couple of weeks.
And he says, yes, there's always a story. There's always reasons why.
Everything in the world squeezing crazy, man. Tesla, gold, silver, SP, everything at all-time highs.
We have seen this movie before in 1979, 1980. Very similar pattern.
Chris, what's the best way? If you are a believer that this move in commodities is going to continue, we're going to see maybe another 10, 20% move in various stocks, is the best way to play it a miner like a Freeport-McMoRan, or do you just keep it simple with an ETF?
I would keep it simple with an ETF, Brian, but I also want to just back up a second and say, we have seen significant moves like this before. Earlier this year, for example, in nuclear. And, at the time,
I don't know if I should give up on fucking Tesla right now. I want to make this shit into a huge loss.
Investors sometimes
just leave it a couple $100.
Okay to sell some of what you have, not necessarily
$6
all
bounce.
Take some of those chips off the table. Take
Just
those
need like
profits,
$4
redeploy them
down,
elsewhere,
but
leave
not going.
some chips on the table to capture further upside. But to answer your question directly, Brian, without a doubt, an ETF, I like that diversified exposure.
All right, thank you, Brooke and Inez. Chris is going to hang with me for a little bit longer. We'll be right back with some of his top picks in the tech space for next year. Welcome back to Morning Brief, presented by Robinhood. Let's hit some Yahoo Finance trading tickers. We're watching Digital Bridge, Intel, and Lululemon. First up, Digital Bridge. Shares of the investment firm are ripping in pre-market trading that after the tech investment beast, SoftBank said it would acquire the company. The price tag, $4 billion. DigitalBridge focuses on data centers and other digital infrastructure. Before Monday's move, DigitalBridge shares were up more than 20% this year. The firm has a $2.5 billion market cap and roughly $108 billion in assets under management, or as the pros say, AUM. Next, Intel. The stock little changed after the company completed its stock sale to Nvidia. Nvidia purchased more than 200 million Intel shares as antitrust agencies cleared the transaction earlier this month. Back in September, Nvidia announced it will be taking a $5 billion stake in Intel. The U.S. government is also now a shareholder in Intel as well. Nvidia shares are under a bit of a pressure ahead of the opening bell. And finally, Lululemon. The company's founder, Chip Wilson, has reportedly launched a proxy fight to change his struggling retailer's board. According to the Wall Street Journal, Wilson is seeking to nominate 3 new directors, including former top execs from On Running, ESPN, and Activision.
We did a poll today in the pre-market, guys. The poll was, would you rather be a gardener in a war or a warrior in a garden? And we had 12 people vote a warrior in a garden. So I hope to God you guys feel in your heart what it means to be a warrior in a garden. What does it mean to be a warrior in a garden?
Nvidia didn't even put out an
warrior
SEC
in a
filing
garden
on this
is
one.
somebody that is willing to become
anything publicly
a man or a woman. It doesn't have to be a man, or a man or a woman that is willing and strong enough mentally to stand up for who they are, to do what they believe in, and to fight for who they, who they want to fight for in the times of difficulty, through the struggle, but controlling it, meaning, you are able to do what you need to when you need to. What does it mean to be a gardener in a war? Gardener in a war means you are just naive and you're okay with how things are, right? The world is going around you. There's a massive war going on. And, a little garden. You get what I'm saying here? Like,
biggest acquisition they've ever done,
very
Brian,
glad.
no filing, and they sneak it through on Christmas Eve. I agree with you. It's a bit of a head scratcher, especially when you take a look at the multiple that they're seem to be paying. But we've seen other big multiples of late. Service
against
now,
the South
Armis,
and the mental,
billion on
abstract mental war battlegrounds.
I think this is a larger trend that we've seen really over the last year, Brian, where these large cap companies are flexing their balance sheets, filling in technical gaps or holes. Kind of as a competitive move, so they
testing yourself, testing what you know, testing your bias, testing your, you know what I mean, everything combined, emotional,
and the Street's founder Jim Cramer always would come
everything,
very
mental,
like one of the first people that I know championing a bull case on Nvidia. And his case was Nvidia essentially dominates the chip market. At the time they were doing gaming, case. But now they're also, of course, the main leader in AI. Do you think this acquisition signals that they are concerned that Grok was working on something that they didn't have?
Cyclical and time confirmation.
So
that's what smart money does.
More of an
Cyclical
effort
analysis.
To shore up their inference.
Time confirmation.
Brian. Again, taking a very strong competitive position, extending it further as we move deeper into AI, moving past simple training into figuring out what is next, making their models that much
the RSI is in bearish territory. It is up to the bears to
there's never
want to stop this madness or not. Any minute they can go break the LOD. Why? That is the trend line below.
What is Broadcom going to do? What is Marvell
There's a
going
divergence
to do?
at the
And
floor.
others. And I think if you step back too on this, it's another signal that we're likely to see the M&A strength we saw in the current quarter continue into the new year. And if you're a shareholder of Morgan Stanley, JP Morgan, Goldman Sachs, you're going to feel pretty good about that.
Chris, I just had a story hit our website on, I like the headline. I wrote it. It's fine. Amazon stock might rise 50%
11:30
next year. And it would be a big number, but
Let's bring in Byron Dieter. He is the partner at Bessemer Venture Partners. Byron, it's great to have you. So what do you think changes in 2026?
Wonderful to be back. And this is the extension now of the AI build. And we can just look back at the cloud story to see how this plays out, which is the fundamental pieces go in first, which is the data centers, the compute, and then the core infrastructure foundational layers, in this case, the foundation models. And then 1,000 flowers bloom on top. It's the upstack applications. And so as you look at the coming trillions of dollars of data center spend, going from about $550 billion a year to $1 trillion a year shortly, there's about a 9x multiplier that comes for implied enterprise value of software, because they are the downstream customers of the data centers ultimately. That's the bet we're making, which is the build that's coming. And ultimately, if you roll it forward to the $5 trillion of combined spend over about the next half dozen years, that implies about $45 trillion of software and application layer value that should be coming down the next several years. And that's the bet that we think is the next most exciting bet to make.
I wonder if does that lift some of the worst performers that we've seen this year. Adobe's down 20%, Salesforce is down 22%, Workday down about 18%, all on this, software versus AI trade.
So I do think that first-gen cloud and software as a service is oversold, but it's not obsolete. And so there's going to be a separation there. Who are the beneficiaries of AI
Still
that
bearish.
are going to lead the next
volume.
cycle versus those that aren't going to make the transition? And so if you look at a
bears
ServiceNow
are
or a Viva, I
pushing
think those are names that are
volume
really interesting to watch to see how they incorporate AI. And I think that there's a little bit of value left there, that they're under their peer group. You look at some companies like a Cloudflare and AppLovin, even a Snowflake, and at their current values, they're the high flyers in this kind of Gen 1 ecosystem. And I have to argue the opposite, which is that perhaps they are overvalued relative to their point in time and the challengers that are coming. And the Databrickses and the ClickHouses may be more interesting bets for this next cycle.
But I would assume there's companies that we've yet to even hear from, conceivably. I mean, if there are going to be hundreds of applications and thousands of agents, I would assume it's not just the names that you just mentioned.
Very much so. And that's the interesting bet that will start to reveal itself. So everyone knows the OpenAI, the Anthropic, the XAI, Google Gemini. That's wave one and step one. These foundation models are now in place. We do think there's continued growth there. They could double, triple, 4x over the next several years.
I don't want to make people bearish leaning at market open, but this is literally an amazing reason why. Look at this shit. In the market, in pre-market, I'm talking about in the WhatsApp group, they were showing crazy bearish. But look at this shit, bro. Look at this fucking crazy ass move in the pre-market down, and then big ass pop to the pre-market high, and then we're playing in the entire range. Like, that is crazy work. They're fucking burning all the bears below the pre-market.
I don't think those are going to be.
They're burning all the bulls at pre-market high.
By the end of 2026,
we're inside the entire range.
Like the Canvas of the world, etc., may be candidates. And then for 2027, we're going to see some of those AI native application coming really burst on the scene for the public's investors to bank on.
Oh, I don't want to freeze up my chart, so. Man.
Pattern at the top of almost every equity bull market in the past has been tightening Fed policy instead of easing
Goldman
today.
outlook on 2026
and maybe silly example, but a couple of years ago I remember when the GLP-1 drugs were being rolled out.
Bullshit.
There was a very brief window where investors.
Let's bring in
nobody care about Goldman says, man. On YouTube these days. Well, I might have froze up my chart. Just won't go to yes. Getting a little pop. What a bounce. What a rejection, what a bounce. No direction chopping. Tesla reverting. I want to look at the 2-hour MACD. 2-hour MACD on SPY. Wow, it's bearish as fuck. I don't even need to zoom in. The 2-hour MACD bearish as fuck right now. They're bull trapping. They want to go lower. LOD divergence is going to break at some point today. The 2-hour MACD is crazy bearish. There's no joking with the higher time frame. This is a major bull trap still. No cycle confirmation. Long. And there's a divergence at the floor. Alright, LOD divergence is about to clear right now. Most likely. It's clearing right now. Most fucking likely. I'm telling you, the 2-hour is no fucking joke right now. The 2-hour MACD has been crazy bearish. But it's just not breaking the floor. It's just going down, bounce down, bounce down, bounce down. Like, what the fuck? It's so insane. They just won't break the floor though. Like, look at this shit. You cannot look at the 2-hour and say that's not bearish. That's like not bullish. That is fucking bearish since Friday. And we said in the market update video, right? 1 hour or the 2-hour is started to maybe turn down, and the 1 hour has definitely started to turn down. And they are definitely going on the 1 and the 2. 1 hour is negative now, so yeah. Not helping it bounce at all today. 5-hour, sorry, the 5-minute is bearish as fuck right now. Digging into the ground, so that is not bueno. They're like doing it super slow. Super slow. LOD about to break, but I don't know when. It's midday. It's midday. Yeah, the 2-hour has been, you know what I mean? I was looking at it earlier too when I was playing this, but I stopped looking at it because of the bounce too. But like now that I'm looking back at it and they keep rejecting and coming back and rejecting, if you look at the 2-hour, that's what it's showing. Like the 2-hour is so goddamn bearish. Every single fucking bounce is getting ripped down right back to the floor, but they just won't break the floor. Why? Because, you know, we are evil. We are the market, so we're evil. It's just.
He is the partner at Bessemer Venture Partners. Byron, it's great to have you. So
did we watch this already?
Changes in 2026?
Wonderful to be back, and this is the extension now of the AI.
I don't even know, guys. I don't even know if we watched this, but we're going to replay it. Let's hit the like button in the live stream, folks. Thank you all so much, right? Thank you all so much. We're all here together, looking at the same shit, so, I mean, let's just see what happens, but that is so unbelievably how they rejected 1, 2, 3, 4, 5, 6, 7 times. 7 bounces.
Look at the coming trillions of dollars of data center spend.
I need to have SPX open, but I don't have open.
To 1 trillion a year shortly. There's
go
about
look at
a
SPX.
9x multiplier that comes for implied.
What if they're getting so many bears involved too to bounce it on them all?
Customers of the data centers ultimately. That's the bet we're making, which is the build that's coming. And ultimately, if you roll it forward to the 5 trillion of combined spend over about the next half dozen years, That implies about $45 trillion
7 rejections,
of software and application
but 7
layer
bear
value
traps as well.
that should be coming down the next several
Right,
years.
one,
And that's the bet that we think is the next most
2,
exciting
3,
bet
4, 5, 6.
Does that lift some of the
6
worst
bear trap
performers
too.
that we've seen this year?
I mean, not 6 bear trap, but you know what I mean. 7 rejections, 6 bounces.
Workday down
And that
about 18%.
oh my god, is an insane
all on
fucking
this,
wage.
you know, software
Oh my God.
versus AI trade.
Oh my god.
So I do think that first-gen cloud and software as a service is oversold, but it's not obsolete, and so there's going to be a separation.
Divergence is creating
We're
a
the beneficiaries of AI
divergence is not clearing at the
those
floor.
that aren't going to make the transition. And so if you look at a ServiceNow or a Viva, I think those are names that
These
are really
candles are
interesting to watch to see how they incorporate
super red, though.
AI, and I think that there's a little bit of value left there, that they're under their peer group. You look at some companies like
very bearish candle. This is a very bearish push
and at
at 11:35, and that is a very bearish push at 11:40.
Ecosystem.
So
and I have to argue the opposite.
I think they're pushing lower right now.
They are
11:35, 11:40.
Their point in time and the challengers that are coming, and the Databrickses and the ClickHouses may be more interesting bets for this next cycle.
But I would assume there's companies that we've yet to even hear from, conceivably. I mean, if there are going to be hundreds of applications and thousands of agents, I would assume it's not just the names that you just mentioned.
IWM has chopped at the 0.618 all day long.
That will start to reveal itself. So everyone
That's why we're bouncing and rejecting every time, because we're at the 0.618 on IWM. So we called out 2 hours ago as well. They're using this Fibonacci to do shit here.
Over the next several years and
it looks like
however, it is
bears are pushing. This is bearish. This is the 3/3 bearish now.
And there's this narrative in the market that the foundation.
This is the 3/3 bearish again. This is the 3/3 bearish again. They want to go lower. LOD is breaking.
I don't buy that at all, nor do we at Best.
They're going more.
It's not going to be a 4-vendor ecosystem for all of software in eternity. There's going to be this wave of companies being built, and we're just starting to see those now.
Look at this shit.
I don't think those are going to be your IPOs in 2026.
I think this is going to go
the end of 2026, some of those transitional companies like
I can't FOMO at this point, but this is the mega 3/3. LOD broke 1140. And there's still a divergence on QQQ, meaning there's a fuck ton of room they can go. Meaning there's a fuck ton of room they could go lower. Now they're going here to the top of the trend line that we broke out of. Most likely it's going to go to 68658 somewhere and then figure out if it wants to stabilize or not. LOD broke now. 1140. There's a divergence at the floor still. All calls, long term, medium term, are getting burnt because of the divergence at the floor. They bounced it, faked it out, rejected. Bounced it, faked it out, rejected too. The new LOD. Time is 1140. $11.35 rejected, 11.40 pushed down into 11.40. So let's see what happens now that it is only 11.40. Whether this stops at 11.40 or whether it goes lower into 11.45. We may get a spike candle and see a touch at 686.5 somewhere and then see what happens. That would clear the divergence on QQQ here and everything would align and divergence will be cleared off the floor.
Joining us to discuss that structure and regulatory issues around
Nvidia tanking today too.
Of course, he's the former Assistant Attorney General for Antitrust at the DOJ, also a CNBC contributor. And Jonathan, I really wanted to get your take on this because I was reporting it out on Wednesday, and it was hard to sort of navigate it in terms of.
Hey, everybody go watch the market update video if you have not. We implore you to go watch the market update video.
It's an innocuous headline, right?
Very
non-exclusive
SPX is now down here somewhere inside the wedge that we are creating all day.
Significant, and yet Nvidia is paying an enormous amount of money for this. As an antitrust regulator, how do you view these deals? Because this is not in isolation. We've seen similar deals from Nvidia in the past, from Meta, for Scale AI, and others. Do you think they are designed to sort of avoid scrutiny from the regulatory side?
Well, if they are, then that's a problem. So there's a legal doctrine in antitrust called an avoidance device. An avoidance device means if a company structures a transaction in order to avoid a mandatory notification form under the Hart-Scott-Rodino Act, an antitrust notification, then that itself is illegal. And so to the extent that the parties design the transaction using non-exclusive licenses and reverse acquihires and the whole list of significant but quote-unquote non-significant events, then that itself can raise antitrust scrutiny for violating the process of filing with the agencies. And so that's a concern. And then on top of that, agencies do have to make sure that this doesn't become the standard of practice as a way to circumvent their review.
Does it range?
Does it
drop?
Certainly caught my eye, and it caught the eye.
It's all up to IWM now.
Yeah, so I'm curious as to how
your eye on
think
small
about it, then, this particular deal or others like it. I mean, we're licensing their key technology, not exclusively, and by the way, we're taking virtually all their important employees, but it's not an acquisition. I don't know. I'm just curious, like how if you were sitting in your old chair at the DOJ, how you'd be thinking about it.
Well, here's what I would tell my team, which is if it looks like a duck and quacks like a duck, then it ain't a pig. And in this instance, they're getting the key employees, they're getting access to the technology. It's a direct competitor, and they're paying an arm and a leg. That looks and sounds a lot like an acquisition. And so I would instruct the team to make sure
Let's do a poll, folks. We just sent a poll live. Today is thus far a good day, bad day, or an okay day for you personally. It is a personal poll.
That's what the antitrust laws are there to do. If there's a problem, then they need to intervene.
I want to see what happened all day.
Stand aside and let the deal go through.
Right, we should point out we haven't
what happened on what? Was it Tesla? Was it IWM? Was it Nvidia? Was it SPX? Was it QQQ? Was it VIX? Was it something? Was it something? If you want to say
key hires. They're not a full stack competitor, Grok, in any way to Nvidia, but they are seen as perhaps helping the overall GPUs in terms of their particular expertise called the LPU. I don't know how much you know about it, Jonathan, or care to discuss it. I would assume regulators need to be taking a close look, though, in terms of whether there really is a competitive.
The last minute of 11:40 until 11:45, creating an algo range at the floor.
This is typically how competition presents itself in technology markets. It may not be that
it's kind of scary how this algo range perfectly aligns with the one before, but I guess
Nvidia does
we will have to draw.
Than anybody, and it's extremely expensive, and their chips are really hard to get. They take a long time to get, and they consume a ton of energy. Then you have inference, which is when you use the chips. And that's where Grok really has figured out a way to do it faster, cheaper, and with consuming a lot less energy.
There's a lot happening right now. So until cycles build, I would not pay attention too much to, I mean, I would pay attention to this algo range 1140, but this aligns with the 931, so it looks a little bit confusing is what I'm trying to say.
At least question whether Grok has emerged as a
good
threat
day.
to the moat
See,
that protects Nvidia.
did not do shit today. Okay day. Good day on IWM. Someone said on something down.
Is Nvidia acquiring
you have people voting. 3 people said good day. 1 said bad day. 3 said okay day.
Somebody who left to their own devices would have grown in size and significance to take more business away from Nvidia.
Yeah, honestly, if I wanted to play short side today, I wanted to let the market bounce and then target down too. Which is what someone said in the WhatsApp group, which is what they said that was their plan pre-market, so good for them. If I wanted to target up, I wanted to let them go dig down, build a cycle confirmation, and then try to long or some, you know what I mean? Or maybe at 10:30, which they did. Maybe I guess you could call it at 10:52, but like that's only and solely based on IWM. So it's just I was also waiting and trying to be patient, but like honestly, if those are the only 2 ways technically, and then and that's like the quote unquote patient way, but holy crap. Market really used the pre-market bearish thing, and then dude. Perfectly beautifully live. Down, up, down, up, down, down. It looks so different than what it looked like in pre-market, but yeah, they do it live. As long as it's not so terrible day, right? That is an okay day, honestly. Any day you come out able to move on to the next day,
Director of Fixed
not
Income
too
Research
down
and
bad or
Strategy,
something,
Quant
is like a
Financial
good
Research.
day.
So it's a data light week.
It's
What's
like
on
a
your
good
radar?
day.
You know,
Why?
it is a
There's
data
better
light week.
setups
It's
that could
also
be
a pretty
found.
light
Better
week on a
setups if
data- on a
someone's
week like
patient
this.
enough
I
waiting
don't
for
think
shit.
that that's too big of a surprise with the holiday
We are
coming
back
up,
to
and then Friday being a little bit of a slower day. So I think the big important thing, though, is going to be the
on
Fed minutes that are
IWM.
going to get released. And I would expect that that's going to show a similar divergence that we saw last time in the dots plot. There are many Fed officials that are kind of differing views on where the economy or where the Fed funds rate should go. So right now, if you look at the most recent dots plot that I mentioned earlier, I expect that that's going to be a little bit of a carry through in the minutes themselves. Some Fed officials actually
clear the
wanted a
divergence.
rate hike or disdained. Some
one of the worst things I can
disdained
see.
from actually saying that they wanted a rate cut.
Meaning
While
they're leaving
others,
that so that people
probably
can hope and
Myron,
think about
want
either
a
side,
significant
or
amount of rate cut.
they're going to
So
do
I
it
think
again
that that's
later.
going to be something to look forward to and see ultimately what are they watching. We know that inflation is running above their above their 2% target. Labor market isn't falling off of a cliff, but it is softening. So I think that getting a little bit of more clarity, maybe if we do get that clarity, is going to be the big event this week.
All right. That said, I mean, obviously, as you say, the Fed minutes is likely to show us what happened in that meeting as far as, you know, showing the divergence in the dot plot. So not a huge amount of surprises there. I mean, do you think that moves the needle as far as the market reaction this week, as far as where the benchmark 10-year is at?
You know, I really don't think that it's going to move the needle this week. I thought Kevin
How
Gordon,
did the divergence
Kevin
not
did a very
clear?
good piece earlier this week, or earlier on one of the segments. And
I was
it's a
going to say,
very
I was
light
rubbing my
week for
eyes, but like,
traders.
how
So
did the
you could
divergence
see
not clear?
movement
Is my
higher
question.
on the upside, higher on the lower side, especially in the fixed income market where things are over the counter and many dealers have closed their books this week or taking a longer holiday this week. So you could see a little bit more volatility, but it tends to be that Fed minutes don't move the needle significantly one way or another. But that could be a difference this week because of just a lighter trading activity.
Bro.
Okay. Obviously, it's been a good year for bonds. It was sort of been a bit of an everything type rally across commodities, stocks, the fixed income market as well. Just talk us through what your outlook is now for 2026 with all of this in mind. I mean, we know that we've got a divided Fed. We know that obviously they penciled in at least one rate cut next year. The markets think there might be two. This could come as soon as March. So what are you watching right now?
Yeah, so I think if you look at 2025 and why it has been a good year for most fixed income investments is to look under the hood of the reasons why. And the first is that starting yields were pretty attractive when we entered into 2025.
Oh, what is this
and
Tesla
also,
bounce?
Fed rate cuts helped the prospects of prices move a little bit higher, and total returns benefited from that. So I think that those two factors are still in play for 2026. Obviously, yields are a little bit lower than they were this time last year, but in our opinion, they still are at an attractive level. And then the prospect for Fed rate cuts is still on the table. Now, like we mentioned earlier, yes, there are very diverging views about where the path will go in 2026, but we do expect, and the market does expect, additional rate cuts. So I don't expect that we should have as strong of total returns in 2026 as we did in 2025, but our team is still looking for things to be relatively positive and relatively favorable. That's not to say just go out and invest in whatever you choose to. We do still think that there is a bias towards an up in credit quality, Sam. And ultimately what that means is favoring higher rated issuers, such as investment grade corporate bonds, investment grade municipal bonds, things of that nature. And we do suggest targeting a benchmark duration. Now, for the average investor, a good starting point's about 6 years or so. But depending on your risk tolerance and needs for the money, that can shift to a little bit earlier or a little bit later.
Okay, so muni bonds, investment grade corporate bonds make sense for investors. Any other opportunities out there for 2026, do you think?
You know, we think that, well, I'll flip it around a little bit, and I'd be a little bit more cautious on lower rated issuers. So
I want Tesla to reject a little bit so I can leave a break even or some shit.
Just given that spreads are very tight.
And then I'll be at a good day.
We don't have too many major concerns.
I left my
with
Tesla
where
on
credit
Friday
quality
closed,
is
bro.
going,
I fucking should have
but
kept
you're
it
just
into
not
today,
getting
man.
that adequately
It went up
compensated
fucking
for
crazy.
taking on that credit risk. So I'd be a little bit more cautious on that.
It went fucking
And then
crazy.
going back to the investment grade corporate bonds versus muni bonds, one thing that I'd clarify clarify and also point out is the type of an account that you're investing in is also very important, Sam. Given that munis are generally exempt from federal income taxes, it's important that if you're investing in that part of the market, that you're investing in a fully taxable account, such as a brokerage account or something of that nature.
Gotcha. Okay. Great look at where to look in fixed income for 2026. Thanks so much for that. Cooper Howard, Director of Fixed Income Research and Strategy, Schwab Center for Financial Research. Always appreciate your insight.
Yeah, bullshit. Thank you. Thank you. We have President Trump in 1 hour.
Rosenberg Research founder and president David Rosenberg. What message are you getting from the performance of gold and silver, David?
Well, it's one of these almost K-shaped type of developments that we have, not just in the economy but in the markets, that you never would have guessed that gold in particular, because silver of course has industrial applications, but that gold would be up roughly 70%.
Who watched the market update video?
So far,
those that have not watched the market update video,
with the risk on trade,
go watch the market update video, man.
Challenging the highs on the S&P 500, gold up 70%, is one of these anomalies that I imagine will get resolved in 2026. I think the gold story largely is nothing about the economy or the financial markets per se, but just the ongoing rebalancing.
Guys, okay, if you have not watched the market update video, go watch the market update video. We're at 6,900.
U.S. securities, and
we were at 6,950.
So that's, I think, the big story.
50 points.
As far as the economic outlook, David, it's been another story of resilience in the overall economy. And I know that you see cracks below the surface, and you have for a long time now, but are you surprised at how well the consumers held up?
Well, it is surprising, actually. And, I watch all these economists come on
something
various
fucking
shows on
here
CNBC
too.
And just talk about the headline number without talking about how we got to that headline number. So,
big ass.
Let's take the third quarter as a microcosm. I mean, consumer spending in real terms, that was the big upside surprise. Real consumer spending was up at a 3.5% annual rate, which is huge. It's above trend. But we have to ask ourselves the question.
I think it's on a downward channel now.
When
Something
real
like
personal
this.
disposable income growth was zero. I mean, we had no real after-tax income growth, somehow supporting an above-trend 3.5% consumer spending. And, of course, the fallout from that is that the savings rate fell like a hot knife through butter. So the big story for the consumer is that this is not an income-driven story. Real income's actually, in real terms, after tax, after inflation, and after government benefits, has been flat 2 quarters in a row. And you got this consumer spending spurt by virtue of the fact that the
We have it drawn on SPX, so we'll see.
Precipitously, and that's part and parcel of, again, another form of the K-shape, which is the high-end consumer. That's all part of the equity wealth effect on spending. We have, like we saw in the late 1990s, a huge equity wealth effect on spending that's overtaken the fact that real income growth is actually stagnated 2 quarters in a row. That doesn't get enough play.
I don't know. I don't want to have this drawn anymore, but yeah. Previous low today turned into resistance and or support. Acting strong.
Good morning and welcome to Opening Bid. I'm Yahoo Finance Executive Editor Brian Sazi, and you thought the stock market was closed this week because of the New Year holiday newsflash. It's not. That's why I'm here. So here's what's on my mind right now. If we fired up this morning, all things industrial metals. Set the scene for us. What are investors seeing?
Yeah, look, with the industrial metals, investors are seeing that there is this talk about demand when it comes to silver, when it comes to copper, when it comes to the industrial uses of these metals. And you even had Elon Musk over the weekend tweeting about the industrial uses for silver. There's been a lot of concern about silver because it was put on the critical minerals list in the U.S., and also China is going to be restricting exports of silver starting in January. And this was announced back in October. You've seen silver prices that have been steadily going higher and higher, going parabolic. On Friday, silver going up by more than $10 in one session. It also was in backwardation. That means the spot price for silver, the silver delivered immediately, was higher than the futures price for silver. So that's causing a huge amount of concern about the market and the tightness and the supply tightness that you're talking about, that traders have been talking about when it comes to silver. Yet it is a very parabolic move. It is a move that is very fast, very quickly, and you have had some strategists warning about this move because both silver, by the way, and gold are on pace for their best year since 1979. And back then, when you saw these types of parabolic moves, you saw a peak in 1980, and then you saw the metals crashing afterwards. So there are strategists that are saying, take profits, watch out with this fast move that you've seen in these metals, in the metals market.
Adam, good to see you here this morning. Let me get you into this precious metals debate. Do you go in there? Do you enter the bubble? Do you just close your eyes and just pray and hope for the best? Or do you follow some of this cautiousness that Nez is talking about?
Well, I think you got to separate a few different things here. You know, some of the moves in gold and silver kind of behind it are driven a lot by what's happening with the U.S. dollar.
No cycle bounce allowed at all. It's kind of terrifying.
You got more than one factor.
It's kind of terrifying.
And now with some of the more industrial metals, I think you want to stay in there. I think, you know, when you're looking at
every single
the AI
cycle
trade,
rejecting.
I agree with kind of how you started that trade isn't fading as a whole. There are obviously certain names and pockets that are, but for us, what we're looking at are just that. Just what are the components within the supply chain, or just overall within AI that kind of can benefit from the growth in AI, because I don't think anyone is really denying that AI is a real thing that's here to stay. It's just who are going to be the winners and losers. And so, when you're looking at industrial metals that play a part, like copper, we still like
President
that. Now,
is going live with the Prime Minister of Israel,
have some
Benjamin Netanyahu,
correlation
to speak
to
about
the
the
AI
Gaza
trade,
press,
but I would argue it
Gaza
has more to
peace
do with Fed policy, dollar policy. So that's the
that will be
area
the
that I'd be a
major
little bit more
news
cautious.
catalyst
Adam,
of
what's
the day
best
for us at 1
course of
p.m.
action for the average
Eastern
investor?
Standard
Do they waste
Time.
the whole day trying to find the next big play in AI, or do they just say, you know what, Nvidia's going to win this whole damn thing?
Prime
I'm just going to
Minister
bet on them again next year.
Benjamin Netanyahu and President
Nvidia.
Donald
I think you do need to do your homework if you want to buy specific names. I think probably the general investor is probably better finding some sort of basket to kind of play the overall space. But we're very early innings in this, and obviously Nvidia is the winner right now. But to say, in 5 years that we look back that they're going to be the dominant player still, very, very unlikely. Like I said, this is really an evolving space. So I would be careful with something that's so specific as Nvidia. We kind of like to barbell this with something like the big hyperscaler, like an Alphabet, Google, because that's really the type of name that you could probably have a little bit more comfort in, because they just overall the AI story is just benefiting an already existing business model that was doing well. So
Now with a look at the markets is Paul Hickey, Bespoke Investment Group co-founder. Paul, good to see you.
Good to be here, Mike.
Point to point, 2025 doesn't look so unusual, right? It's a bull market year. We're up almost 20%. That's kind of more common than being down or being even up less than 10%. The path was very unique, though, or somewhat unique. Looking ahead to next year, I mean, how do you build your expectations and tendencies and give us a sense of what we should expect?
You know, I think,
first the lessons, if you look back at the year,
another hedge fund
there was so much consensus coming at the end of last year that we were going to see,
look at that.
Great growth.
Look at the news saying all this.
And then suddenly we saw the tariff talk coming on, and which sort of derailed things. And then by April, we're looking at the certainty of an election, of a recession was over 60% in early April through early May. And the question, you would hear on the news, empty store shelves in the summer. And then at the same time, the market, though, was rallying, historic turnaround. So I think to expect the unexpected. Coming into this year, we're positioned positively for the year ahead, but nobody knows what's going to happen by, let alone by the end of January, let alone by the end of the year. But so on the negative side of things, what you tend to look for early on in bull markets,
so short term too. You're just pumping the fuck out of bullish news.
Selling off on good news. We've started to see some of that in some large cap stocks this year. We saw it in Oracle in September. We saw it in Nvidia in November when it sort of almost saved the market with its earnings report and then quickly sold off. And then we saw it again with Broadcom earnings. So that's something to watch for. But I think the pros outweigh the cons much more, I think. So the economy is doing well. All the concerns over the economy never materialize. So we're seeing the economy do good. Inflation is above where the Fed wants it to be, but it's also declining. We saw a 4-year low in inflation, but it's still above target. If you look back historically, you saw that in the 70s, but you also saw it in the 80s and throughout almost all of the 90s. And those were the 80s and 90s were pretty good times to be invested in the stock market. So as long as you have inflation, I think, under control and steady, I think the stock market can do very well.
I mean, the markets really have not been on inflation alert for a year, basically, right? I mean, in terms of how they're pricing future inflation, in terms of how they're reacting to
right,
the
but you constantly hear commentary saying inflation, we're going to get a new leg higher, and it never materializes it. And you get back to all the talk about the bubble in the market. Well, okay, is there a bubble in the Nasdaq?
I'm adding into Tesla.
The bear market lows in October 2022.
Getting a new price level up here, though.
30%. Well, gold's up 170%, platinum's up 180%, and platinum and silver's
January
up 300%. So if there's a bubble anywhere, I think it's in some of these precious metal stocks, which have vastly outperformed the broader market.
Three kind of structural forces that are also providing a nice tailwind for the equity markets are the dollar, oil, and 10-year, which have...
I'm in 4.75K and 470
we call those are the three-headed monster. And when all of those are rising in unison, it's usually a big headwind for the market, and the market has trouble advancing. When they're all falling or near 52-week lows like they are now, it's like they're rolling out the red carpet for equities. You look historically, when you've seen periods when all three have simultaneously been at the low end of their 52-week range, the forward outlook for the market has been very strong. And so I think in that respect, it's a positive sign to look at. And then going back to the comparison, we've been bringing it up for over 2 years now, the comparison with ChatGPT and Netscape, the launch of Netscape in the early 90s. And the NASDAQ's has tracked it almost step for step over the last 3 years. 767 trading days after the launch of Netscape, the NASDAQ was up 114%. It's up 111% over this current period. Every time we bring it up, people laugh at us, and I hope they keep laughing at us because the market has continued to defy to defy the conventional wisdom and track that performance.
I'm fucking feeling it on fucking
the
Tesla.
Launch of Netscape, the product, not the idea.
Yeah, the launch of Netscape, the product, because the launch of Netscape, the product, was what brought the internet to mainstream.
This shit. Let's see how it opens tomorrow.
Members of the Magnificent Seven are no longer trading as a team, and the gaps could widen in 2026. Mackenzie Sigalos joins us now with more. Hey, Mac.
Hey, Leslie. This was the year the market stopped trading the Mag 7 as a monolith and started separating winners from losers based on who can actually monetize their AI bets. Let's start with the winners. Alphabet, with a 60 percentage point lead, has street cred across the stack. Its AI chip, cloud distribution, and then its LLM Gemini. It has been topping key benchmark tests. Nvidia is up more than 40% and now the world's most valuable public company because it remains the backbone of this year's record-breaking data center build-out. Now to the laggards. Amazon still has the biggest cloud business, but AWS is growing more slowly than Azure and Google Cloud. The bet is that its in-house AI chip Trainium wins on cost, but adoption hasn't matched the momentum that investors see in Google's custom chip ecosystem. Now, unlike its hyperscaler peers, Meta does not have a cloud service and lacks a clear revenue story tied to its AI investment.
The bulls are kind of fucked.
Ads, better targeting, better performance, but that's a harder ROI story for the market to underwrite. And then there's Apple. It's largely been sitting out the infrastructure battle, betting that distribution wins by owning where consumers actually use AI. And it may be near the bottom now, but if model quality keeps converging, distribution could matter a lot more than who trained the best LLM. Guys?
So then, Mac, you think the gap will widen into next year. Why is that? What is kind of priority number one for the market to see from each of these next year that could kind of cause that fracture to extend even further?
It all has to do with the CapEx spend. It topped $400 billion for the top hyperscalers this year. 75% of that will go into AI infrastructure build next year. It's going to top $600 billion, according to some estimates. And you've got Apple at the other end of the spectrum spending around $3 billion in its most recent quarter. And what that points to is that if they're going to be spending at this magnitude and taking on a lot of debt to facilitate that build, they're going to want to see a return there. And that's why Google is outperforming, because of the fact that it has a really competitive cloud business that's coming up. People are very excited about its chip program. So that spend seems worth it when they're landing new cloud contracts with the likes of Meta and Anthropic, whereas you're looking at forward projections of revenue, and you've got Amazon lagging Microsoft there. So Azure's got a $400 billion future performance obligation lineup versus $200 billion for Amazon. That shows where enterprises are betting.
Right. Just a greater microscope, again, on that ROI component. Thank you, Mackenzie. Appreciate it.
LOD about to break again on SPY. LOD is testing on IWM. 11 a.m. LOD. If this thing flips, wind direction is still south on IWM.
For more on this and who knows what else, let's bring in.
Oh no. Something.
Israeli Prime Minister Benjamin Netanyahu expected to meet with President Trump today at Mar-a-Lago to discuss next steps for peace in Gaza as the ceasefire agreement between Israel and Hamas shows some signs of strain. Israel condemning delays in Hamas's return of hostages, while Gaza's health ministry says Israel has killed nearly 400 Palestinians since the ceasefire went into effect.
What an amazing day today. Look at this on QQQ. The cycle on the channel, the 9:30 a.m. algo range, all day use. Why? Because the market is fucking over candle traders, that's why.
I'm not sure what the status of
market
that is.
Fucking over candle traders, because this is the setup.
Well, when it comes to Gaza and the Middle East more broadly, Sarah, it's probably a good idea to keep your expectations extremely low.
What an unbelievable
Hamas
day.
is not going to disarm, and there would be no way to verify it if they did. They could hand over 1,000 rifles tomorrow, but you wouldn't know if they had 2,000 more stored someplace. They have no real political competition yet in Gaza. So at best, this is a very uneasy, limited ceasefire, really more of a hostage return and prisoner exchange. And I just don't see at the moment the prerequisites for moving forward between Israel and Hamas.
So what do you think comes of the meeting today? Anything?
Well, my guess is the Israelis are going to want more of the meeting not to be about Gaza. Well, they'll continue to emphasize the need simply to get Hamas to disarm, which again is unlikely to happen. My guess is they're going to want to change the focus to Iran. Israel's worried not so much about Iran's nuclear capability, which was set back dramatically over the last year, so much as their missile capability, ballistic missiles and the like. So they're going to basically want something of a green light to attack.
Does it really bounce
Another
again?
question, which I don't know if it's going to be raised, but it should. It also deals with the Palestinians, Sarah. It's what happens in the West Bank.
12-10.
3 out of 5 Palestinians don't live in Gaza. They live in the West Bank. And what you have there is a kind of creeping annexation by Israel, where settlements are being built and expanded and so forth. So if this administration has any hopes down the road for quote-unquote peace in the Middle East, it has got to do something about slowing down or stopping this Israeli process of changing the face of the West Bank.
I mean, the bigger picture here, Richard, is that Trump's trying to get other Arab nations to join the Abraham Accords, which have been transformational and have held up through October 7th and through the war in Gaza. What is the status of that, particularly Saudi Arabia, which I think is one that the president has explicitly said, and so has the Prime Minister Netanyahu, would be incredible if they could achieve?
No, you're absolutely right. Saudi Arabia is the crown jewel, given its wealth, given its size, given its position, its unique position, not just in the Arab world, but the Islamic world. The problem is, after what you might describe as October 8th, after the Israeli response to October 7th, Saudi public opinion has dramatically changed, and even someone as in control as the Crown Prince, who was recently in Washington, basically says, I am not free to normalize relations with Israel until there's real, meaningful, visible progress towards a Palestinian state. And there's not going to be that progress. So I think the Israeli-Saudi relationship will remain limited, a little bit under the table, perhaps some intelligence cooperation and the like, but there's not going to be anything public anytime soon.
Take a look at futures this morning on the final trading week of the year. Right now, we've got futures pointing slightly lower. The
Fed will have at least one cut in 2026.
Nearing the 7,000 level and tracking an 8th straight monthly gain. All 3 major indices posting double-digit gains for the year, led by AI. Strong economic growth and, of course, 3 consecutive Fed rate cuts. The Nasdaq surging over 22%. The Dow up 15%. The S&P 500 has jumped 18%. Let's bring in market rebellion.
That's one hell of a stat right there. 20%.
We want to keep this party going. What is your outlook for next year?
I'm very bullish about next year. You know, when you look across what really has transpired over this past year, yes, we had those huge bumps, some volatility, especially when you go all the way back to April, which we want to kind of forget about that one. But I think that the reality is that when we really look at where the volatility itself has been within the market, you look at the VIX itself, it's well down there. I mean, we're talking about somewhere close to, call it 15 to 16 has been the area where we've seen the most. Now, we've had some spikes, absolutely. We've had some jolts into the market, but I'm looking at this market right now. I see strength, it seems like almost everywhere, because the pieces of the puzzle that are fitting in right now from different parts of the world, I think
they just broke the LOD too. What if they go for 5, 10 minutes, 15 minutes easily? They could go divergence clear on QQQ. They could be like, fuck it, we going lower. All right, wind direction south, fuck it, wind direction south, and then they can go a little bit lower than there too.
I think that there's still some room to the upside, and that's what the options world, my world, is telling me right now, is that they continue to buy upside calls, and that tells me that somebody out there still thinks there's room to the upside.
Interesting. No, and I know that I've got Lou Bassanies on set with me, and Lou, you also echo
Lazzie, they're going lower. 2 hours.
Yeah, Pete, I'm similar to you. I see all the setup strength across the market, even in areas and sectors that we didn't have it or expected, like biotech rallying back this year. I'm curious, as you look out at 2026, look back a little bit and say, hey, Google, unexpected trade, worked out really well. Healthcare starting to work. Is there something in the options market right now that you're seeing that suggests we could see a rally in an unexpected sector, maybe in energy, because it's the lowest weighted
just started in the 4 hour just started.
We haven't really seen in the options world, at least, we haven't seen a whole lot of energy being a part of this whole thing, but certainly technology. To your point, you look at Google, that's one of my very favorites. And by the way, when you look at Micron Technology from just the other day, when we've had earnings have kind of saved the day. When we start to kind of get a little bit weaker, the markets start getting sold off a little bit. Something always seems to be the trigger in the earnings. And when you go across the earnings throughout this year, they've been pretty outstanding. And most recently, how about the savior of Micron just the other day? I mean, that was just about a week and a half ago. That was unbelievable. When you look at the revenue up 57%, the earnings were up. They crushed it on the earnings side. Gross margins were 65%. I mean, we look at some of these numbers and they're just extraordinary. And I'd even say the same thing about Google and what they've been able to do. It's been incredible. And they're starting to make some pretty big moves on this OpenAI with Gemini 3. A lot of support behind that as well, that they might be surpassing. And you look at those numbers that they put up just the other day. It was not that long ago, I should say. The earnings there, the growth is there, absolutely. The cloud growth, even search is still growing at 15%. Revenue was up 16%. These are names that have been around for a long time. This isn't just this AI world. This is more than that, but I'm very impressed with what's been going on, transpiring over the last quarter.
Interesting. Very interesting perspective, especially on that stock from you. Let's look at yields this morning, the 2 and the 10, because the countdown is on. President Trump is closing in on his pick for the next Fed chair. There's an announcement expected as soon as early January. We shall see. But according to reports, the president has narrowed the list to 4. Kevin Hassett, Kevin Warsh, Christopher Waller, and BlackRock executive Rick Rieder. All of these picks are seen as more prone to lower interest rates, to cut rates. Bank of America CEO Brian Moynihan is warning that markets will punish any move that undermines, the Fed's independence, saying that confidence in the central bank is critical for financial stability. So what do you make of those comments from Brian Moynihan about Fed independence, and that markets would not be happy if they perceive the next Fed chair to be someone that would be more amenable to what the administration wants versus what maybe Wall Street wants?
I think even though we're looking at this from the perspective that we are, and we're looking at this as friendships with the president, I think that they can separate that out a little bit, and that's where I think this really could go.
This shit has to fucking
do it now. January happening. I think we do get out to March.
Time is 12:20.
But you know,
let me stretch a little bit, guys. I gotta get my blood flowing to my legs.
If that's really the truth, and I think that it is, but if it's really the truth, we're going to see exactly what happens with some of these potential cuts. Right now, I would say we're in for at least one cut, I think, in the first couple of months of the year, but I don't know that it's something that we're just going to pound and pound and pound against that. So whether it's Hassett or Rieder or whomever, Waller, I think that they understand that. There's friendships, of course, with the president, but outside of that, these are also businessmen who understand what's going on, and they know when they're going to have to make some of these moves based upon the data, hopefully.
You think we're going to get a cut before April?
All up to IWM.
I do. I think on the March, I think we're going to see a cut there. I mean, that's the highest potential, at least right now, according to the CME tool. That one seems to be where we're leaning right now, is March, the highest possibility of that. And so that's why I'm going along with that. But like we've talked about, it is data driven, supposedly. So if that's the case, we're going to have to wait and see.
Pete Najarian, it's always great to speak with you. Thank you so much for being with us this morning. Happy New Year.
All right, I have to put my hoodie on. It is so cold. Barely any volume on SPY. QQQ. It's IWM doing its thing.
To me now, Steve, do you agree with Mr. Moynihan? What do you say?
I think the real question is not so much the independence of the Fed. There will always be around. Presidents are always fighting with the Federal Reserve. This president is a little more flamboyant about it than previous presidents. But the fact of the matter is, the real question is, how is the Fed operating? what is their premise? And their premise right now is that prosperity causes inflation.
Yeah, what David said, but David, what you said is what the majority in the world thought. So, you know, how the market works is they use cycle and time to just trap people, bulls and bears, and they use cycle and momentum and volume to what?
And that bodes ill for the future of inflation. What the Fed should focus on is a stable value for the dollar instead of trying to manipulate the economy. So hopefully the next Fed head will get the Federal Reserve back to real central banking, stable dollar.
It was a big short today, brother. 690.
All right, next one for you, Steve. Republican strategist Karl Rove says the Trump administration needs to start talking about their accomplishments if they want to do well in the midterms. Listen to this.
He needs to lower
if you look
the
at
expectations.
It too, that's like the 0.5 tip too before
and
they
over-deliver.
You know,
Under-promise and over-deliver ought to be the goal of the next year. It's Americans are not feeling that the economy is great, and for him to stand up and say, as he did first in in Pennsylvania a week ago, and then in North Carolina earlier this week, that everything is great, it just doesn't resonate with the felt experience of ordinary American families.
You know, we talked about this last week, Steve, and there's a perception among a growing number of people that the White House isn't doing a good enough job of selling the message, of really driving it home of what's been accomplished and what's ahead. Would you agree with that?
There is very much something to that, and you might say they should practice what you might call proof in the pudding politics. And that is, with the new year here, what the president should be going out and saying is, look at your paychecks, the standard deduction.
On SPY. Divergences. Testing. They're going. Time is 12:25. I don't know what you guys are saying, man. Like, this is literally every single bounce it has rejected, so it's only 12:25. It's literally not even midday. It's midday now, you know what I mean? It literally just every single cycle rejected. It's fucked up, but I mean it's literally what they're doing. It's just divergence at the floor, using as a setup every single cycle and then bouncing with every single possible bounce bouncing. And then breaking the LOD, so I mean like new LOD on IWM. 12:25. This is the new LOD. This is like the 14th floor now. 1, 2, 3, 4, 5, maybe 6th floor. Never broke. Actually, no, it's a lie. It's like floors here, so 1, 2, 3, 4. Maybe this is the 5th, 6th floor. Tesla noise. Time is 12:25. Wind direction is south. It is up to the bears to stop here or not. I think the bears are going to go for the next 5-10 minutes. Why? Because the divergence is right there, and the volume just started on SPY turning south. Divergence is clearing right now. LOD divergence is clearing right now. Into the last minute of 12:25, 12:26. LOD divergence is cleared. God damn. Most likely gonna clear. Every single fucking cycle rejecting. When did I say that? At 12 p.m. Look at the WhatsApp group. At 12 p.m. I said every single cycle rejecting Laugh my fucking ass out. I expect a move during the US and Israel Live 1 p.m. But CNBC's pumping all these hedge fund bullish into 2026 news. You see this? Remember this. I said that at 12:04 p.m. Gotta love this shit, bro. I ain't gonna lie, you gotta love this shit, bro. And when did I join Tesla puts? At 12:05. Right here, 12:05. Fucking love this shit, bro. Cycle, perfect fucking setup, and news coming out to help the setup move the candles to where it needs to.
Welcome back. Some of California's Welcome back. Some of California.
Sorry, I don't want to watch that shit. God damn. SPY, Q going.
The big take story. We love the big take stories that come out every day from Bloomberg News. Deeply sourced, just great, fascinating stories. Really well done. This one goes to Wall Street's balance of power is shifting.
Crazy
big banks
fucking
are roaring
bearish.
back as
Crazy bearish. Look at this shit on QQQ, man. LOD finally broke, and they want to go lower. Where lower? I honestly think they're gonna go fucking stop at 614 somewhere. 613. I think they're gonna go here this week. I don't know about fucking today, but I think they're gonna go there like in 2-3 days, or maybe by tomorrow. 613. It sounds fucking crazy, but you have to realize there's a 1 minute gap down there. There's a reason why they're pushing down crazy right now. Just like when they pushed up crazy to go fill the gap at 6,900. There's a fucking 1 minute gap they're targeting. It's 15 points down south into tomorrow. I think they're gonna do it. They're so crazy. Look at this fucking look at this candle coming in crazy. Look at how fucking close it is. 6,876. Where is this 1 minute gap? You have to go look all the way fucking back. All the way back to last week. Last week, Tuesday, December 23rd. On Wednesday, Thursday, Friday. This gap is I'm pretty sure it's the QQQ or IWM gap or something. The same gap exists. They're so crazy, dude. Oh my God. Look at this beautiful ass cycle today on IWM. When, dude, the 15 or 20 people that were here from like 9:25 to 9:30 saw all these charts. They saw everything. We talked about how we were at the 0.5 Fibonacci, and I said, hey, we gotta watch what happens in the 5 and 15 minute, and that's the momentum, the direction, deciding why. We're literally at the halfway mark, from the floor to the roof, and now we played with the 0.5 point with the 0.618, and now we are at the floor. 248, 249. Now the game is something here. Previous low of the day turned into resistance and or support. Tesla, previous algo range is coming into play. Best believe this is what Dr. Barry and Kathy Wood's doing on a daily basis. Best believe this is what best believe this is probably what Warren Buffett did 40 years ago when he was young doing his shit. He was probably a smart money deductor doing his shit in his own systematic mechanical belief that he had in the systematic things that existed back in the day. But best believe it did exist. I believe in it, so best believe. Man, that's so crazy. This has to be some crazy ass smart money deducting shit that has been existing for years. Like, just now it's digital. Now there's a fuck ton of liquidity. And people ask what it is that I'm talking about, but it's just everything combined. Like, just, you gotta just make up your own mechanical systematic thing that makes sense. A mechanical systematic approach that makes you emotionally unbiased, that makes you not biased on bears or bulls, that just makes you a setup deductor. That's all it is. The world is setup versus speculators on a daily basis. It is not a 2 out of 10 days thing. It is not a 8 out of 10 days it'll be bullish. So no, it's not that type of shit at all. It's actually just they get people going, they get people cooking on bull and bear, they give them good runs for a day or two, sure, and then they fucking do some setup, and then they get caught at the tippity top, not knowing what cycle, not knowing what setup, not knowing what's going on, not caring about nothing else other than candles, just saying bullish, 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 or bearish, 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 or bullish, 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 or bearish, 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 not giving about nothing else, and just getting fucked on by setups. Setups meaning higher time frame. Setups meaning things that have been existing for a month, not even last week, the week before that, or the week before that, but literally all of December into December. Things that have been existing on Nvidia for 2 months, right? Since when? The top of October. Then things that have been existing on Tesla since when? December 15th. That's 15 days ago, 2 weeks ago. Okay? I'm just saying, there's some channels out there that feed fucking bullshit, but they don't really care about nothing that really happens in the market, which is true setup, because they're faking it till they're making it, and they're faking it is fucking sickening is what I'm trying to say. It's like true bullshit. It's like no real trading. It's like actually candle, FOMO. Sick.
We are expecting more breadth for the market. I feel like we've all been saying that for a number of years now, but that does kind of change the dynamic. If we don't have this massive tech-led rally.
Someone said, oh, is metals pulling back doing something to the market, right? And look at what the news is saying. Tech drags U.S. stocks as silver turns violent. So
the 20%
volatile.
Is
I mean, when gold goes, market went together sometimes, right? And now
I think we see kind of three key themes next year. One is going to be AI productivity. So actually, companies
now they're calling it risk off,
risk aversion. Activities into their operations, finding that operation efficiency. We do see quality improvement, and like I mentioned, we do see earnings breadth. So that's focusing more on kind of the industrial rather than the consumer cyclical specifically, and that would be kind of our third major theme for next year.
How about if this AI thing isn't a thing? I'm of the camp saying, I think the biggest risk out there is just we realize that AI isn't all we thought it was going to be. And it's been the driver of return for the past 3 years.
This is the previous low that they turned into resistance. This is the previous low that they turned into resistance. I'm just not marking it. This is the previous low that they turned into resistance at 1225. I'm just not marking it.
I mean, I think there was a point in 2023
That's the reason why
when we were all looking
most
at this
likely
saying,
bouncing
is
to
this the
here
second
and
coming
doing
of the
some sort of
internet,
cycle
or
on
is
floor
this
too.
self-checkout at the
not
grocery store?
marking it.
I think we're definitely closer at least to kind of seeing the
they're blaming this shit on tech, and it's not even tech that's going lower. It's literally SPY now.
Kind of flow through to the actual consumer.
It's IWM
SPY
going way more lower than
what do you do with commodities in
on the chart
2026?
wise
Do you
from where
jump
it
into the
started
party?
at
Is there a little bit of FOMO? Do you take a step back?
I guess started off with the pre-market.
We were high on gold miners earlier this year.
QQQ is down
We are seeing
0.76%.
interesting stuff
SPY is
within
down
kind of the equity space around
0.58%.
materials and industrials.
So
as I
maybe
mentioned,
SPY and
we're more
IWM's going down a little bit more right now to catch up to QQQ.
And specifically if we
does that make more sense?
I think both are seeing.
I actually think that makes more sense if you do the numerical math, because the pre-market technologies was like what? Right, Nvidia was down 1%. Oracle and Tesla was down 2% before everything started. So, or they were saying so QQQ was down way more, and then now SPY and IWM is down more than QQQ
increases
in the daily chart, so intraday chart.
That to me is positive.
So now they're basically like quote unquote more aligned than not, if that makes sense.
Next year, that is 10% earnings growth expectations,
that's how that,
slightly above for those two sectors. On the flip side, for the consumer spaces, we're seeing earnings growth expectations widen out significantly. but the actual margin expectations are for sub, 60 basis points of margin increases.
We cleared the divergence into
kind of expansion in earnings,
12,
which is far more difficult to achieve
Smart money
in this coming year.
Could show
so we
another bearish cycle. Smart money could show bearishness, but if the cycle starts building
and perform well this year,
and they start fucking
Sean,
building and going,
really solid
maybe
earnings here in 2025.
they're preparing to cook.
About the second
There's
quarter, the third
finally
quarter.
after the divergence clears.
Out there for
but
26, enough to support this market?
I can't
so
really
we're
say that
pretty
until the
close
cycle
to in
comes.
line with
Something happens.
Consensus expectations, and that's close to a 15% growth
Sure,
for the
it could
S&P
happen.
500 as a
Where's
whole.
that coming
I would more likely
You know,
say it's
it's
50-50
So
because I'm
earnings
hoping on
revisions
Tesla to
this year
reject here
have been one of
too.
the things that
And it
probably
could keep
surprised
rejecting.
me
It
most.
could
When
bounce
we
and bear
get,
trap everybody here too, sure. But I mean, now
kind
this
of
is turning
aggregate
into
beat in
an
Q3,
entire day
and we're not seeing
being
earnings
1/3,
revisions
2/3,
positive.
3/3.
There's a gap being built there.
Right,
Now,
we're going
we
to draw the
didn't
smaller
necessarily see
cycles, but if you
performance
draw the
that
bigger
drastically
cycles,
different than
if you draw
historical.
the larger cycles above the medium cycles and draw the medium cycles above the smaller cycles, right, which is how the market works. You draw the daily cycles on top of the weekly cycles, and you draw the weekly cycles on top of the monthly, and the monthly,
what we categorize as
blah, blah,
Tech
blah.
Plus, and the Big Six,
Then
both
you would
in
see
line with
cycle confirmation,
about 20%
right?
or 21%
What happened? Bull
growth.
trap,
That's
bear
the
trap,
closest those two have been
bull
over
trap,
the past couple years. So we are starting to see that
bull
earnings
trap.
breadth within the tech space.
So
But we're also
bull trap,
seeing kind
bear
of more
trap,
positives
bull trap,
and really
then
the
running
lack
down.
of a negative when it comes to the
So
rest of the market. So at
bull
this
trap.
point in time, the next year
It's a
normally
bearish
would have
days.
been
One
revised down
direction
around
or going
3%,
south,
just looking at a
full on.
historical average. Right now, they're just
using
above
shit to
flat,
slow it
maybe
down,
call it
using
50
shit to
basis
do
points.
something,
That
then-
lack of a negative is theoretically a positive, but we're really not seeing earning
Where do we go?
revisions on that
This
space
trend line
yet.
that we formed at the bottom
I
of
feel like
today,
I've been
and we
saying
broke
yet for
down
a few
finally.
Right. Well, how are you thinking about equities outside the U.S. and how much of that should be part of the portfolio?
Yeah,
This
I
is
mean,
what's going on.
we're still positive on European equities.
Clearly,
I know
this is what's going on. I
European
marked
banks
this shit earlier
specifically,
because I thought it was
European
going to go there.
financials is,
Right? I
kind
said
of a key
LOD coming
positive
when
for
earlier,
us.
right?
Jerry Fowler
Because I
has
thought it was
written
going to
a
go
lot
earlier. I
about
thought it
that
was going to
this
go
year.
here. But they
And he
didn't.
does
They didn't.
believe
And
that
where
Europe is
why?
going to
Because
kind of
IW
come
went.
back into the spotlight this year.
Chop, chop,
So
chop, chop,
definitely
chop,
part.
chop, chop at the
So
0.618.
what's screening well for you guys these days?
Thank you
Is
so
it a-
much.
is
That
it
said,
a
hit the like button.
sector,
Shiv
an
Yoshi,
industry,
thank
a
you so
factor?
much,
What's
man.
screening well for you
Everybody,
guys?
please
So
do
I feel
hit
like I
that
keep kind
thumbs
of
up on the
emphasizing the
live
margins
stream.
point. That is
Please,
definitely
please.
something we're keeping
So that
an
new
eye
people
on.
can find the channel.
We want to
right?
see
I
these
please implore you to
efficiencies. We put together a lot of work on
like
kind
button
of
so that
looking
people
at
can
sales per
find the channel.
employee,
Thank you so
these kind
much.
of classical
I'm at
metrics for
5.2K on
operational
Tesla
efficiencies,
puts.
and
I
really
joined in
looking
at
at where we're not
12:05.
getting margin volatility.
470 expiring Friday.
That continue.
Still in.
That's part of our overall quality.
I have my
thesis.
shit
We
puts
think the
on
rotation
Tesla that are
back into
stuck,
higher quality
really
is
stuck.
coming this
Unless
year.
they come down to like
That's probably one of our
463
most
today, 462.
preferred
But I'm not
factors.
expecting them
And
to.
then of course the
I'm
hedge
actually
factor,
expecting
which
them
I think we talked about last time I
to
was
trap
on here,
those
but
shit
that kind
once
of
that leads into
valuation
tomorrow.
for growth.
If they are bearish tomorrow on the
you know,
one
if we
day,
look at the
which they
spectrum
are,
valuations
then
are at extreme,
we'll
but
open
we're
lower tomorrow,
delivering
which
from
I'll
a
get the fuck
margin
out.
and
If
an
not,
earnings growth perspective,
then
where
I
those
lose
valuations are
on the
elevated. So
shit
those two things kind
contracts,
of go
but I
hand
mean,
in hand, and
then
we really want to keep an eye
it is what
on,
it is. But it's
you know,
kind
who's
of down
delivering.
bad right now already, unless they go down low today because they went and up and data burned the fuck out of it from so fucking low. 462.5, I think I got in it, and this literally went to 469.
Joining us here at Post 9, founder and CEO of Cato Network, Shlomo Kramer, also one of the founders of Checkpoint.
Trump is coming live
another big
in 10
cyber
minutes.
company. Shlomo, it's great to have
President
you here.
Trump,
Welcome.
thank you for the Prime Minister.
How is AI, cyber warfare, shaping geopolitics right
So
now?
AI is going to revolutionize cyber warfare, is revolutionize cyber warfare from critical infrastructure to the fabric of society and politics and undermining it, giving unfair advantage to authoritarian governments against democratic countries. First Amendment type of...
That's already happening?
That's already happening. You're seeing the polarization in countries that allow for the First Amendment and protect it, which is great. And I know it's it's difficult to hear, but it's time to limit the First Amendment in order to protect it. And quickly before it's too late.
What do you mean?
I mean that we need to control the platforms. All the social platforms.
So
we need to stack rank the authenticity of every person that
Arabic, French.
expresses themselves online, and take control over what they are saying based on that ranking.
The government.
The government should
control the social media.
Yeah, should do that. And we need to educate people against lies, and government need to develop cyber defense programs that are as sophisticated as the cyber attack. Today it's a 1 to 100 ratio. And really, government are not
cyber
doing
warfare
this,
is scary stuff. I don't know if you guys seen those pictures from. I saw a picture from, or a supposed picture from Ukraine 2 days ago.
Much faster than the political
But it's like
system typically can.
wires, fiber optic cables being laid across just towns of Ukraine, and you just see just lines and lines above power lines. It's sick.
Right. I mean, I can go on Instagram or TikTok, and frankly,
it literally looks like something out of Terminator.
Unclear what is
World War
and
III,
what is real.
like, bro,
exactly.
And once you
that is scary stuff to
eliminate that ability to discern truth from fiction, then what are you left with?
You're left with polarization of society.
Drone stuff, drone warfare.
And you have to control that. And you see that already happening across the world. So this is
apparently it's like fiber optic cables being used on drones,
enterprises are
like
buying
plastic fiber optic cables
more
being used on drones, and they don't even dispose of them. They just
afford all these solutions by themselves. So they are looking for ways to deliver a more efficient consumption.
And I assume you have some of those ways, obviously.
Right. So, and that drives really the next generation of companies such as Wiz, CrowdStrike, Cato networks on the network that are platforms and are able to deliver this extended need for security in an affordable way for enterprises.
For enterprises,
right.
Not for governments.
Not for government, but government need to start building their programs. And the same tools can be used also by government.
But the two leaders in AI, one is China, which obviously already is using AI to
control the population.
And here we're all out in a race with China. And so we're not as interested in regulation right now, certainly not at the state level, for example.
And that's a big mistake. Because
we got a whole ass steak knife forming on
QQQ. That protects its inner stability. And the U.S. has
butter
multiple
knife, whatever knife
multiple
forming
narratives. It puts them in an unfair advantage that long-term is going to cost the stability of the nation. So changes must be made.
SoftBank announcing a deal in the data center space today. Christina Partsinevelos has the details in today's Tech Check segment. Christina.
Sarah, like you mentioned, they're buying a data center firm called Digital Bridge for $4 billion. That's $16 a share, all cash. The stock, you can see, jumping almost 10% today on the news. Digital Bridge manages about $108 billion worth of data center assets. And this deal is basically SoftBank's founder, Masayoshi Son, saying, quote, I need an AI infrastructure and I need it now. That's to your impatient comment, Sarah, before the commercial. And so Son recently sold nearly $6 billion worth of Nvidia stock to free up cash for AI infrastructure spending. At a forum in Tokyo at the end of November, Son said he was, quote, crying about having to sell his Nvidia stake. That's how badly he wants to own physical data center infrastructure at the layer level. He's liquidating his chip exposure to buy the data centers that house the chips. Remember, Son already announced this massive $500 billion data center project called Stargate with OpenAI and Oracle earlier this year, but that's been moving more slowly than expected. So instead of waiting around to build new facilities, SoftBank's just buying what already exists. And SoftBank's far from alone. BlackRock and Microsoft are closing a $40 billion deal for aligned data centers. That'll be the biggest data center acquisition ever. Blackstone bought AirTrunk for roughly $16 billion. That's Asia Pacific's largest hyperscaler data center provider. Google just grabbed data center provider Intersect for nearly $5 billion. Amazon even bought a nuclear-powered data center in Pennsylvania for $650 million. So what's driving all of this? AI needs enormous amount of computing power. Building new data centers takes years. There's tons of red tape. You got to get the labor. So everyone's just scrambling to lock up existing capacity before someone else does. It's basically a land grab, except the land is server space, Sarah.
Christina, ostensibly, though, these data centers already at Digital Bridge have tenants that are using the compute that's already there. I'm just trying to fully understand what it is that SoftBank is, getting out of it, other than obviously a return from the leases that are in place at Digital Bridge.
So you could say that it's the return for the shorter frame of these leases, but then after that they would gain access to any type of leases that are, let's say, between 5 years or less. So it's an opportunity for them to get that capacity. And if you're saying 5 years, well, that's a far time away. Stargate is still, trying to get its footing off the ground. Micron's another example where they had promised to build these AI infrastructures in Clay, New York, and from the time they first announced it to when they're actually going to be done, it's a 10-year period. So there's been so many delays. So perhaps this is just a way for them to solidify more capacity, even if it's just 5 years away after many of these licenses and deals with current tenants expire. But that's just one guess.
Right. No, that makes sense. That makes sense. And obviously, they have a huge commitment to OpenAI as well. You've mentioned Stargate, but when it comes to sort of capital going out from SoftBank, they still got a lot more to go to OpenAI as well to help, again, to build the compute.
Well, SoftBank and many other companies have a lot more to go to OpenAI, right? All of those promises that some are, should I say, half-baked with AMD and Nvidia, making these promises, but none of them are actually set in stone in concrete contracts.
Oh, sorry guys, my mic was muted. Sorry folks, my mic was muted. Guys, let's try to keep the chat to like economy related.
I hope you
as
had
much as
a
possible.
very Merry Christmas. Welcome to Barron's Roundtable, where we get behind the headlines and prepare you for the week ahead. I'm Jack Otter. Coming up, Barron's has dropped its top stock picks for the new year. Which companies made the cut and why? Plus, how we beat the market in 2025.
AI trade is getting more complicated.
And what surprises might lie ahead for the markets in 2026. On the Barron's Roundtable, my colleagues Ben Levison, Megan Leonard, and Andrew Barry.
Right. What did they do? They brought up the market with Tesla. Now Tesla going lower, and what's going higher? Google.
Expectations. That's all built in.
You can't even make this shit up. Some things go higher, some things go lower, some things go higher, the next thing goes higher, the next thing goes lower.
After 3 years
very,
of
very
fantastic,
confusing.
Gains,
Super
I think we
changing.
get a down year in 2026. Not a bad one. Maybe a couple of percentage points. It's a couple things. One is that the AI trade is getting more complicated. It's not this monolithic thing that can just keep pushing stocks higher. And then you have the Fed. The Fed may raise rates or may cut rates again. It may not. It's just hard to know exactly.
It's
what's
actually
gonna
the
go on
best.
or how
Why?
much drama there will be around the
Because
new Fed
setups
chair.
change,
And then finally, it's
like
a midterm
little bit
election
here
year,
and
the
there,
second year
but
of the
SPY and
presidential
QQQ,
cycle
all the
is the
shit
weakest
does
for
is
the
just
stock
candles
market,
come in and tricks the
historically.
fuck
Usually
out
it's
of
4 to 5%. I think you just put all
the
that
candle
together,
traders.
you get a small down year for the S&P 500.
Yeah, and it'd be interesting to see what happens with the midterm elections. I mean, looks
Every
like
day.
the Democrats are going to take the House. Even
How did
Donald
they
Trump
predict
seems
this
to
shit
be
is bullish or
conceding that.
bearish every
It'd be
single
interesting to
day
see
by
what the
just looking at
prospect
shit and
of
being like,
a
oh,
divided
MACD bullish,
government,
bullish,
means
bullish,
for the
bullish, it up.
markets later on in the year.
They
Okay, so
don't
with all this
care
backdrop,
about shit
Ben,
like
what
that
should
either.
investors do? I think you just
Why?
want to diversify away from the S&P 500. So many of the returns there are linked to AI that you might want to have some Europe in there, some emerging markets, some Japan, get some small caps, maybe some healthcare that has been a laggard this year. I think you just want to have other things besides the S&P 500.
All right. You agree, Andrew?
Yeah, I mean, I think also some laggard groups people might want to take a look at include consumer staples like Procter & Gamble and Colgate, as well as the real estate investment trust sector.
Okay, so Andrew, what is going to cause you, say, in the middle of next year, to say, I told you so?
Well, this has been a good year for commodity investments, gold, silver, copper. The one outlier that's not done well is oil. Oil prices now are under $60 a barrel, down around 15%. There's been concern about a glut of oil and a potential peace treaty between Ukraine and Russia next year could mean more Russian oil on the market. So that's been weighing on the oil markets. But I think the long-term outlook for oil is positive in terms of supply, as well as demand keeps growing about a 1% clip every year, despite the electric vehicles and the growth in renewable power.
Okay, so if you drive a great big SUV, this is bad
Brought
news.
it to the
but
floor.
it could be good news if you invest properly.
Ripping back
What are
up
your best
on
ideas?
SPY.
Well, if you're looking for oil stocks, there are a couple big ETFs you can buy. The best known one is the
Does this
XLE,
trap
that's dominated
Tesla?
by Chevron and Exxon, about 40%.
IWM trying
the
already.
XOP,
QQQ.
which is oil and gas exploration ETF. It's a broader one.
Not really on Tesla. It's looking good on Tesla. It's just looking like it's bouncing on SPY and QQQ and maybe IWM.
And the natural gas market, I mean, the outlook is good, partly because of the demand for power from AI and data centers. And if you're looking for gas plays, you have EQT, Expand Energy. If you want to invest like Warren Buffett, his two big stocks that he likes in the oil patch or Chevron and Occidental Petroleum.
All right, and then we'll give a sneak peek at your 10 stocks from the next segment. What's the one oil stock in your picks for the year?
It's the biggest one, ExxonMobil.
Alrighty. We've talked a lot about AI here. Megan, let's do a deeper dive. It was certainly the topic of the year. You've got some thoughts about what's ahead.
I do. It's interesting. We're very optimistic about AI, and I think we have all the reasons to be, but we're too optimistic on the timing of all this. I think we've heard from everyone from Fed policymakers to administrative officials that say, oh gosh, next year, look for the AI boom. We're going to get more efficient. We're going to have companies, doubling down on their profit margins. Labor costs are going to get slashed. Yet we are a little bit too far ahead of the curve on this one. I think what ends up happening is this is going to be something for the next decade. And so this actually plays into some of the issues that we've been having with efficiency as a country. So we call this productivity. And this is one of those situations where we've actually been doing pretty well on productivity. And it's been a bit of a magic
pushing this shit to 2030.
We've been able to stave off some recessions. We've been able to sit there and really boost output. It's been really great. The problem is, we have factors that have been involved in that boom that are now starting to wane. And AI isn't coming to the rescue anytime soon. So I think we're going to sit there and start to see that issue.
All right, bad news for the AI trade, I'm afraid.
A little bit.
All right.
Maybe I heard it wrong.
Time we had 4 double-digit S&P 500 years back to back to back to back with the late 90s. And we know how that ended ultimately with the bubble bursting in 2000. So as we set up...
Look at that. Microsoft down 0%. Google 0%. No, Google's up 60 something. Nvidia 40. Meta pullback. Yeah. Google the only thing now.
So potentially what Bullish will hope for a 4th straight double-digit market year in 2026. You have concerns that the market's getting a little frothy here, that this bubble is building. Similarly, though, what you're seeing the last couple quarters, as big tech came out with their earnings results, they posted incredible numbers, and the market wasn't having it. You saw stock prices get slashed despite wonderful earnings results for the most part. Slightly dimmed outlooks maybe on profit margins, et cetera, in the case of Broadcom as an example. And the market was unforgiving. I think you're going to see a repeat of that pattern where we have unrealistic expectations as we head into earnings seasons. Stocks get a little hammered in the high growth, the big tech sector.
Nice volume.
And then those stocks recover as the quarter continues. Ultimately, we know AI is not going away. The long-term thesis is tremendous, but a little bit of a pause so that valuations and earnings and can kind of catch up to one another would not be a bad thing in 2026.
Yeah, impossible.
This is interesting that you said
Ain't no catching up to shit.
unrealistic expectations, and you're
going to the max extreme, or we pull it back. No way.
It's investors or it's retail investors or VCs or whoever. They are thinking about the idea of AI trade, and they're saying, well, we want our returns now in 2026 or 27 at the earliest. And you're suggesting, I think, that is an unrealistic expectation. What I want to understand is, why is it an unrealistic expectation? For how long will this momentum, is the moat phrase going to be used to continue to fund this space, perhaps extend this so-called bubble, without that question being asked, hey, give me my return?
Well, I think you've gotten tremendous returns to this point. The pace of those returns is likely to diminish and is perhaps unsustainable. So what we're advocating for is having some dry powder, having some cash on the sidelines, diversifying your portfolio. You still want to let your winners win. Technology and AI in particular is both the putter and the driver in the market right now for short-term returns.
I'm sorry to interrupt, but Chris, that's a tough one, because the moment you take some money out or you pause this particular momentum, you lose the battle in AI.
as an individual investor, I still want exposure, but I want to lessen my exposure, and I would advocate, investors consider that. And then when you do see that volatility, when you do see those pullbacks, when you do see prices and valuations that are a little more reasonable,
he's not saying something,
in the quarterly cycle, it's an opportunity to add there.
He's not saying something too dumb.
I just want to also get a sense from you if
instead of going fucking full on at the top, he's saying be, smart, a little bit risk averse at the tippity top when it is, and then when it pulls back, maybe.
Which other sectors are you
that's
looking
actually,
at?
not a bad fucking
inflation.
Shit.
This market
I
is
used to be
concerned about
fucking
inflation.
all the way at the bottom or all the way at the top. That's the worst.
And so from an inflation
long time
standpoint,
ago, that's the worst.
We really like consumer staples here. The idea being that
let
if you
him
look
be
at how
sometimes,
they
let
behave,
momentum come
their
through.
correlation towards
Real
technology
direction
growth
come
and
through
AI,
with the
there's
wind
a little
direction
bit of
set
an
up in the
inverse
5 and the
correlation there.
15-minute
We
candle.
also think, if you look at the typical
That's what I love.
US
5 to
investors
15-minute
portfolio,
candle. Sometimes you gotta just
it's extremely
translate the
underweight
1 minute into the higher time
international
frames.
and emerging markets. And 2025 was kind of the year of, hey, wake up, take a look. There are other markets outside of the U.S. that investors should be paying attention to. We love Europe here, we love Japan here, and we love international in general, not as instead of U.S., but in conjunction with U.S., because the opportunities are broadening around the globe from an investor standpoint.
You said international and emerging markets, as I understand, but you mentioned Japan and EU and international in general. But within the international space, which particular markets are you most excited about?
Within international, we like developed Europe, we like Japan, and when emerging markets, basically the way that we look at it as find me an alternative now, right, to my traditional relationships, my traditional supply chain arrangements, my traditional trading partners. So Vietnam, very attractive here. India, very attractive here, as the short list within emerging markets.
You've seen the tensions between the U.S. and Venezuela. How do you see oil prices impacting consumer sentiment, the market in general in the U.S.?
Well, it's interesting, given all of these conflicts that we're seeing around the world, that crude is priced at where it is, as you pointed out, around $57 a barrel now. And for many firms, you're getting very close to the cost of production. For some of the bigger, larger, higher quality names, think Exxon, et cetera, they're able to produce at a much lower cost per barrel.
It's not a bad balance.
If you're going to be playing oil
for
and
30
energy,
minutes.
we recommend really
actually
going
12,
for
30 to 1
here,
now.
the biggest, the best.
It's just
the
literally
dividend
laddering up though.
to wait.
That's what bulls do best sometimes at the low volume end of the day. But there's actually volume here. Sometimes they be doing this with no volume. There needs to be volume in this type of day.
Countdown Capital Management President and Fox Business contributor Gary Countdown. Gary, it's great to see you, sir.
Happy holidays to you.
Yeah, so again, last Friday trading session of the year, if that
First
means
week
anything.
of January.
I doubt it does, but it sounded good when I wrote it. So what do you expect from the broader markets for 2026? I mean, I'm wondering if you're aligned with Deutsche Bank. Deutsche Bank predicts a 16% rise for the S&P next year. 16%.
Crazy on
B
Tesla.
of A says 6%. Kind of a wide spread there.
Wow.
Watch oil prices.
I want to
watch
do a
yields.
SPX
If
short.
they
I'm
continue
at
to do what they've been
5.3K.
doing, we are going higher and
Tesla.
probably will be double digits.
I think I'm going to do
biggest
one
issue
SPX
is
short right here.
valuations are
0
not
TT.
cheap. They are expensive. So if we get any problems with oil or yields, I think it will have more trouble. But this whole year, energy prices have drifted lower all year. The 10-year yield has up a little bit from the lows, but way off of the 4.8, and that's helped borrowing costs and that whole works. And again, if that continues, I think that's a 1-2 punch that helps.
I'm in for
we always talk about the
$940.
Santa Claus rally. That's December 24th through January 5th. And, some are saying if we get a lot of volatility in these next few trading sessions, I realize volume is light, and but they say if we see extreme volatility, that kind of portends to a rougher first month, January trading.
I think it's going to be
already
on
up
the
$100. They want to go lower.
Days,
Look at the MACD RSI reloaded again. If this shit goes lower and tests LOD, I'm fucking crazy on my one SPX.
There's some technology stocks I'm watching very closely, and I'm hoping they pull them back, and they probably will. January has this great reputation of driving you up a wall, and I suspect we'll get a little bit of that.
Well, no, that's when you got a buying opportunity, and I think a lot of people are always looking for that. Let's talk about these sectors. You mentioned tanks, financials, and you mentioned the banks. So are there specific sectors you're watching in particular to kind of give you an idea of where we're going to go in 2026?
Banks and semiconductors. Semiconductors, number one. Banks, number two. If they're acting well, market's going to be in good stead, and it's impossible to go into a bear market if they perform. Right now, I'm loaded with the banks. They're acting very, very well. I even own Citigroup, which is still down about 85% from 2008, but just broke into new high ground and is doing fine. And the semis, they've had their back and forth this year because of a lot of noise on AI, but they're performing again.
Oh my God.
And I think we're in good stead going forward, at least into the first quarter of the year. And I'm hoping there's no more AI blow-ups because we've had a few in the last few months.
There have been. We'll get to that in a second. But I want to kind of go back to that financial sector story right now. Are there any stocks that you like right now in the financials? You mentioned Citi. Understandably, if something is that beaten up, you want to get in there. But a stock like a JP Morgan,
I actually got the best fucking bottom on Tesla.
Goldman Sachs have been strong winners. It looks like from what I'm seeing to my left here, to your right, these are not the names that you're picking.
No, we're in Citi, we're in Morgan, we're in Schwab. But from Bank of America in the B all the way to Wells Fargo in the Ws, they're acting very, very well. And even the private equity stocks, which have been in real bad shape, they've been coming on strong. So you can be looking at BlackRock and Blackstone and Evercore and things like that. And again, I think
I'm out on Tesla, $800 profit.
Sometimes you just got to follow the bouncing ball and then go into financials. And again, very important. We've never had a bear market when financials are performing in a pretty good way, and so far so good.
Well, I mean, we've got this huge IPO pipeline that we're expecting for 2026. I mean, there are still a lot of companies that are going to come to market.
I'm going to leave my SPX in a minute.
I'm sure that's something that's going to be on your radar.
I have a shit Tesla that is still
at least the trading
coming
desk
back.
at Goldman, they're looking for technology stocks to continue to extend those gains into the year, but they're calling the fallen angels the ones to watch. These are now well below the highs. This is Roblox, Visa, MasterCard, DoorDash. What do you make of these names, this fallen angel strategy?
I'm a big believer that stocks that are weak are there for a reason, so I tend to stay away from them. I look for the leading stocks and leading groups, and right now, what I'm looking for on pullbacks are memory and semis and data. They've just been strong. And I can tell you there's some names that are growing their earnings 200-300%, sales 100%. And if that continues, they're going to be big winners going forward. They've had a real good last 6 months, but I expect more to come. But watch them closely because memory prices can go down as quick as they go up.
Sure. I'm going to give you a twofold question here. I want to get your thoughts on the Fed race. We're down to technically 4 candidates, but really I think it's down to 2. You know who I'm talking about. But also I want to get your kind of your overall strategy for 2026 and what are the biggest risks that you see to the stock market right now?
If the stability of oil and the free market, not the Fed, what they do with their yields, the Fed funds, if they go the wrong way, I think that'll be big trouble because they have been, a great tailwind for the market. There's nothing better than the cost of energy going down and the cost of borrowing going down, and we've had our way this whole year. That's going to be my big focus. Again, if it just stays stable, I think we'll be in pretty good shape as we move into the new year. Just remember, we have a few other good things to come, lower taxes, I love the less regulations. Yeah. By the way, the banks have been performing much better in the last 3 weeks. When the Treasury Secretary came out and said, we're looking at the onerous regulations on the banks from 2008 that we think they went too far, and immediately the banks started doing better.
We're absolutely in a deregulatory environment right now, and putting a final pin on the race for Fed share. If you
something crazy is happening. IWM wants to go higher and Tesla wants to go lower.
Something
figuring out big time.
I don't know when that's going to come from President Trump. would certainly
I think
be
IWM's faking out big time.
for lower interest
All right,
rates.
the MACD that was bullish from 12:30 to 1 is in danger of being used to go lower because of the direction of the wind
if
south
they're not
today.
careful enough with lowering their
They've been
rates,
so goddamn
that
bearish
can
today, they
incite
could be
inflation.
even
Remember,
more.
inflation is a
Not
monetary
even more, but they
phenomenon
could be
that
more
I believe
like
Jay
to the
Powell,
LOD
with his
again.
printing to 9 trillion
And then
taking
bouncing
rates to
somewhere
zero,
near like
was one of the big causes
686.6
of
somewhere.
inflation going to 9% with
686.2.
Biden increasing
Now it's still
spending
destroy all
like
the
crazy.
fucking calls up here.
So I'd be real careful, and they should pay attention to the market. If the 10 and the 30 year keep going higher while they're going lower, something's up, and they need to react to that.
Well, he's going to be Fed chair through the middle of next year, so we'll see. Gary, it's always great to see you here.
Pleasure. Thank you.
All right, Gary Kaltbaum.
What the fuck is this candle? It was up $100 and now down $80. Like, what the shit? On one SPX. Weird ass bounce, weird ass rejection. No direction yet. About to make a decision. No direction yet. In between 105. Volume coming in, so sus. Down or up. So suspicious. Not even bullish or bearish, just candle. Bullshit. What a cycle. I'm about to just leave. $90, whatever. I'm trying to go north. I left. Still have my shit Tesla'd out. Today. Good day. As long as Tesla opens at 460 tomorrow. Nah, it's a good day. It's a good day as long as the shit doesn't fucking rip up to 475 tomorrow. I'll get my little contract back. It's so dangerous to fucking be holding here because of theta. So I am not playing SPX here. Time is 1:10. This is pivot point trading. This is near the end of the day, and this is sure. I mean, it's really fucking wasting time here until it does something, but it's 50-50. Look at QQQ coming. QQQ rejecting as soon as I fucking left. Damn, bro. Damn. Yeah, it's okay. I mean, I made literally $800 on fucking Tesla just now, and then lost $80 on one SPX tiny ass put, so it's okay. Whatever. I just need Tesla back at 461 end of day. Whatever. And then good day. Holy shit. Good day already. I'm already green. I just need my shit back. I hate fucking taking a loss on big contracts. Get my shit back. Tesla bearish all week. Down 5%. 5%. Love it. Coming back. 465 Tesla put back in money. Come on. $2 more. I'm up. $2 more. I'm fucking up. 2.22% on Tesla now. 2.2. 2.27. 2.28. 2.2. Gone. 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 Oh, QQQ rejection on Tesla. Tesla on loan. Tesla day.
The markets pushing toward a strong finish for the year. Our next guest says the rally is being fueled by AI FOMO, or fear of missing out. Also, optimism around future rate cuts and resilient consumer spending, despite some affordability stress.
This was before the market opened today, 6 hours ago.
Director of Solutions.
Year-end rally fueled by fear of missing out on AI.
Markets at highs. We have
FOMO.
Stock and bond volatility at lows. You know, corporate credit spreads are pretty benign. Market sending a signal that I guess the global fundamentals look okay. Do you take issue with that into next year?
Yeah, I mean, I think the global fundamentals don't look disastrous. I think the theme for 2026 is going to be that there's a have and a have-not story that will play out. And we've seen dispersion in the market among equities and among factors, but I think globally we're going to see different economies perform differently. I think we're going to see a separation from the everything rally, and we're going to see more differentiation.
In what direction would that differentiation?
Well, I think you've got non-uniform fiscal policy, non-uniform monetary policy. Interest rates are coming down in certain parts of the world and going up in others. Cost of capital is going to be something that people are actually really sensitive to, I think, in this coming year. But it's really played out pretty well with the AI story and the CapEx that we've seen there.
And so the outperformance of non-U.S. markets this year has really, I mean, it looks great on a one-year basis. On a 5-year, it kind of doesn't look like much.
Right.
So how do we think about that going into next year?
I mean, there's been a lot of discussion around de-dollarization, and I don't want to say that people are abandoning U.S. markets. They're not, you know, throwing American exceptionalism in the trash can. But there is a attitude towards diversifying to different markets, specifically European defense spending.
I got in for 4.7K.
In general, there is
and it dropped fucking $3 fucking. What the fuck? That's crazy.
And to me, it feels a lot like the late 90s
when
I was watching this show, sitting on the floor of the Pacific Exchange and seeing.
I was expecting this shit yesterday. I'm not gonna. I mean, tomorrow. I'm not gonna lie. What the fuck?
Now?
No. Oh, you mean on the floor?
Yeah.
Okay.
I was working on the Pacific
you can get
Exchange.
a chair, right? I mean, you can.
Yeah, if you sat down, you didn't stay there very long.
Yeah.
But it was a time where people would buy a little bit of 100 different things, and if 2 of them hit, the whole portfolio paid off. It feels that way in AI right now.
What do you make of the move in precious metals? I saw that you think gold is a little over its skis at this point.
Yeah, I mean, look, 4,000 years of data is relevant on one hand and irrelevant on another. If you look back that far, the ratio of gold to silver is roughly 10 to 1. We're at, this morning, I think something like 70 to 1. The stretch of the rally in gold is pulling up the rest of the metal complex in a relative value framework. So I think silver is the most directly
I think I have to
aligned.
change the
There's an
stream
argument that
today, guys,
platinum
too.
Might be the best industrial
Tesla.
replacement for silver, and it trades at half, I think, of what gold trades today. So there's a real relative value play there. I mean, I think it's a really interesting thing to watch globally because gold plays many different roles. It plays an inflation defense role, which is arguably, you know, not as effective.
Everybody, please, thank you so much for hitting the like and thumbs up on the live stream. We have passed 100. God bless you all. Thank you so much. Everyone, check the live stream. You are here on December 29, 2025 at Tesla Bury /tech pulls back at all-time high.
Best
Spy live trading, folks.
So what do you think?
Give it up for yourself. Let's get some claps in chat, folks.
As well as silver, which
Let's get
sounds
some
like more of a
American
beta
flags
on
in the
gold
chat.
in many respects.
Yeah.
This is
I mean, I think
a
once you see a little more certainty around the global framework, right? I think people aren't super excited about buying equities in the U.S. because of the valuation, but they feel like they're forced to remain invested. I mean, nobody in our business gets paid to sit in cash, right? So we need to find in the business and broadly
what is going on?
Remain constructively invested, and I think gold has been a tremendous story this year, and so too have all of the metals. So it's really worked out well. You know, I personally would rather own a ratio of platinum and silver, even at today's prices, to being long gold. But I think, look, the easiest way to get in trouble with your boss or your clients is to not be exposed to things that go up over 100%.
That might be an issue. All right, well. That is.
I think we got to start right here. Joe, I'm going to turn to you. Is this just profit taking in your mind? I mean, is that all that's really going on? Because we were hoping for a Santa Claus rally. We've never missed it 3 years in a row. We did miss it the last 2 years. I think a lot of people were very bullish on these last days of the year.
Yeah, I think it is profit taking. I think that's accurate. I also think what's going on in the precious metals market is a little bit of a reminder how you need to think about risk and how you're going to be treating the management of risk as you move into 2026. I don't think the environment of 2026 is going to be very similar to what we've seen here in 2025, which for the majority of the year, excluding the period surrounding Liberation Day in April, it's been a pretty calm environment, an environment where if you find a trend, you could attach your positioning to the trend and you could ride the trend. I think it's going to be a little bit more difficult, a little bit of fits and starts, more of a rental market more than an ownership market in 26. And I think that's what's being reflected today. And certainly what we're seeing with the volatility and significant parabolic move and reversal of precious metals, in particular for silver, I think that's indicative of the environment.
Bryn, coming over to you. How are you viewing with the action that we're seeing today? I want to ask you the same question. Do you just think it's profit taking? Is this a sign of anything else going into 2026? We just heard Joe say it's more of a rental market than an ownership market.
I mean, we've had a great year, right? The Qs are up, what, 20, 21, the S&P's high teens return. So whatever happens over the next 2 days, I don't think portends to what happens next year. Sure, today could be
IWM rising.
I do think next year, though, to me, the big setup where we could have, again, a bunch of volatility is really around the Supreme Court decision around the IEPA.
IWM is actually bouncing.
That goes against the White House. That would be incredibly chaotic to undo. And so I think that event, whenever that clears, could potentially be a nothing burger if they side with him, or
actually burning all these puts, all the bears.
Volatility. I do think though 2026
since 1230 low.
We will have volatility like we had most years, but I don't think we're going to have a benign market that just goes straight and up to the right.
All right. She's mentioning it. Jim, I want to come over to you. Just the idea of the tariffs might be over
not moving much at all.
Some other hurdles coming up next year with the Fed and a couple other things. We had Jeremy Siegel on our air earlier today. He mentioned some of those things. He's actually very bullish about the 493 as opposed to the Mag 7, seeing those as really the drivers for the action in the new year. Do you agree with that thesis that, you know, assuming that those things get unwound in a benign way, whichever way that is, whether it's struck down, held up, whichever the market sees it, it's really the 493 that are the drivers next year?
So before I answer that question, allow me to just set the context because I think this matters. I find it hard to believe in any way that there will be a recession in the next 12 months. And absent a recession or a meaningful scare of one, it's hard for me to believe that we will have anything other than a positive return as measured from December 31st of 2025 to December 31st of 2026. However, within those 12 months, I do think there will be a lot of volatility. I think it will be, to Bryn's point, I think the top of the list as far as reasons for volatility is the IEPA potentially, most likely being overturned by the Supreme Court. Now, the president will find other ways to institute tariffs, and we'll get through that, but it will create a ruckus. There is likely to be geopolitical issues going on. We've got very high earnings expectations, and even if they're disappointed a little bit, they still will be great earnings growth. Remember, Frank, we're projecting 15% year-over-year earnings growth next year for the S&P 500 as a whole. What if it comes in 14%? Well, for a market that's trading at roughly 22 times next year's earnings, that's going to matter. Now, I put this all together. Where did I start? We're not going to have a recession. We will have a positive year next year, but there will be volatility. And to me, now I'm going to answer your question. Thank you for giving me the runway. I do think the opportunity to hedge most of that volatility comes in looking at the other 493 stocks or the other sectors outside of technology. Not that technology is going to do bad, but that's just probably, given prices, where the most volatility is going to be. So we do favor the equal weight S&P 500 as a tactical trade here. And I do think financials, industrials, materials, energy, and healthcare are sectors to look for in 2026.
Jeff, you had a lot to say. We went to you last. You did not disappoint. You were definitely
We're
wound
only
up.
5 minutes in it, into the show.
Well, nobody's counting. I'm just saying you had a lot to say. I'm giving you some credit. What you're saying really echoes some of the things I heard from Lauren Goodwin from New York Life. She was saying there's a new regime set up, more volatility, geopolitics having a bigger influence. She also believes that we're going to see more inflation next year. And she's saying something similar to you. That
I don't believe, by the way. I think inflation is more than a little bit of a canard. I think, look, the jury's out.
Well, then
we don't know the
verdict. She said more inflation.
Well, no. I mean, the question is whether you have a price adjustment, which is what the Fed believes, which is what I believe, that tariffs will cause a price adjustment, and then inflation will be a nothing burger for the rest of the year. Could be wrong, by the way. When I say the jury's out, the jury is out. We don't know the verdict. We're going to have to wait and see the data come in. But it doesn't seem to me that this is a strong enough economy to get wage growth. I mean, the labor market's okay, but it's not strong enough to get wage growth. And absent wage growth, I think it's hard to get a real wave of inflation. By the way, productivity will help on inflation.
I want to go back to your original point. You see the SCOTUS striking down the IEEPA tariffs, but then you see the administration putting in new tariffs, and that doesn't create a big negative impact to the market?
It does.
Just the uncertainty?
It does.
And then the market recovers at the end of the year? I mean,
Frank, that's the volatility that I'm talking about. That's exactly the volatility. Now, volatility in the short term.
If that's the thesis. I mean, obviously, we're a couple days away from the start of the new year and probably a ways away from the SCOTUS decision, but what creates the recovery? I know you don't have a crystal ball, but in your mind.
Yeah, so, I mean, hopefully the SCOTUS, the Supreme Court, comes out with this ruling in January. I mean, not make us wait. They've kind of telegraphed it. I mean, I'm not some, soothsayer for the Supreme Court. They've kind of telegraphed what their decision is going to be. Get out with it, okay? Make the decision about whether there's going to have to be refunds. And then what will happen is trade policy uncertainty will shoot up again. Hiring will freeze again. Companies are not going to know whether they're supposed to have manufacturing plants in Mexico, Thailand, or the U.S. But in the weeks to come, then the administration, Secretary Bessent, President Trump, will institute other tariffs using other statutes that have much stronger legal standing, and that trade policy uncertainty, Frank, will come down. So what we're looking at is a first quarter that could be kind of choppy. Hey, look, I do think, by the way, earnings are going to be okay, but to my point that I made hand in glove with this is, what if they come in up 14% instead of 15%? That will cause some volatility on top of what we're talking about. So let me be clear. It's not like there is some fatal flaw in the economy or the markets, but volatility should raise its head.
All right, Joe, I want to come in. You reacted to a few things. I wasn't sure which one.
I'm trying to read his face.
He gave me the eyes, Brent. I wish you were here. You could see the look that he shot me. I'm not sure which part of it you were reacting to.
I wasn't looking at him while I was talking, but now that I'm looking at him, I'm going to dare to say he disagrees.
No, it's not that I disagree. I always look at it from the lens of positioning and sentiment, because I think that's what matters. It's most important. I think here in the fourth quarter, the market is sending a very subtle message to investors in the trading community in the way that when you look at the various 11 sectors, you're seeing performance. Healthcare with dramatic outperformance relative to the other major sectors. You're seeing some areas of the market where there was very strong strength, like the AI trade, which is now pulling back on some of that strength and working off some of the positioning. So I think the market is accurately getting in front of what Jimmy's highlighting, an anticipation of elevated volatility, the anticipation, as you said, of several events that are in front of us. We have to fund the government by the end of January. That's obviously going to be a concern as well. So there's things that the market is getting in front of. And I think how you treat that is kind of going back to what Bryn said. It actually works in your favor because you've got a more healthier suite of opportunities. You just have to be very, very judicious in mining for those opportunities and understand when risk turns against you quickly, you have to move to the sidelines. And I think that's really the message here in the fourth quarter. If you think about what we saw in various names like AppLovin, like Palantir, when they reversed, you have to be quick to the move to the sidelines. Oracle is another great example of it. So you turn the calendar to 25, you could find opportunities in financials. You could certainly find opportunities in healthcare. I've got my eye on Merck, which is breaking out significantly. I already own the XBI and McKesson. Energy right now is coming back very strongly. I think Exxon is close to a 52-week high. You could look for opportunities at Exxon. So it's healthier, but just because it's healthier
Should we do a
doesn't
poll
mean
here?
It's not going to be a little bit more difficult, because I think it is.
VWAP rejection or fly? I don't have too much personal vested interest, but I mean, I think everybody's curious. Man, I broke my computer on Friday, guys, and I got it repaired, but I think it's really time to really buy a new computer. My desktop is a little bit on the old side. She is pushing. She's pushing. Man, that video we just watched came out 15 minutes ago and has 1.2k views already. That's a lot. People are all interested in what the market is wanting to do or trying to do, man. For sure. For sure. Oh, the presidential live stream. Oh man, we almost missed it. Oh my God, is this really him?
Go ahead. How quickly should we move to phase 2 of the peace plan for Gaza?
As quickly as we can, but there has to be a disarmament. You know that we have to disarm with Hamas. So one of the things we'll talk about certainly, but there has to be a disarming of Hamas. Otherwise, very quickly. Yeah.
Can you say anything more about the explosion in Venezuela that you mentioned in a radio interview? Did the military do that? Can you share any more details about
Well, it doesn't matter, but there was a major explosion in the dock area where they load the boats up with drugs. They load the boats up with drugs. So we hit all the boats, and now we hit the area. It's the implementation area. That's where they implement, and that is no longer around.
Is that the only strike that the U.S. has done?
I don't want to comment on it.
President Trump, yesterday there was an explosion overnight and the Russians say that Ukraine tried to hit the residence of President Putin. Do you have any information?
No, I don't know about it, actually, and I don't, I just heard about it, actually, but I don't know about it. No.
Did you speak with
That would be too bad. That would not be good.
What was the outcome of your telephone call with President Putin this morning?
I had a very good talk this morning. I waited till this morning because it was pretty late by the time we finished, like 2:30 in Russia, 2:30 in the morning. And we had a very good talk. We spoke at 8 o'clock in the morning hour time, and it was a very productive talk. I mean, we have a few very thorny issues, as you can imagine. He knows about thorny issues probably better than anybody in the world, but it's working out. We have a couple of issues that we're going to get resolved, hopefully, and if we get them resolved, you're going to have peace. You're going to have Ukraine. They're losing 26,000 soldiers a month. Can you believe it? A month, 26,000 young, beautiful soldiers, and plus some people in Kiev, and relatively small, but a lot, you know, still people, and it's a lot of people. But 26,000 soldiers were killed last month. Yes, please.
President Trump, are you going to allow Turkish forces, or do you expect Turkish forces to be stationed in Gaza?
So I have a great relationship with President Erdogan, and we'll be talking about it. And if it's good, I think that's good. And a lot will be having to do with Bibi. We're going to be talking about that. But Turkey's been great, and he's been, excellent as far as I'm concerned. I don't know about you. To me, he's been very good.
Can you guarantee that? Sure.
Mr. President, can you tell me a little bit about your relationship with Prime Minister Netanyahu and how important it is for you to see him be pardoned by the Israeli president?
Look, he's a wartime prime minister. He's done a phenomenal job. He's taken Israel through a very dangerous period of trauma. Israel with other people might not exist right now, if you want to know the truth. That's a pretty exist.
Yeah, I don't know. This better be real. It is.
We'll knock them down. We'll knock the hell out of them. But hopefully that's not happening. I heard Iran wants to make a deal. If they want to make a deal, that's much smarter. They could have made a deal the last time before we went through, a big attack on them. And they decided not to make the deal. They wish they made that deal. So I think, again, they should make a deal. They want to make a deal, but sometimes that doesn't happen. Yeah, please.
Mr. Tampai, Nadav Elimelech, 24 News Israel. Would you support the overthrow of the Iranian regime?
Of who?
Iranian regime.
I'm not going to talk about overthrow of a regime. They've got a lot of problems in Iran. They have tremendous inflation. Their economy is bust. Their economy is no good. And I know that people aren't so happy, but don't forget, every time they have a riot or somebody forms a group, little or big, they start shooting people. They kill people. And the people tend to, I've watched this for years. There's tremendous discontent. They form 100,000, 200,000 people. All of a sudden, people start getting shot. And that group disbanded pretty quickly. So I've watched it for years. They're vicious, vicious people. Yeah.
Mr. President, will you support an attack, Israeli attack on Iran if Iran will not have a deal? If Iran will continue with their ballistic missiles and also nuclear weapons?
If they will continue with the missiles, yes. The nuclear, fast. Okay. One will be yes, absolutely. The other was, we'll do it immediately.
Mr. President, Ron Abraham from Channel 12 News. What are your plans regarding Gaza for the next few weeks?
Well, we're going to be dealing on Gaza. That's why this very great prime minister is here right now. We're talking about Gaza. We're talking about a lot of things. We have about 5 major subjects that we're discussing, and Gaza will be one of those subjects.
Mr. President, can you guarantee that the last hostages, Ran Philip, will be released before we continue to the second phase of the Gaza plan?
Well, let's put it this way.
The bulls are actually going off of
was released because
130 into 135 here.
Steve Witkoff, Jared Kushner,
on IWM SPY QQQ, except Tesla.
They were all released because of us. None were released in the Biden administration. None. They were all released because of us. Then we had a lack of releases with respect to the dead. And all of a sudden they started coming back because I said, nope, you said you were going to. We have one wonderful young man who's.
Oh, sorry guys, we can't have anything political in chat.
And he's what beautiful parents, a beautiful brother, sister, and like a beautiful family, and they're waiting for their son. It's the only one left.
135.
And we're doing everything we can to get his body back.
What is ahead?
And the parents just said,
what is ahead is.
He's alive, and I said, I love you to think
goddamn
that way.
tunnel rat.
Okay.
He's going down south on Tesla.
Out of all of these people,
and SPY and IWM is all bouncing.
Look at all of the people. What do you think the total number is?
255.
255.
254 came out. One more.
Today is Tesla, Nvidia tech pullback day from all-time high, as well as Trump live with President Benjamin Netanyahu. Israel.
Does the reconstruction of Gaza will begin even before Hamas is disarmed?
I think it's going to begin pretty soon, yeah. He's looking forward to it, so am I.
And the bullish cycle is going insanely high. 135.
It's been a mess for
There's actually no volume, but they're going higher and higher and higher. Is this the HOD? I have no idea, but they're just going.
seems to be
Candle
born for
just
that.
coming in, flooding in green.
We're going to straighten it out. No, we're already starting certain things. We're doing things for sanitary conditions and others. But Gaza's
It's literally color coding up.
You know the expression, it's a tough neighborhood. That's truly a tough neighborhood. Yeah, you had a question in the back? Go ahead. Yeah, please, go ahead.
I mean, it's showing volume on QQQ if you look at the 5 and the 3, but that is so.
I don't think it can be better. We just won a
1
big
minute
war
shows no
together.
volume.
You know, if we didn't beat Iran, you wouldn't have had peace in the Middle East because nobody would have been able. The Arab countries who have been fantastic would not have been able to make it.
Wow, look at the algo range though on QQQ. 930 algo range. I'm pretty sure it played the entire shit.
If we didn't, and we sent a lot of
2,
tomahawks.
3, 4, 5, 6, 7, 8, 9, like 12 times, 10 times. Look at the algo range being used on SPY today too. I think used it 1, 2, 3, 4, 5, 6, 7, 8,
He's
9
a
times.
wartime prime minister who's a hero.
All day.
How do you not give a pardon? You know, I think it's a very hard thing not to do it. I spoke to the president, and it's on. I mean, he tells me it's on its way.
That's what it's doing.
You can't do better than that, right?
That is unbelievable, unbelievable. IWM.
Facility taken out by the U.S. military, or was it another entity like the CIA?
Well, I don't want to say that. I know exactly who it was, but I don't want to say who it was. But you know, it was along the shore.
Wow.
Mr. President, have you or anyone in your administration talked to Maduro in recent days?
Well, I spoke to him.
Recently?
Pretty recently. Reasonably, but nothing much comes of it. Yeah.
Mr. President, can you explain the importance?
You have to understand what he's done. They've sent billions of dollars of drugs in, but maybe just as bad, they've sent hundreds of thousands of people in from jails, from prisons, from mental
Market
institutions.
ranging up and down with the presidential live stream.
The drug lords, the drug dealers were all sent into our country. But think of it, what he's done. Trende Aragua, probably the worst gang. They cut off people's fingers. One man made a phone call to complain about them. He cut off their hand. They cut off his hand. Don't ever make a phone call again. We'll cut off your other hand.
Way
After
past
that,
the
we'll kill
0.50
you.
Fibonacci now that they dropped
That
off
was
from.
in Colorado. No, they sent in all of the bad ones. They sent in some bad people. And that to me was just terrible. And
This is how they do it. Back to the 0.5 Fibonacci of the drop.
97% of the drugs coming in by sea stopped. We're trying to figure out who the other 3% are. They have a hard time getting people to pilot those boats. Wow. 97% of
this is what they mean by though. I'll send the video tonight, but this is what they mean by when market goes up and down, they come right back to the 0.5 Fibonacci because they did that numerous times today.
Of Americans. Thank you very much, everybody. We'll see you. We're going to have a big meeting, and we'll see you in a couple of hours if you'd like. And if you'd like, you can come up and have lunch like you did yesterday. Would you like that or not? Do you want that? Because some of them think it's terrible. It's a bribe.
Wow.
But, you know, a bribe for $25, I don't know. If you'd like, you can go. And if you don't, you can stand in a driveway and melt. All right? But
And
if
this
you
live
want,
stream is a little bit too
will you work on that, Margot?
loud.
Is Margot doing a good job? She's a star. She's too nice. Her only problem is she's too nice to you. And you're not nice to us, but that's okay. Margot, take them up and have a beautiful lunch, and we'll see you later.
The alleged strike on Putin's residence could scuttle the peace.
Yeah, I don't like it. It's not good. I heard about it this morning. You know who told me about it? President Putin told me about it. Early in the morning, he said he was attacked. That's no good. It's no good. Don't forget, you know, the tomahawks. I stopped the tomahawks. I didn't want that. Because we're talking about, you know, it's a delicate period of time. This is not the right time. It's one thing to be offensive, because they were offensive. It's another thing to attack his house. It's not the right time to do any of that.
Wait, what are they talking about? What happened?
And can't do it. And I learned about it from President Putin today. I was very angry about it. Please. What?
I don't know, they were on the phone call basis.
Well, it came out. Well, we'll find out. I mean, you're saying maybe the attack didn't take place. It's possible too.
I think it's very fire how they have the same color tie. I really like that. Red and red. Market rejecting trying. at the 0.5 Fibonacci. Alright, the market literally bounced to the 0.5 Fibonacci and went above, and now it's rejecting trying. This is bears trying off of 135 into 140 with this presidential live stream helping cycles happen super fast.
Again and again and again. We've never had a friend like President Trump in the White House. It's not even close. And I think you can judge that by not merely by the frequency of our meetings, but by the content and the intensity. I think Israel is very blessed to have President Trump leading the United States, and I'll say leading the
very dangerous. This is like two algo ranges gaming
Israel's great
on QQQ and SPY and POC gaming.
Well, I just want to say that it's very important who the Prime Minister
going lower with
and
IWM, some sort of game
of Israel
too. So.
Is. We have a great relationship. It was an honor to speak before your leaders. That was a great honor for me. I think it has not happened before, or something they told me. But the relationship's been extraordinary, and Bibi's a strong man. He can be very difficult on occasion, but you need a strong man. If you had a weak man, you wouldn't have Israel right now. Israel would have been, Israel with most other leaders would not exist today. They would not exist. And now they're stronger than ever. Yeah, please.
Wow, look at that drop. Look at that drop off the 0.5 Fibonacci. Let's see where they go.
I hope he's going to get along with Syria.
Look at that fucking bounce, though. That's unbelievable bounce. That's what you call presidential bounce. Knife with the fucking president. I literally said earlier, right? I expect something with the presidential live stream, right?
You're not going to get a choir
boy. What a knife! Oh my.
So I hope they're going to get along, because
it's like a big hunting shark.
I dropped the sanctions on Syria because otherwise they wouldn't have had a
literally
chance. We
right off
see
of one.
Syria survive.
We started to talk
so we're going to be talking about
the live
Syria
stream at like
too.
1:15.
Thank you very much, everybody. Have a good time. Go have a good lunch. Thank you. Thank you.
1:45 is here in 28 seconds.
Better to quit now. Thank you.
Thank you.
The market went to 0.5 Fibonacci like 3 times today. Once from the top here, 1 time. 2 times here, 1 to here to here. 3 times from somewhere here to here. And then now this is a 4th one.
Yeah,
Wait, hold on.
Wow, that's it. The live stream everybody was anticipating. Over. It wasn't on the Associated Press. That is something. It's 13 minutes long.
Today, tell me a little bit about this diversification and why, and we're hearing it from lots of different sources today, why it's so important heading into 2026.
Yeah, so Contessa, you mentioned it. There's some trading, some adjusting of positions here at year end. We would look through that, look past that. We see the AI CapEx trend, the spending trend on equipment continuing to grow next year. We think that's a reliable trend, but we don't want to just play that one trend alone, because as we've seen, some of those Mag 7 stocks can get rather extended at points. So you try to look for alternative ways, subsidiary ways, if you like, ancillary ways. For example, data centers. Data centers allow you to take a position in something like an industrials or utilities,
I think
which
coming
have
on Tesla
lower
is
price
super
to earnings
strong.
Ratios. They're not as overpriced. They're not as extended as tech stocks at their worst. So that's a good place to play the trend, we think, in a safer way. Emerging markets, also another way to play that. You're playing into South Korea, Taiwan, and places that produce a lot of the technology that's going to be used.
We've heard a lot about data centers and the opportunity there from insurers. For instance, Aon has made it a central thesis.
15 minutes left. I don't know if they're about to wait 15
heading into
minutes
2026. The analysts seem to like it. Would you look at insurers where data centers and AI are concerned?
I mean, the entire financial sector is one that we like a lot, not just insurers, but the banks as well. With the yield curve steepening here, we think that's a good time to be playing banks.
No way, they're really just doing this shit off the 0.5
so
Fibonacci.
Yes,
this is off the 0.618 on
Talk to me a little
IWM.
bit about what we're seeing heading into 2026 with metals. I mean, we've seen gold on a tear this year, silver as well. The precious metals in general, would you continue to keep an eye on that if you're an investor, or is it time to take the profits
Following
and run?
IWM.
Yeah, you're seeing investors taking some profits here at year end. Nothing unusual about that. Trying to reposition some of that money going into oil. A lot of that is speculative as people try to position for the new year. But we really think the trends that have been in place will remain in place. And so the gold trend, the precious metals trend, we think has a life to it. You just want to be a little bit careful here. We would be buying on pullbacks. For example, when gold pulled back to $3,800 to $3,900 an ounce, we were buyers then. We still like the precious metals, but we would buy on the pullbacks and not chase.
How are you feeling right now about the consumer discretionary and the staples market? What do you think of the strength of the consumer for next year?
Well, the consumer is somewhat bifurcated. You talk about a K-shaped economy where wealthier households are able to continue to spend and grow their spending, but households in the lower income quintiles, especially at the very bottom, they're not really able to. So there's going to be this divergence that's going to happen. Tariffs also are an uncertainty going into next year with the Supreme Court decision coming on those emergency economic powers act tariffs.
This is the moment of
so
truth.
there's not really a lot for us
and Tesla
to
wants
see
to fucking
in the
drop the floor.
consumer
Bears are
sectors
here crazy.
where we
Bears
see much better prospects elsewhere. We would
150.
rather take money from the consumer sectors and put that money to work in industrials, utilities, financials.
Do you think that the tax refunds do anything to change that?
The tax refunds will be important because they'll help to re-stimulate spending that we think is softening now heading into the new year and heading into the winter. That spending, that boost should help keep spending alive next year, but won't really, we think, be a real stimulus for a lot more growth. Certainly not enough to outpace or make the tech sectors look less attractive compared to consumers.
Are you putting a number yet on the S&P 500? What do you expect for next year?
I just want
we're looking for a range year-end next year of 7,400 to 7,600 on the S&P, driven mainly by earnings. I think the main number to focus here is on the $300 earnings per share target we have on the S&P 500 for year-end next year. We think it'll be a year of broadening growth in the index across the sectors, and we think it'll be a year driven mainly by earnings, not so much by prices.
So explain this. How are we going to see a bigger gap between these stocks moving forward?
Hey, Contessa. So really two forces are reshaping the Mag 7 trade heading into 2026. The first, the market is punishing big AI spenders without clear returns. Yardeni Research, after 15 years overweight mega cap tech, is telling clients to cut Mag 7 exposure, citing CapEx and talent costs, squeezing margins, and slowing earnings. Hyperscalers have issued $121 billion in new debt this year, 4 times the 5-year average, a sign that the build-out is outrunning internally generated cash. Now, that's part of why Amazon and Meta sit in the laggard camp. Meta pouring tens of billions into data centers and AI hires, but its AI model, Llama, only has about a 10% share of the enterprise market, which is where the real AI dollars and margins are. Anthropic and Google dominate that spend. And without a cloud business, the payback story is basically ads. Now, the second force is model convergence. If the gap between models keeps narrowing, and it is, distribution matters more than who trained the best model. You see that in the scoreboard. Alphabet is up 65%, leading the pack because it owns the full stack: chips, cloud, distribution, and the top-performing AI model. And it's not even getting credit for Waymo, now live in 5 cities with plans for 20 more, fully autonomous, no safety drivers.
We had like 15
Compare that
people
to Tesla, a
request to join over the weekend.
That's about 10 times Alphabet. The bulls see a $1 trillion robotaxi opportunity, even though Waymo is way ahead.
That is here,
and then there's Apple, the wild card here, near the bottom at this point, but it never plays first mover. If models converge, distribution wins, and Apple has 2.3 billion active devices.
Oh my gosh.
So
guys, I'm telling you guys, if you guys are someone that's active
what
in
you're
the
saying
WhatsApp
is
or the YouTube chat, just
Google,
just
because it owns the whole stack and delivers it right to the consumer, is set up to be in the starting position. You would think that Microsoft, as it's on our computers at work and all of the like, is similarly situated.
Wow. Actually rejecting that.
Is it possible
Look
that
at SPY
Apple
coming in
has
with a
the
little
rest of the stack and just hasn't shown us all its cards?
Snapchat ghost icon.
Well, on your first point about Microsoft, the two places where it's lagging Google strategies on chips
and the
and having its
presidential
own
live stream
competitive
did
in-house
something, huh?
LLM. So it has
President
Maya,
Trump
which
came
is
on
this
live
effort
with the
in
Prime
in-house
Minister of
silicon, but
Israel,
it's not competitive
Benjamin
in the way that
Netanyahu,
the
and the
TPU
market
is.
pumped up
And they also
crazy.
have just been relying mostly on OpenAI's
Don't
models,
touch
newly in partnership
all the
with
algo
Anthropic.
ranges.
Now, to your latter point about Apple,
Trump
you know, kind of coming into the game a little bit later, there's a report that they might be teaming up with Google using Gemini as part of their Apple Intelligence rebrand in 2026, and that's really what people have been waiting for. And they haven't been playing this hyperscaler spending game. They only put in $3 billion in terms of infrastructure spend in the most recent quarter. So they're not trying to win on that front. They don't have a cloud business, but they sure do have distribution nailed down. And that could be where they become a very competitive force in 2026.
Why do you think that investors are beginning to lose patience with the amount of money, the amount of debt that is concerning AI and data centers and the investments here versus the payoff? I mean, it's so big and there's so much speculation about this time it really is different. Why the rush to see those profits?
Part of the problem has to do with a reliance on single customers. So Oracle has really become the poster child for why debt might be problematic. And that has to do with the fact that the vast majority of its backlog comes from a deal with OpenAI to the tune of $300 billion. And so they are committing to this kind of infrastructure build-out before any of this capacity comes online and before OpenAI has paid its bill. And we're also seeing similar numbers show up in backlog for Microsoft, for example. As part of its reorg with OpenAI, renegotiating in terms of their commercial partnership, they get $300 billion worth of committed spend from OpenAI to Microsoft Azure. But the concern is that OpenAI is committing to a lot of different partners, north of $1.4 trillion in compute commitments. And it doesn't have either the revenue or the next round set up to be able to facilitate that spend. And they also haven't lined up their debt to be able to pay these compute bills.
I'm sorry, it switches so goddamn fast. You know what I mean? MACD is going bearish on the one is what I'm trying to say. If the blue and the orange goes together down there, that's bear territory. But if the one of them is one or the other, then it's nothing.
We begin with this hour with stocks edging lower, with precious metals turning rather volatile, as Matt was saying. Not a lot of people out there, so maybe that's part of the issue. Jay Pulaski of TPW Advisory writing, we think next year might be the year where the downside of a smaller U.S. trade deficit manifests in a weaker U.S. dollar. A weak dollar should support commodities. Jay joins us now. Jay, thank you so much for being with us. Happy holidays. Let's start with that. I think it's a really important point, this idea that what we're seeing in commodities has to do more maybe with the dollar than it does with some sort of broad-based industrial demand. Can you explain?
Thanks, Lisa, and great to be with you and Matt. And I wasn't planning on working until I got the invite to come on and be with you folks this morning. So I agree with you, Matt. But to your point, Lisa, I think people have kind of abandoned the idea that the tariffs would have a big impact on markets. And so I think it could be a surprise when we think of risks for next year, because we are pretty constructive.
You are personally,
when we think of risks, we worry about higher inflation driven by the fact that we have to restock
bullish
now fully tariffed
the rest of the trading week, which is a shortened trading
we have a smaller
or you
U.S. trade deficit, which leads to less money being available to come back into the U.S. from foreigners and buy U.S. treasuries, which could suggest that maybe we have further back up in long rates. And the combination of those two things, I think, is what could challenge equities at some point, U.S. equities in particular, at some point in 2026, namely rates going to a level on the long end that worry growth investors and put a cap on the upside of U.S. equities.
Why haven't we seen this so far, Jay? I mean, this is something that people have been talking about all year, that what we've seen in the metals space really is a debasement trade of the U.S. dollar, and yet we've seen the best returns for U.S. treasuries going back to 2017. Can you square that circle?
Yeah, I mean, Treasury's okay. They've had the best year since 2017, but they're up about 6%. So we don't really pay much attention to that. We believe that commodities have a real valid reason for their performance over the past year, and we think that performance is going to continue.
Voted bullish,
and that is the fact, very simply, that digital eats the physical.
Sure.
Right? So we all talk about AI. Without physical, without silicon, without copper, without water, without aluminum, you don't have any AI. So we have been and remain bullish on the miners. We've had a position in copper miners all year. We hold that position. We think it's going to continue to do well. And we're also very constructive about energy, particularly oil, which is a segment of the market that people don't like. So we like things that people are already invested in, as well as things that people have yet to cotton on to.
Hey, Jay, how do commodities play into equity rally expectations? I mean, if we have a continued rise in the BCom and
I mean, honestly, the gap is so strong. That gap is probably going to fill.
How does that work into the bullish forecast for equities next year?
It could just go drop down without.
Yeah, well, Matt, the thing that really counts for equities is earnings, right? And so for all the talk about uncertain data and questionable data, market doesn't care about that. The market cares about earnings.
You know what's crazy though? There's a gap below.
And earnings
this is what I mean by there's a gap below and there's a gap above.
Look, we are running the U.S. economy hot. We are stimulating in China to defeat deflation. We are stimulating in Europe to build up defenses. And so there's a lot of fiscal spending going on. We're still in a global rate cutting environment. These are the things that support commodities, and they also support emerging markets. We think 2025 is going to go into the record books as year one of the first year of a significant shift in global equity leadership away from the U.S. to the rest of the world. EM equities outperformed the S&P. They doubled the S&P. They're up 32% year to date. And for the first time in my memory, really going back to the beginning of the EM age, EM has better fundamentals, better macro fundamentals than DM. They have better growth, lower inflation, lower debt levels. And so we think, and by the way, expected to have better earnings growth than the U.S., both in 2026 and in 2027. So we think we are at the early stages of a significant multi-year period of EM and non-U.S. equity outperformance. We pair that with the commodity side. We're deeply underweight fixed income, and that's really been the setup for us for about 18 months. It's worked out well, and we think it's going to continue to work out well. We are at the beginning of big moves in EM equity and commodities.
Huge move. Look at that. It's such a huge move on Tesla. Right? My friends and I were having a talk on Tesla yesterday. And honestly, Tesla is one of the most craziest moving, one of the craziest like stocks ever. But that's what my friend said. And I was like, bro, absolutely. But I was like, dude, you know, these people, these Dr. Burries and, you know, Kathy Woods have been using setup and have been using it on people for the last 2 months, right? And he was like, oh yeah, absolutely. Oh my God, man. It moves crazy. Like, what? Bro. And mind you, I played Southward after the fact that I literally left on Friday. I joined in here. I fucking left. I think I joined here actually. I joined somewhere here, and then I got data burnt, and then I got released into market close, and I literally left because I didn't want to take the risk at 359, and then they went close like real fucking down, like 475 to 460. Like that's what they mean by overnight moves. Like they move fucking way more than just market hours because they just fucking do. It's so. And literally nobody fucking remembers it too when the shit happens. Like I honestly like when the shit moves like 2-3%, 3%, and we wake up, I don't even fucking realize it has happened. I guess I realize it more when it goes like blowing up 2% or 3%, whatever it is for some reason. Like that's crazy. That's a huge move. I guess it opened at 469. So I mean. It's like $5 down. I thought it opened at like 465 or 460, so never mind. Yeah. It opened pretty high and then ripped down, so still, yeah. It would have been unfucking real if it opened at like 465 from 470, $10 down, and then did some weird ass down and then up. Like, yeah, never mind. Cool day though. IWM, let's look at the bigger picture. IWM 2 hours says we have finally detached away from the purple box that we have been using at 252 to 251, which is what the market update video said on Sunday night, to watch 252 to 251 to wanted to see it. First of all, we were saying that it was at the bottom of the box, but it actually finally detached away. Looks like finally detached away. SPX SPY wants to go test up beneath POC somewhere, maybe. Man, 0DT probably did nice too. New money shorts from 135, I'm not gonna lie, into 2 p.m. It's been 15 minutes too, so who did better? 1230 to 135 probably, or 135 to 2. The thing is, I don't think if somebody tried 130 or 1230 to 135, they probably didn't get the entire move, so probably somewhere from like 1250 to same, probably, you know what I mean? Like half of 1/3, 2/3, or half of the 3/3 is basically same move as the rejection of 140 to 2. If you really look at the length of the candles, I guess, if you want to call it, right? So that is something. Merry Christmas. This is December, guys, of IWM. What did IWM do in December? It created a Christmas tree. This is something to remember. I hope you guys realize, right? This is just, they literally built a Christmas tree on Christmas in December, and we're gonna see this for basically the rest of our lives. This Christmas pattern at the top of the December in 2025. So do realize that that's literally what just happened. Someone said, are there any earnings today? That's a good question. If somebody please go research real quick if there's any earnings today. Bears are pushing crazy. They're visiting below POC. Next target is VWAP. Bears are. New money puts are fucking printing insane now off of 135. Look at that candle. Coming in fucking thick. Yeah, look at IWM though. Right? 2 hour bearish. What a day for IWM. What a open on IWM. Gap filled, right? The realist viewers remember, people that were here since right off market open, the market fucking pumped up on IWM crazy after faking out, switched spots with Tesla, and then gap filled, right? Gap filled, went into the purple box, and then rejected crazy. Rejected like $2 maybe. Yeah, $2 exactly. That wedge flag, wedge and bear flag. And algo range playing disgustingly into the presidential live stream and then rejected after. That was an amazing cycle to see, but like, wow, it's actually kind of super juiced cycles happening super fast and super big, super big because of the news. What news? Just talking. Social news. Look at that crazy knife. Like do you, look at that crazy knife, and I said, yo, this shit is turning into a whale knife, hunting knife, and then like literally look at that rejection, and then now basically done with the tippity top of that. I did not play it from here to here. I could have easily. I just did not. I'm not. I don't play near the 3/3, and I'm also up. Today is the 3/3. I don't think everyone heard that, but I mean, I did say it too. The 50 people that saw it from like 9:20 to 9:30 in the morning, I said, hey, this is the 3/3 bearish cycle on IWM and Tesla. SPY and QQQ just started the 1/3 bearish cycle, right? What does that mean? I mean, that means the bears are in control. That means the wind direction could be south. At some point, of course, it's going to knife try. Of course, sometimes it's going to try bounce, but if the 2 hour, if the volume, if things are saying south, if, you know, setup saying south on Tesla and IWM, things are not going to be north. You know what I mean? So I tend to not fight the trend, and I tend not to fight the wind direction. And sometimes, you know, it is very hard to find the wind direction. Absolutely. But the setup's been there for a fucking long time on IWM and Tesla. And the only reason why I say this is because I've been trying to research them and trying to draw them out, and I've made videos on them literally on Sunday. So yeah, this was my lowest watched weekend video. Hopefully it's not like that going into the week ahead, but I mean, yeah, I think the market update video was quite helpful, right? We pointed out quite a few things. We pointed out that the VIX was crushed. We pointed out that, you know, let's go look at the VIX. Maybe we should open a whole different. Called out the VIX, IWM box, Nvidia that we haven't watched today. Called out Tesla. So the weekly candles were testing the bottom of 2. I was saying they were testing 13 and they were testing 11. But Monday opened up way above Friday's close, so we opened at 15 basically. And pulled back to 14.25. And what did I say in the Sunday market update video? I said, hey, they might be, right, using this very, very low VIX, which is very rare. It's very rare for them to crush like this and get all-time high, all-time high, all-time high, and crush. And then use that as a hedging opportunity, basically. Smart money deductors. That's what they're doing. And candles are saying bullish, and we are at all-time high, yes, but the setups are not there. And the retail traders are coming in on every single green candle every single day and saying, oh, all-time high, oh, oh, bullish, all green candle, oh, bullish, oh, MACD, bullish. And then setup happens, and then they don't fucking realize that basically higher time frame setup, like the VIX, right? Higher time frame setup, like what? Tesla, right? That we've been talking about. Higher time frame setup, like what? IWM, that we've been talking about, plays out. And they have absolutely no idea, because all they care about is just faking out, scamming, bullshit on candles, because that takes no fucking effort. Like, this happened in the 1980s, happened in 1929, and it's gonna happen 40 years later, it's gonna happen 80 years later, it's gonna happen 20 years later. Might as well just be a deductor now. Might as well just accept the fact that that's how it is for the average, and that's how it is for most of the fake Ferrugi channels on YouTube, especially. I'm talking about right now. I'm talking about the fake Ferrugi channels on YouTube that do candle shit like that. There's like plus 20. But I mean, this is some sad shit. But it's also some great shit too. It's just like depending on who and how and what, and you know what I mean, and what and the point of view I guess they have about it. But this is what I truly believe now at this point about my life, man, and how I live in this system, because this is what I see every day. This is what I literally, you know, it's not even like a every other day thing. Like maybe sure one day I don't see it happen, but like every fucking 4 out of 8 times, no, 4 out of 6 times, or some crazy number. 5 out of 7 times I see it every day. That just means it's just something systematical, something going on. than just candles and MACD alone. Clearly higher time frame MACD and volume important, but yeah. LOD testing for 1, 2, 3, 4, 5, 6, 7, 8, 9 times on IWM today. That means IWM wants to go lower, not higher. QQQ bouncing, SPY is bouncing hard, creating a I don't even know what to call this shit, a fucking Olympic mountain or a Christmas tree, but I mean it is what it is. And it's pretty wild. I mean, market pretty wild. Tesla. It's amazing. 2.64%. IWM 0.8%. QQQ 0.67. SPY 0.5. I say the things that I say because I would not be the way I am unless I thought and saw the things I saw in the way I did. It's what it is. But I am glad to be the one to be a part of the people. Wow, look at this shit. Economy wins elections. Market expert says when his wallet matters most.
It's been a banner year for stocks as the economy continues to gain steam.
I really want to be a part of the deducting team, dude. I don't want to be fucking used by the market ever. I want to be with the market. Like, I love the wind direction. I love the trend direction. I love deductions. I love setups. I fucking hate candles. I think candles are the most.
Great to have everyone here today.
I think candles are just such a effortless, emotion swinging, useless thing ever. That's what I really truly think about candles. Is why I am the way I am.
The White House is pushing to take advantage of strong growth and use tax relief
Nothing has went well in my life than just literally looking at candles and MACD alone and being like, this shit's bullish or bearish. That's the most literal retail amateur shit ever.
And then we had the biggest boom in American history. I think that's exactly what we're headed for in 2026 with the tax cut really kicking in.
All right, Adam. Yes. Merry Christmas. Happy New Year.
Thank you.
Do you buy that? Is there sort of enough of that momentum to get us
There's
through
an IWM 1 minute gap now forming at the floor.
Can really start to feel some of that relief?
Oh, you better believe it. It's been very choppy over the past couple of weeks, arguably the past couple of months. I think because of the AI trade, right? I mean, the AI trade was what got everybody
call it
so
whatever you want to
excited.
call it, sir.
And then we started thinking, wait a minute, we're spending a lot of money on AI. Are we spending too much? Actually, no, we're not.
Trades,
and AI stocks are very expensive. Are they too expensive? No, they're not. And I think we're just working through that. I call it sort of China DeepSeek 2.0. Remember about 9 to 10 months ago, everyone thought, oh, China's DeepSeek is going to steal the mantle of AI. We realized, no, they wouldn't. But it took time to work through it. I think we're working through it now. As we look forward, we have strong GDP
we are
growth,
at POC.
strong earnings growth. There's a lot more to like than to fear. So, yes, I'm fully invested.
Cheryl, I wanted to come to you on that similar. I was reading a note from Evercore, and they, too, believe that all of the AI bubbles are really overblown. They're looking at some of the flags, and they just see, they do not see AI systemic risk out there. They think that call is way overblown. They said hyperscalers, that's sort of all the big tech that we talk about. On aggregate, balance sheets are really healthy. We've talked a lot about the debt spend, but overall, there is still more cash than there is debt overall.
At the first minute
again,
of 210, 207
really
to
fuels the optimism
215.
for GDP, which right now, a lot of GDP is AI data spending.
VIX got
It
crushed
is,
in
and
that
there's a
5
lot
minutes
of
time.
good news to go around. Unfortunately, Stephen Moore, who we just
I
saw,
only look at the
has
VIX in the
described
5-minute
this as,
time frame,
perception
so
versus reality. And the reality is that
look
160 million
at the
Americans
VIX in the
are in the
5-minute
stock
time
market,
frame.
and we've had an incredible double-digit return a year for every major indice. If you look at the
thank you so much.
average
Those of you
incomes,
that
the
have hit
median
that
family has gained
thank you so much. The
$1,200.
one person that just hit the like as I said that. Thank you, sir. Thank you, ma'am. Thank you all so much.
You're going to get,
Today is only Monday.
$1,000 to $2,000.
Hope you all go enjoy the rest of your Monday, and we will see each other
Big Beautiful
tomorrow
Bill,
on
which
Tuesday.
is retroactive to the beginning of 2025, so it's the 2025 tax year. And also, in the Big Beautiful Bill, the Act, which I can't seem to say for some reason, is all these small business,
resilient market economy,
pieces of
fuel
that,
2025 bull run back. You
R&D,
got to think about it though, like
deductions
a week and a half ago,
vehicles, et cetera,
at the bottom of December 22nd or something like that, I was like, hey, I do really want to bounce, so we can keep playing. I didn't say no all-time high, so we confuse people, like all-time high, but I mean,
for 2026.
Jeff, you've done a lot
honestly,
of
this is a lot better than
around the Northeast
nobody wants the market to go
corridor.
down, dude. Market
And
wants to
Cheryl
go
brought
up.
up a good point. This
I
has
want the
been
market
a
too.
perception issue.
At the minimum, play, set up, and then go up, and then set up, and then go down. So it takes time.
Are still too high.
You know,
my
market does its thing, switches hands, cycles, and confirms, so that I can be the
inflation
deductor
positive, but I
in
believe
both ways. That's what I love. I love
ourselves into
it.
In the last 4 years. Is this more of a messaging issue, and how do you think the administration can do that into next year?
Do you seen Tesla?
Partly messaging.
You cannot lie.
Tesla.
Everybody's
sitting on
going up and down, up and down, up and down. How many times?
Most of the people watching what I'm saying right now are in the stock
5,
market. But there is a
6,
huge chunk of America
7,
that is not
8,
in the stock market.
9,
and they have not benefited from
10,
all of this that we
11.
have benefited
This is
from.
like 11 days in a row where the market has been almost
higher, and it's like, well, okay,
very nice
deal, you know?
8 or 9 out of 11 times for deductors up or down.
Have that luxury.
Because it's so fucking goddamn perfectly. Oh my God, I love it. I love it, dude. I love it. Look at this shit. Look at this fucking rejection and bounce to the purple box and then purple box and then perfect.
The only concern that I get is China goes on 100-year cycles, and we're going on a 2-year midterm cycle, and so we're up against
now it's getting risky though here.
In a way. To
whatever
get
happens
done.
here
That's
is
good
getting
urgency.
risky.
I want to talk later in the segment about a big, beautiful bill 2.0 that maybe we'll get early next year. But again, how much of that urgency really is needed when you look at the economy, but also the stock market?
Well, let's talk about the big, beautiful bill 1.0, because that kind of factors a lot into this. The economy wins elections. It matters what's happening in your pocketbook for midterms coming next year. And when you're talking, everyone put it extremely perfect here, so let's wrap it all together. CPI is trending towards 2.5%, GDP is at 4%, real wage growth is finally positive, and what I fully expect next year is actually more wage growth, and I think that's going to finally hit people's pocketbooks. I know it hasn't been great for the worker at home, but the reason being is if you look at the big, beautiful bill, bonus depreciation, you were R&D expenses and bonus depreciation. When you take a look at that, that's going to greatly help every business owner out there. Now, I got a lot of flack on Friday talking about Reagan 2.0. Yeah, I think you guys posted that on YouTube. There's a lot of comments on there about me saying Reagan 2.0. I'm also going to get a lot of flack for saying this. Trickle-down economics works, okay?
I liked Reagan.
Trickle-down economics works, and when you're a business owner, your wealth is tied to the success of the business, not income. Most business owners I know, myself,
guys,
even included,
we are going back to work.
Hiring people, better things for my my clients, right? So every business owner is thinking that same exact way. When they have more money,
the market is definitely trickling down on us.
Spending that money throughout the economy, not pocketing it themselves. Trickle down works, and that's what we're going to see next year. Real wage growth positive, maybe even trending towards 4% when inflation's at 2.5.
Let me give the specifics because I just found it in my notes. In the big beautiful bill and the small business and taxes for 2026, 2025 tax year, full same-year deductions for research and development expenses, 100% capital expensing for equipment and owned, not leased company vehicles. I think that's a big story for a lot of
260 really showing on Tesla.
The country. And again, this is retroactive. And I think that's, Jeff, to what you were saying, is that maybe a lot of people aren't feeling it, but they will in this. I mean, small businesses employ half of the country. That's half the jobs in this nation, right? I mean, wouldn't that be helpful?
Oh, I think
the most craziest part is
about, though, the lead time, 2 years as opposed to 100 years or whatever. We're the biggest countries
in
the
profit
world, right?
because
China, Russia. We're the only democracy. We're the only one who has to answer to voters every couple of years. Those guys can plan, I guess, into whatever. I mean, those guys.
But it's all right. Today was a good day. I'm in profit because of other shit. So
I'm not sure who's better off.
I am.
I kind of like where I am.
On that.
The other thing
You're
is
better off, right?
Housing prices. Everyone's housing prices to come down. But on the other side, my clients are boomers or Gen X. They have most of their wealth in their house. 70% of America's wealth is in their house. So inflated housing prices is actually good for the economy in some ways. I know that's also a contrarian opinion there, but it is because when someone's wealth is in there, they can borrow against it or use that wealth for some other purpose.
But you got to get into a house, and that's the problem.
And that's the problem with my younger generation.
Yes, exactly. And my daughter's the same deal. I bought a house in 1981.
Wow.
I was making minimum
Tesla
wage,
went back to minus 2.74%. Wow.
And I put it in a Band-Aid box, and then I went and had enough down payment for a house. I don't think it's somebody making minimum wage today. And where they won't.
Adam, the good news.
I thought about it.
Home sales in November.
I thought I was about to get squeezed, bro. What the fuck is this shit? It came all the way back up and all the way back down. Oh my god.
I think the latest Freddie Mac was like a 6.18%. So we're getting closer to a low
under 6 and a quarter. Yeah,
maybe closer to a 5 handle. And the Realtor Association said housing affordability is showing signs of improvement. Is that also a step in the right direction?
Oh, you better believe it is. And here's why. Housing is about 1/3 of the consumer price calculation.
Oh my gosh.
And that's how we look at inflation.
Why does it look so crazy on the contracts? There's a 1 minute gap here in Tesla. Oh my gosh.
9.1.
There's a 1 minute gap here at 465, $3 above.
So 2.6 going the right direction. If we can start to see more houses come on the market, right? And people haven't been willing to give up those 3% mortgages. But as mortgages start to come down, you start to loosen up some of that housing stock. People say, well, I hate giving up my 3, but you know what? I could afford it.
Yeah, if I didn't leave last Friday, I would have left this morning on Tesla.
On the market, in theory, that should help prices come down a little bit. And as prices come down, that
market
helps the CPI get
I would have left here. I would not have even fucking held down there.
I love it more than I love my cat.
I don't even think I would have held into 932. I would have just left at 930. So
sorry, Milo.
It's whatever.
I think it's such a brilliant idea. That I think will
purple boxing.
I would love to see, and I think this is actually a likely scenario. Housing stagnates. We don't want to see a drop. Again, for the reason I just brought up before, we don't want to see a big drop in housing. We want housing to stabilize and not go up essentially, while wages outpace inflation over the next 4 or 5 years. And that's how you have that disconnect come back.
VIX is getting crushed.
I want to talk about something that has been volatile, to say the least. Pull up the price of crypto. Look, I think overnight, Bitcoin had topped 90,000. Now we're back to mostly kind of unchanged on the day. We're still around 87,000. Adam, I know that you like this and express it through a play on Coinbase. How do you view the volatility? And again, 88 is not 110, 120, but it's not 60 or 50,000 either on Bitcoin.
Thank you. That's right. Well, remember when Nvidia, call it a year ago, went to 135, and then it plunged, as they said across the media, to 85. People thought, oh my gosh, is it all over for Nvidia? No, of course not. And Nvidia went on to more than double, actually almost triple, going above 200. Now it's about 185. That's the way markets work. It'd be great if
there's
they went up every day.
It says VIX is up 4% today.
Stocks don't. Or in theory, bonds do that, at least over time.
It's getting crushed right now.
So you just have to be willing to sit with high-quality companies through the volatility. And for me, in crypto, that means 2 companies. It's Coinbase, which is the largest and easiest way to effectively make a statement about crypto, that you like it and you want to be part of it. Blackstone, for example. Blackstone, BlackRock use Coinbase for all of their institutional clients who trade crypto. So it's the back office for the world's largest money managers all over, literally all over the world. So Coinbase, I think you have to be there. And Circle is very fascinating. They are the largest issuer of US dollar-backed stablecoin. And whereas Bitcoin prices move all over the place, stablecoin does not by definition. It's backed 1-for-1 with US treasuries. So if you were a bank and you need to move money quickly, your Bank of Mitsubishi Tokyo branch needs to get $100 million worth of yen into the New York branch. Currently, you have to have $100 million worth of yen in Tokyo and $100 million worth of dollars in New York. You tie up that regulatory capital. You attach it to a stable coin, it instantaneously moves, and you have cut your regulatory capital in half. You're holding treasuries.
If Dakin were here, she would try to make you put a run on your money when it comes to strategy.
Oy, oy. What a close.
Stocks are getting ready to decouple. Which names could be a best bet for 2026? With us now is James Chuckmuck, portfolio manager at Clockwise Capital. James, it's great to talk to you. So Mac did a great job there of sort of laying out why we're going to see this big gap widen. Which of these companies do you think is still set to take on the debt and still demonstrate to investors that there was a reason to get in?
Yeah, I mean, we own pretty much all of the Mag 7 and then some. But at the same time, you know, we're looking at where do we want to be overweight? Where do we want to be at parity? And where do we want to be underweight?
Yeah.
And really, it's just 3 stocks that we continue to be
Why did it not
overweight.
do anything?
That would be Apple, that would be Broadcom, and Micron, which is not in the Mag 7, but it is part of the NASDAQ index that we're overweight on. So, you know, we do think you got to take a step back and look at what are the growth assumptions as you look into next year? What are the margin assumptions as you look into next year? I know we're talking about this $300 earnings number for next year for the broader S&P, but at the same time, that number really hasn't changed from a year ago. You know, the earnings expectations have largely been intact, and I think this multiple surge that you've seen in the market is largely a function of overestimating on the performance relative to where we were post-Liberation Day versus where we are in an absolute sense. So, you know, we do think that there continues to be opportunities in tech, but you got to be much more surgical as you decide on it. And, you know, there's this theme about broadening out, but you also got to keep in mind that the broadening out companies are much more cyclical in nature versus the Mag 7, which are more secular.
Then what do you think drives the growth for 2026?
Yeah, we're looking at more of the underappreciated kind of where the relative valuations really haven't outperformed sectors like staples, sectors like communications, real estate potentially. And you know, we think that those are areas where you could see the multiples actually expand. I think that tech trade continues to stay alive and well for the sole purpose of that liquidity will continue to be the fuel to the engine for 2026. So there's no signs of that liquidity, at least from this administration, drying up anytime soon. Obviously, you have the deregulation on top of that. But at the same time, you have to look at, you know, the equities market is a sentiment gauge, but you have the fixed income market, which is more of a fundamental gauge. And, you know, that continues to show signs of worry with rising yields. So, you know, we think 2026 is going to be much more challenging than 2025.
When you're talking about what happens with the Fed and whether there's going to be more support put into place, it looks like there's a lot of investor pressure for the Fed to reintroduce more liquidity, to have capital flowing more freely. Do you anticipate that happens with a change of leadership?
Yes. At the end of the day, I think it's a political game, and there will be a downward pressure and dovish pressure on interest rates. But what you got to keep in mind at the same time is that, you know, the interest rates won't necessarily work the way that they have been historically from a stimulatory standpoint, because of the fact that the unemployment increases that we're seeing in unemployment are more structural in nature as a result of AI. So are we really going to get that rehiring, that stimulus, that growing investment in place as a result of lower rates?
Right now because of the Vixen data pulling back.
But I think the tilt will continue to be dovish. I think the repo markets will continue to see a flood of activity, and the money will keep pumping. But the question is, you know, you're at 25 times.
Has a 1 minute gap down below still.
You know, 23 times on a forward basis. it is elevated.
Hovering at the
Growth
bottom
rates,
of the wedge.
you saw what happened with Nvidia, with Broadcom results, with growth slowing down, what can happen to these multiples. And the point of concentration, you have half the NASDAQ in the top 10 and 40% of the S&P.
Are there names or sectors that you don't want to be in for 2026?
We're underweight mostly financials. We think that trade got ahead of itself. I think a lot of it is priced in at this point. So that's not a place that we're going to be overweight. Now, I would caveat and say financials that have exposure to lower duration, shorter duration interest rates, I think could benefit, but the ones with exposure to longer duration, we're not really in. So that's one sector that we're staying away from, at least over the short term.
Talking of unemployment, the rate right now sitting at 4.6% as companies outline their plans for the new year. A survey of CEOs shows that 66% plan to either fire workers or maintain their existing staff next year. Peter Morisi joins us now. Peter, great to see you. The unemployment rate looks like it may be headed higher next year based on that survey. Does it worry you?
It worries me, but I'm not overly worried. The reason is that with President Trump's immigration policies, we really can only add about 45 to 50,000, 55,000 jobs a month, because that's how many new workers we get. And that's about what the economy has done this year. Now, it's shifted people around, more of them into healthcare and the rest of the private sector, which is growing, but it's profiting from the artificial intelligence accelerating productivity boom, has probably shed some workers.
Do you agree with the president with regard to tariffs? $200 billion in revenue, $18 trillion of investments into the United States. It certainly hasn't been the Armageddon that some were predicting.
Well, first of all, that $18 trillion is a terrible exaggeration. The economists at Bloomberg took that apart and brought it down to about $5. Second of all, I don't
still
think
good, though.
Yeah, it's still good, except that if you really look at the GDP accounts, as I'm burdened to do, virtually all of the growth in investment this year has been in AI. The rest of the private sector is not investing. What they are doing, though, is buying AI agents, that's part of that scene, and using that to shed workers and improve productivity. We are in the midst of a productivity boom, as we have not seen since the 60s. Let me give you some numbers, not to overburden you, but over the first Trump administration and Biden administration, the economy grew 2.5% a year.
I want to see if this is...
To do that, it added 146,000 jobs a month. Over this year so far,
this has to be the 3/3
the economy's grown at the same pace by adding about 45,000, 50,000 jobs a month. How is it growing so much more rapidly on a third as many workers? The answer is all that labor saving that Bernie is tearing us up about is creating a much more productive, highly skilled labor force.
But this is the 3/3 now.
Right.
Two gaps now. Gapped up, gapped up. Power hour is coming in 30 minutes. Look what they're saying. Look at this. Got dangerous shit going on here.
The year near record highs, but for Bitcoin.
Look what happens in 2 weeks, right? See how fucking far down this shit is, or at least see how fucking high up this shit is compared to where they say now, right?
Stocks closing out the year near record highs, but for Bitcoin, whoa, what a different story. It hit an all-time high of 126,000 in October, but has pulled back 30% since then, raising questions of whether this is a crypto winter. Joining me now, Brett Knobloch, who's the head of digital assets research at Cantor Fitzgerald. Brett,
30%. Do you know how many bulls there were since September, October, November? There was, at some point, there was a community that used to make fun of me, and I just fucking left because they were just perma bull on crypto, and I was like, what are the reasons? And like, they just didn't have a reason, but that is crazy.
Good to see you today. Are we in a crypto winter? If so, how long does this last?
It's a good question. I think the jury's still out a bit. I think crypto winter is very similar to inflation expectations. If everybody believes inflation is going to increase, inflation inherently then increases, whereas it's similar with crypto winter. If you think we are in a crypto winter, it's like a self-fulfilling prophecy where the marginal buyer of, say, Bitcoin kind of goes away. There's more sellers, price goes down, and then the calls for we're in a winter kind of pick up. If we are in a winter, I think if you look at the previous kind of cycles, the peak to trough duration is about 364 days. We are 85 days into that. But I think there's a lot of positive momentum that suggests that this might not be a crypto winter. It could just be a pullback. We've already had 30% pullbacks this cycle, right? We have the Fed is cutting rates. You know, the past 2 winters have started with the Fed raising rates. We have no real black swan-esque events. If you go back in the past couple of cycles, you had the Mt. Gox hack, you had FTX bankruptcy. We haven't really had anything, I would say, you know, blowing up in the ecosystem so far to be that black swan event. And if you look at peak to trough pull down, you know, I don't think we're going to have, you know, a 75% pullback, which is what the previous cycles have had. We have a ton of, I think, you know, regulatory support, you know, people in government kind of supporting crypto, not just in the U.S., but across the world. So
look at these crypto bots on my chat, bro.
More than, you know,
the last time you were here was September 12th.
You know, I think this, you know, duration is going to be much shorter. So the cycle, you know, isn't going to be a full 364 days. I think maybe it could be a few months, but, you know, the next couple of months are going to be important to see if we are in winter or not.
Okay, so a brief winter is better than a long, cold, hard slog. MicroStrategy has this massive investment in Bitcoin. You point out that its break-even point is 75,000. What happens if Bitcoin hits that level?
Nothing. I think there's a lot of FUD out there about if Bitcoin goes below their break even, they're going to be forced to sell, and people are going to want to sell before strategy is like forced to sell. Like there's nothing out there that's going to force Michael Saylor to sell their Bitcoin. You know, they have, you know, 8 billion of convertible notes outstanding. They have, you know, call it another, you know, just over 7 billion of preferreds. They have a cash balance for their USD reserve totaling more than 2 billion. That's more than a couple of years of dividend payments for the preferreds. And they have a Bitcoin position of, call it $60 billion.
What caused this fucking little V? Who the fuck knows at this point? This is some presidential Christmas tree, and I don't know what this shit is from 210
help maybe be like a near-term bottom is if we do get to the break-even,
so if you're looking at Tesla and you want this shit to go up,
I think it's a very low probability that they do sell Bitcoin. And it's not like it's never traded below the break-even. I think in my note I outlined when in 22 to 23, there was a 4 to 5 month period where Bitcoin was below their break-even.
Tesla is bearish as a motherfucker. Tesla MACD just turned red. Actually, I thought it was going to turn red tomorrow, but it actually just turned red. It was neutral, but it's bearish as a motherfucker on Tesla. Tesla. This shit is no recovering today. Tesla. IWM bouncing, SPY QQQ. Basically, I'll go ranging all day long. Fucking wild. At 687, 688. 620 and 619. That is something. That's definitely something. That's not nothing. And it's looking crazy. QQQ wants to rip up. Tesla is, I don't even know. I honestly don't even know how to tell you. I thought Tesla would be going higher at this shit. Look at QQQ right now. Going higher. IWM bounce trying. Tesla ripping to the floor. Fucking love it. Fucking love it.
Welcome back to Next Gen Investing. Now, time for FOMO. Today we are discussing Nvidia with a modest pullback to start off this week, but also probably a huge factor of why we're seeing the overall markets with some weakness today. But for some more insight on the overall street reaction to this deal announced with Grok last week, I'd now like to welcome in Sam Vadas, host for the Schwab Network. And so, Sam, walk us through some of the analyst commentary and sort of the market's feeling with this Grok deal, which I initially read as a positive, but we've seen varying opinions, let's say, on that deal and their spend into 2026.
Yeah, thanks so much for that, Jenny. We are seeing a bit of a mixed reaction. Obviously, we saw this headline coming out on Christmas Eve, and so we've had some time to digest that. We did see Nvidia actually rallying up over 5% last week. We're seeing a pullback this morning in trade. There are two stories which is really driving the action today. Obviously, we have this Intel deal as well, but then we have this deal with Grok. So let me just run you through some of the analyst notes which have hit the desk this morning as far as what they're saying about this particular deal. I mean, for the most part, the reaction seems to have been positive, as you pointed out, Jenny. And so let me just run you through a couple of commentary, a couple of notes in the commentary here. UBS saying that this could bolster Nvidia's ability to service high-speed inference applications. They remain bullish on Nvidia shares heading into 2026. They expect the appreciation from here to be driven mostly by higher earnings. They've got a buy rating here, $235 price target there. Truist believes that this is intended to fortify its competitive positioning in inference versus the TPUs. While the $20 billion reported cost is significant, it sees it as small relative to its cash position and cash flow generation. So it says this could make its capabilities more appealing to high-volume inference customers because, remember, this is more about the inferencing, not the training part of artificial intelligence. So that's the folks over at Truist where they stand.
Rising from the depths
folks over
of
at Citi, for instance, they say that this is a clear positive were their remarks. They say that the company is addressing competition from the other inference architectures with a licensing deal that is more adequate to a full acquisition. They believe that it's worked around regulatory scrutiny to get this across the line, and also that Grok is still able to run as an independent company. Remember, this is not buying.
It's like as if
Grok.
nothing happened
this
today.
This is obviously the licensing, non-exclusive.
This is a huge move. You have to think about it. They fucking cooked the calls and zero DT. They're going up, so calls are fucking printing right now too.
Keeping a buy rating there.
Puts did good earlier, sure, or a little bit. They were ranging down and made it very hard, but now they cooked all the puts down there, all the overstairs. I mean, greedy people, I guess, stayed at the 12:30 holding because today's the 3/3.
Think that this is pretty
encouraging. And now they are literally back where we opened.
We're
back at the HOD by $1 fucking dollar.
Oh my god. Because with the
might as well fucking go there and create a whole ass V at this point. Like, this is crazy.
Arrangement.
Someone said HOD, LOL, you know what I mean? Literally, might as well go to HOD and fucking hit it at this point. Like,
technology. That was according to the press release.
Wow.
You know, with this $20 billion reported price tag as well, that has raised some eyebrows in a market that was already questioning a lot of the financing around the AI.
I was thinking this is sus to begin with, though. 135 to 210. Like, oh, that's the reason why I didn't go up. But like that, I was thinking, what the shit is this, though,
commentary regarding this.
How do you not know? How do you not think this is not sus?
It's going to see more regulatory approval, perhaps.
But I mean, it's burning all the puts down there. But wow, I mean, they do that in one day.
Play out because we know that this regulatory environment, while expected to be an easier one under the Trump administration, has also still faced some hurdles. So I think great summation. Everything that we're seeing with Nvidia really are mover of the session. Appreciate it, Sam Vadas,
462.
For the Schwab
Tesla
Network.
finding support. Looks like. Man, I want to drop on Tesla. I'm wanting an island gap down again. Oh. Time is 2:45. That would be the most insane thing ever to see HOD. I don't think HOD is coming, but that would be the most insane shit ever. I think I'm about to go, guys, though. I need to get some food.
During a year that saw natural disasters and high rates, sticky inflation, now a new challenge in the mix for 2026.
I'm here. I want to see how this cycle does.
With the high price
I'm not
of
going
data
anywhere.
centers.
I just want to see what the cycle does right
in the year ahead. Let's bring in Joshua Schenker, insurance analyst at BofA Securities.
When everyone else is distracted,
really
and
what I'm hearing, Josh, is that the insurers see this as a big driver of potential growth because the facilities themselves are massive, and it may take layers of insurers, like lots of insurers coming in together to be able to cover them. Or do you think that there's another way around that, that the prices of that kind of insurance might be so high that, you know, you have the likes of Google just deciding to self-insure?
I think it's a combination of both. Thanks for having me, Contessa.
I don't think it's going to stay in the middle.
It's a great thing for the industry. Complicated risks are what the industry wants and needs in order to justify why it's doing a service in terms of the global economy.
There's no way this momentum is going to stay here and chop until close.
Of a lot of insured value coming on. It's a great opportunity for the industry, for the brokers, for the insurers, for everyone in the mix, and they welcome complexity. But you're right. Companies like Google, for example, have a tremendous amount of capital and the power to self-insure. And if the insurance brokers conclude that the price being offered to insure these data centers is expensive, there's the opportunity of creating structures of self-insurance to avoid that risk altogether. It doesn't mean the industry can't benefit because the industry also designs those structures, but it does mean that the underwriters might not be able to wet their beaks on this risk as much as they would like. But overall, a big, new, exciting, complicated risk, that's great for the industry. I think it's a positive thing in an industry where pricing generally isn't going the right direction. Perhaps ultimately the actual influx of new risk is positive, offsetting that trend.
I want to talk a little bit about, now people, don't fall asleep when I say this word, reinsurance.
That's why I stopped playing.
This is insurance
I can't do all the
for
fucking
insurers.
fucking 10 mountains. Like I literally, I'm good with fucking 1 to 3.
Skyrocketed over the last few years.
I'm good with 1 to 3 mountains.
Not the whole reason.
Oh my God, they're creating 20 mountains.
Property insurance
like
premiums
what the shit? It's like literally
as well.
greed at
Guy
that
Carpenter is just out with a note today that says those rates are going to moderate. The January 1st renewal deadline comes up this week.
It's great to see the thing go up and down, sure, but I mean,
insurance businesses having to pay lower or needing to pay lower rates. There's such an influx of capital. They have done these
one-directional days. I don't like.
Great profits. Explain the mechanism for investors about how that works.
One-directional days.
Well, the reinsurance is the tip of the spear, and so the volatility is extremely high. Long term, that is a huge growth industry. If you believe that climate change is real, and we do, There's been more and more storms to insure over time. We got to a point in 2024 where the price of property catastrophe reinsurance in particular reached an all-time high. And it's going to be down for the second year in a row this year, off a very, very high amount. And so the price of reinsurance is still expensive. It's not as expensive as it was 1 year ago. But the fact is that if managed correctly, the opportunity to make money in reinsurance and also to give a healthy market where catastrophe can be managed, it's a great business overall.
What a fucking candle. Yo, QQQ actually on a rocket. And the craziest thing was, it was since 12:30 when they broke the floor and cleared the divergence, man. Ever since they broke the floor and cleared the divergence, right, that marked the end of the 3/3, and they fucking cooked the bears just in like overtime. And that was 30 minutes before the White House press conference started at 1:10ish. So I mean, today, honestly, it's a fair day. It's just a fair day, bro. They literally broke the divergence and then bounced it like, oh my god. They could have done. They honestly, you know what the harder thing is? They keep the divergence at like 12:30 or like 10:15. They bounce it for 2-3 hours and then they dump it into market close, and then they clear the divergence and then make people bearish or something and then trap. That's the most dangerous, honestly. But I mean, this is pretty something too. Why? Because probably there's people shorting here that didn't left. People shorted into this shit, and then now they're getting cooked into this. But I mean, I don't play in the 3/3. And that literally means up or down after the 3/3, after the move has happened. So this shit is something. I mean, to see this wall on QQQ, sure, I guess someone could say, oh, I knew that was gonna happen, but like, yeah, sure. Yeah, sure. It's like a hand out, reaching out to space. 220 and 250. So 30 minutes, but I mean, that's really impressive. That is so impressive. So on the market update video, watch 195 or 185, right? And they literally went to 186 point something and then bounced it to 188. In between 190 and 185. Okay. What a fucking day. Maybe we're about to see a Nike sign, man. Oh Lord. That is so impressive. I mean, that's only $1 on QQQ, but that just looks so fucking impressive. What the fuck? frozen. They're so crazy, bro. They're so fucking crazy. Is there earnings? Like, what is this on? I'm going into 1DT. Alright, guys. I'm gonna go. I am gonna go eat, and I need to go to work. Bye-bye. I'll see you guys tomorrow. Have a good day. Man, I'm really curious on what the fuck happens here before I go now. Fuck. But I'm heading out in the next 10, 15 minutes here. I need to get some food. Time is 3 p.m. We know cycle going up. I think Tesla's gonna continue to go lower into tomorrow, so I am taking one tiny swing on SPY along with it. At today's high. Looks good to me. Looks good to me. Looks like market is setting up. Thank you guys that still watch and hit the like, by the way. A lot of people watch the live stream and not hit the, like at all. But yeah. Those that are always, supporting, that are always caring. I'll go ranging on a mountain. Time is 3:05. MACD is turning bearish. Bears are pushing lower already before even market closes. I was gonna swing this shit, but honestly, if they go LOD, I'm fucking leaving. Shit, I'm already up $180. The thing is ripping down. Oh my god, Tesla rejection huge. I love it. Tesla rejection coming through huge. 240. Bounce into 3 p.m. rejected. I can't believe I love the cycles today. On Tesla especially. I fucking love the cycles today.